In Vendor Master Creations, I am going to explain each and every field detailedly. So the first one, general data. Under the general data, the first section is address. In address, the first field is title. In title, we have four options like company, Mr., Miss and Mrs. If we are implementing SAP for limited or private limited companies, then the title we need to use company. Or if you are implementing SAP for small scale industries like a single owner, we used to call as proprietorship, then we can use the title as Mr. or Miss or Mrs. The next field, name of the vendor. You can enter the client vendor name, and if you have any additional name, you can enter in name 2, name 3 and name 4 field. So the next one, solution. Here you can define individual solutions in letters. These can be used in place of a generated solutions as required. You have to adapt the relevant print programs accordingly. Example, a print program uses dear sir or madam as the solution. Alternatively, you can define the solution with a particular business partner as being dear friends and adapt the print program to copy the solution field if it is not blank. So usage, the solution controls how print program fill the line for a solution in a letter. Dependencies, you can define solution in customizing for SAP business partner for financial services under define solutions. In addition to the default settings, you can also use the processing mode for the business partner to store your own solutions. You can then use this instead of an automatically generated solutions to suit your requirements. You will also need to adjust your print program accordingly. Example, you want to use solution 1 dear Mrs. for female business partners belong to the category natural person. The next field, search term 1 and 2. Use denotes the term that you define for a business partner and via which you can restrict the search for a business partner in the business partner search or in the locator. So the next field, VIP and undesirable customer. So the business partner is VIP, then undesirable customer indicates that a business relationship with the customer is not desired. Example, a warrant of arrest has been issued against this customer. So then the reasons for undesirability, you can define reasons for the undesirability of the business partner in customizing for the SAP business partner for financial services under the settings for financial services, general settings, basic settings, and then define undesirable customer informations. So then command on undesirability, you can enter the commands for undesirability in the sections. So then street address, you can enter the client original address informations, street name, house number, postal code, city, country and region. Region is nothing but state. So the next one, PO box. PO box number as part of an address. Only enter the PO box number in this field. The text PO box is provided in the recipient language by the system when you print the address. When you print an address, the street address and the PO box address are distinguished. The print program determines which of them has priority if both are maintained in an address record. Besides the PO box number, the PO box address uses the following field: PO box postal code if specified, otherwise the normal postal code; PO box region if specified, otherwise the normal region; PO box country if specified, otherwise normal country. In the address is a PO box, do not fill the PO box field. Select the PO box without number indicator instead. You can also enter a company postal code for organizational address instead of a PO box. A separate field is predefined for this entry. Note: for general informations and examples about address formatting, see the documentations on the address structure key. So the next field is postal code. Postal code that is required for a unique assignment of the PO box. Usage: this field is used for countries where a different postal code applies to mail that is sent to the PO box rather than to the street address of a particular business partner. Postal codes for group major customers also have to be entered in the field for the PO box postal code. Since individual customers with a shared postal code for group major customers are differentiated by means of the PO box postal code for major customers, however, are assigned to one customer, only one have to be entered in the field company postal code. So the next field is company postal code. Postal code that is assigned directly to one company. Usage: this field is used for countries where major companies are assigned their own postal code by the National Post Office. This postal code has to be entered in the field company postal code. Postal codes for group major customers, however, have to be entered in the field PO box postal code. Since individual customers with a shared postal code for group major customers are differentiated by means of their PO box. So the next field, language. So based on the SAP implementation project, based on the country official language, we can select the language. For example, if you are implementing SAP for Indian company or US based company, so then we can go with language English. If we are implementing SAP for Japanese companies or Korean companies or Chinese company, then we need to implement SAP for their own languages. We used to call as mother language, because they still used their mother language as the official language. So based on the requirement, we can choose the language. The next field, telephone. Telephone number consisting a dialing code and number, but without the country code. If the telephone number consists of a company number and an extension, the extension must be entered in the field extension. Usage: telephone number as it must be dialed from within the country. This is the example for the number 012345/567-0. Enter the following telephone number and extension 0. Second case, extension 544. Third case, extension 588. So the next field, mobile phone. Mobile telephone number consisting of dialing code and number but without country code. Usage: mobile telephone number as it is to be dialed from the same country. Procedure: enter the mobile telephone number. The following rules apply for the formatting of mobile phone number. The length of input in field mobile telephone can be maximum of 24 characters. Leading blank characters are not permitted in field mobile phone. The following are recognized as valid characters from digit 0 to 9 and letters A to Z, and the special characters and blanks but not as leading characters. If A plus is entered as the first character, the system checks whether the specified number starts with a country code. If it does, a warning is output because the country code is determined automatically by the system and is not to be stored in the field mobile telephone number. So the next one, fax number. Fax number consisting of dialing code and number but without country dialing code. If the fax number consists of a company number and an extension, the extension must be entered in the field extension. Usage, fax number as it is to be dialed from within the same country. So procedure, enter the fax number, the following rules applying for the format of telephone and fax number. The length of the entered in the field telephone and extension. Fax and extensions cannot be more than 24 character in total. Leading space are not allowed in the field telephone or fax or in the field extensions. So the valid characters are numbers from 0 to 9, letters from A to Z. So then email, internet mail address also called email address. Example, user.name@company.com. The internal mail address is used to send mail via the internet worldwide. So the protocol used in SMTP, Simple Mail Transfer Protocol. The internet mail address format is specified in various RFCs. RFC is nothing but internet request for command, including RFCs 821 and 822. So this is not an IP address. You can enter some data as a command in the command field. Then address valid from and address valid to. Valid from date of a business partner address. Validity end of a business partner address. So the next one, external address number. Address number is an external system's address number from an external system or a legacy system. Usage, if the current address has a different number in an external system, you can save this number here for information purposes. In direct input, you are able to maintain an address for your business partner by starting the external address number. If your business partner data is maintained in your legacy system, you can thus transmit changes to your BP address to the SAP system without having to know the SAP address number in the legacy system. So then the address overview. So you can see the entire informations about the address sections like a standard address, address for correspondence, home address, business address and holiday home address. So the next sections is identification in the vendor master general data tab. Under the identifications, the first field legal form denotes certain legal norms that are of significance for the organization of a company. For business partners in the category organization, you can state the legal form of the company. This is for information purpose only. You can define the possible legal forms in customizing. Example, stock corporations AG in Germany, limited liability company GmbH in Germany. So the next field, legal entity. Definition, the legal entities are the organizations legal responsible for companies that are not legally independent. So the usage, for business partners in the organization category, you can specify the legal entity of the company. This is used for information purpose only. You can define the possible legal entities in customizing. So for example, German Federal Bank municipal associates. So the next field, date founded, which is nothing but date organizations founded. So the next field, liquidations date, indicates the end of bankruptcy proceedings. This date implies that the firm no longer exists. The next one, international location number, part 1. Here you enter the first 7 digits of the international location number. So the international location number is assigned when a company is founded. It consists of 13 digits, the last digit being the check digit. There are 2 categories of location numbers. Participants who only need an ILN is nothing but international location number, to clearly and unmistakably identify themselves for communication with the business partner are given a category 1 ILN. This cannot be used to identify articles by means of EAN. Participants who wish to assign the location number for their own enterprise areas are given a category 2 ILN. For a category 2 ILN, digits 1 to 7 are described as basics number. This is the use of basis of the creation of article number EAN. The next one is check digit. The check digit is derived from a special check digit procedure from digits of the previous international location number. In this way, you can check whether the international location number entered is actually valid. So the next field, factory calendar, indicates the factory calendar used by the company or organization. Dependencies, all the customary holidays and rules in relation to holidays are defined in the standard systems. You can change the default settings or add other factory calendar in customizing under SAP NetWeaver general settings and maintain calendar. So then external business partner number, or we used to call as BP number. Business partner number from an external system or a legacy system. Usage, if the current business partner is known under a different number is an external system, you can store this number here for information purposes. Direct input gives you the option of maintaining a business partner by specifying the external business partner number. If you maintain business partner data in your legacy system, you can transmit changes made to business partners to the SAP system without having to know the SAP business partner number in the legacy system. So the next field, military use. So this ID for mainly military use, both indicators civil use and military use are relevant to the respective legally required license checks. Example, according to EU or ES law, according to EU dual use regulations or US law export administration regulations EAR from November 1, 1996, the use of the final product will be of decisive importance in checking and determining the appropriate license usage. In customizing for export licenses, you can determine that certain license types will be used for customers with mainly military use. When defining export licenses, the system can assign license types valid for military use only to those customers that have been marked as mainly for military use. So the next field, nuclear sector. So this indicator specifies that the business partner is active in nuclear sector. Usage, in licenses you can determine that they are also valid for business partners in nuclear sector. When the system determines licenses, it first checks if the business partner is selected with the nuclear sector indicator. If that is the case, the system can assign only licenses that are also selected for nuclear sector. So So then the third view, control. The first field in control view, BP type, business partner type. You can use the business partners type to group business partners according to your own criteria in customizing. In customizing, you can show or hide fields for data entry depending on the requirements of the relevant business partner type. Procedure, select a business partner type. You can obtain help by pressing the F4 key. So the next field, authorization group. You can use authorization groups to stipulate which business partners user is allowed to process. Note, use the following authorization object: business partners, authorization groups, B under BUPA under GRP. The system only checks this authorization if you made an entry in the authorization group field for the business partner. Otherwise, any user may process the business partner. The next field, print format. So attributes that determines the format for printing, correspondence with a business partner. Usage, the values you choose using the input help are used in subsequent processes. You can choose how the data should be printed or sent. So the next field, trading partner number. In SAP, separate entities under the same parent company are defined with different company codes. In order to perform intercompany code transactions in SAP, you must also define a trading partner on every transaction. A trading partner represents the company code that is an transaction with your company code. So the next field, grouping character, specifies the business partners. Grouping characteristic. Usage, you can use the grouping characteristics to subdivide and identify business partner within a client. Dependencies, you can edit a business partner's grouping characteristics in customizing for SAP business partner for financial service, under SAP for financial service, then general setting, then basic setting, then define grouping characteristic. You can assign authorizations to the grouping characteristics that have been defined authorization object. B underscore BUPA underscore PGM. Example, all the business partners for a group company are stored in one client. You want to assign each business partner to a subsidiary. If a business partner has business relationships with several subsidiaries, it exists several times in the systems. You can create a grouping characteristics for a business partner that represents its assignment to a single subsidiary. You can use an authorization object to restrict who has access to this business partner. So the next field, data origin, determines how the business partner data comes into the system. Usage, the origin type is for information purpose only. You can define the origin type with their name in customizing. Example, legacy data transfer and purchased address list. So then the next line, so the next field, notes. So the first note in the text line, you can enter the notes based on your requirement. So if the text contains formatting informations for character formatting such as bold type or underlining, it can no longer be changed in the overview, as this would delete the formatting. Therefore, you can change the text only in the editor. So the next view in the vendor master general data, payment transactions. Under the payment transactions, The first field, bank details ID. Key, identifying a business partner's bank details. Enter a bank details ID for each separate set of bank details for a business partner. Then bank country and region. Specify the country region where the bank is based. Usage, the country region key determines according to which rules the remaining bank data, for example bank number, bank account number, is checked. So the next field is bank key. The bank key is specified in this field, under which the bank data is stored in the appropriate country. The country specific meaning of this bank key is specified when defining country key. Usage, normally banks have a bank number which then also appears in the control data of the bank. In certain countries, the bank account number assumes this function. In such as a case, there would be no bank numbers. The bank details are then under the account number. For data medium exchange, it can be useful to be able to create banks for foreign business partner without a bank number, even if the country in question has bank numbers. In such case, the bank key can be assigned internally. If the bank data is under another key, such as the SWIFT Swift code, for example, the number can also be assigned externally. So the next one, bank account number. This field contains the number under which account is managed at the bank. So the next one, bank control key. Use Brazil, France, Spain, Portugal and Italy. So this field contains a check key for the combination bank number and bank account number. So usage for USA. In USA, this field is used to differentiate between a savings and a current account. If no values is entered, the default value 01 is used. So 01 current account, 02 savings account, 03 loan account, 04 general ledger. So usage in Japan. In Japan, this field specifies the type of account. This information is copied from the payment medium print program into payment medium. The following is an example of the account types used. 01 similar to a savings account, 02 similar to a current account, 03 similar to an investment account, 09 other types of bank accounts. Usage in South Africa. In South Africa, this field specifies the types of account. The information entered here is forwarded to the bank that carries out the payment order. The following account types are permitted in ABC format. 01 current or check account, 02 savings account, 03 transmission account, 04 bond account, 06 subscription share account. Usage in Argentina. In Argentina, this field specifies the type of account. CC current account, CA savings account, CE special savings account, CS salary account. Usage in Venezuela. In Venezuela, this field specifies the type of account. CC checking account, CA savings account, CE special saving account, CS salary account. Usage in Mexico. In Mexico, this field contains a 2-digit key for classifying the bank account. This key has different definitions depending on the bank. For example, a savings or current account. Note, for countries that are not listed here, this field can be used for account specific information. So the next field, IBAN, International Bank Account Number, a uniform standardized ID number for representing bank details, that is an accounting with the ECBS, European Committee for Banking Standards. In IBAN has a maximum of 34 alphanumeric characteristics and is a combination of the following elements. country key for the bank, ISO code, 2-digit check number, country specific account number. In Germany, this consists of the bank number and account number. In France, the bank number and account number. Check entry. Usage. The IBAN not only makes international payment easier, in some countries is the advantages for domestic payments as well. Depending on the country, it can mean advantages for value and fees. Dependencies. The IBAN can be maintained in parallel with the bank details, but it does not replace them. It is stored under master data of the business partner and can then be used when creating the payment medium. Since it is only the bank that has the account that may guarantee the IBAN corresponding to an account number, the SAP system only generates a proposal. You can confirm or change this proposal. If no proposal is generated, enter IBAN manually. So the next field, bank account alias, specifies the alias of a business partner bank account. An alias is an alternative representation of a business partner bank account. Usage. The bank account alias is the primary or the secondary account. Identifications, that is registered in a certain payment system. It is a unique representation of a bank account or an e-wallet that does not identify the financial institutions where the account is held. So the next one, reference details. Additional details for the bank details of the business partner. In some countries, the data for the bank details of the business partner have to be supplemented by other details in order to be able to use certain payment process. These supplementary details are defined here. So like a bank number, bank account number, name of the account holder. In additional data is required for the bank details for payment transactions in your country. So the next one, bank details ID in external system. If the current bank details are known under a different ID in an external system, you can store this ID here. The ID in the external system simply provides information on the number under which the bank details were created in your legacy or operation system. Direct input gives you the option of maintaining the bank details of your business partner by specifying the external ID. If you maintain business partner data in your legacy system, you can copy changes made to bank details to the SAP system, even if the SAP ID is not recognized by the legacy system. So the next field, collection authorization, states that the bank has collection authorizations from the business partner for the account. Set this indicator if the bank has collection authorization. So note for account receivable, financial accounting account receivable, if this indicator is not set, there is no bank collection. Note for contract accounts receivable and payable, this indicator is not relevant. So the next field, account holder name. Here you can enter another name that the payment program can use if the name of the account holder is not the same as the name of the business partner. So here we need to mention the name of the bank account. So then valid start and valid to. Validity start of business partner bank details, valid to date of business partner bank details. Then change on signifies the date on which a change from one set of bank details to another takes place. Usage, processes that access the ID of the source bank details are automatically forwarded to the ID of the target bank details. The validity of the source bank details is restricted to 1 day before the change date. Example, you have created bank details for a business partner for the XYZ bank from the date January 1, 2006. The business partner changes to be ABC Bank. You create additional bank details for the ABC Bank and create the change date from January 1, 2006. Processes that access the ID of the bank details for the XYZ bank are now automatically forwarded to the ID of the bank details for the ABC Bank. So the next field, target bank details. ID of target details for change of bank details in business partner. So the next one, name of financial institution. The name of the bank is comprised of the bank name and the name of the branch office. In vendor master general data, the next screen status. The first field in status, achieving flag. What is meant by achieving flag? Establishes if the business partner is meant to be achieved. If the indicator is set, the relevant business partner can be achieved from the view of the business partner administration. If the check of the data to be achieved shows, for example, that there are still active business transactions, the achieving of the business partner data is prevented even if the indicator is set. If the indicator is not set, the business partner will not be taken into consideration during achieving. The next field in the status, central block. So generally we used to call as central block for business partner. If the business partner is blocked centrally, certain activities cannot be executed. So the next field, not released. Define whether a business partner has been released for business processes. Usage, if you have not set this indicator, you cannot use the business partner in question. If you have set the indicator, you should not use the business partner for application process yet. Its data must be checked first. So then the next field, contact. The contact field informs you whether the customer can be contacted or not. So the next one, status field, denotes the status profile to which user status are defined. So then active status, key which informs you of the current status of an object. Usage, a status can either be activated internally or externally for information and control purposes. So the next field, end date, termination date for business relations with the bank. Generally we used to call as end date. Then contact date, date of last customer contact, indicates the date of the last contact with the business partner. You can use the date of the last customer contact to determine when hairless asset such as deposits to accounts and interest receivable may be seized on the basis of legal regulations. When such assets are seized or dormant and unclaimed accounts are closed after a fixed period of the time and the credit balance is transferred to a clearing account. In some countries, the bank then transfer the credit to the state in accordance with the legal regulations. If the customer has been in contact or if contact has been made with the customer, you can update the date field manually. If the customer has initiated a transaction on the account, it is possible for the business intelligence to automatically update the date field with the date of the last customer initiated transactions. So this is called contact date. So the next one is various list. What is meant by various list? To view the list of the suppliers that have vendor master records in the tenant, select vendor master from the supplier section of the admin menu. This list makes it easier to invite suppliers and ensure their correct association to the vendor master record. So the next section, legal data. First field in legal data, target group. Assigns a target group to the business partner. The target group is an attribute that you can use to categorize the business partner according to your own criteria. For example, you assign business partners to groups that can be analyzed for marketing purposes. So then the next field, country/region, indicates the country or region in which the business partner belonging to the category organization has its registered office. So the next field is region, indicates the region in which the registered office of the business partner belonging to the category organization is located. For example, permitted regions can include federal, states, provinces or counties, for example. So then a registered office indicates the city in which the business partner belonging to the category organization is entered in the commercial register. So the registered office determines the place of jurisdiction of the areas served by the court where legal action may be taken against the business partner. So the next field, balance sheet currency. This currency used to calculate the balance sheet informations. So the next field, balance sheet display, provides informations about the type of balance sheet display. So the next field, capital increase, indicates the amount by which the equity capital of the organization was increased. So the next field is year of lost capital increase, indicates the year in which the equity capital of the organization was lastly increased. So the last rate of increase we need to update in the year. So the next area in vendor master general data, vendor general data. Under the vendor general data, the first field is vendor number, specifies an alphanumeric key that uniquely identifies the vendor in the SAP system. So the next field, account group. So generally we used to call this a vendor account group. The account group is a classifying feature with vendor master records. The account group determines the number of interval for the account number of the vendor, whether the number is assigned by the user or by the system, which specifications are necessary and are possible in the master record. So based on the client requirement, we need to set up the vendor account group. It's a kind of template. We can create multiple vendor account group template based on our client requirement. For example, domestic vendor account group, foreign vendor group, and one-time vendor account group, like that. Each and every vendor group having their own set of field based on the client requirement. So the next field, customer, gives an alphanumeric key which clearly identifies the customer or vendor in the SAP system. So the next field, group key. If the customer or the vendor belongs to a group, you can enter a group key here. The group key is freely assignable. If you create a math code using this group key, group evaluation are possible. So the next field, block function, key that determines which procurement functions, for example, request for quotation, purchase order, or goods receipt, should be blocked for quality reasons. The function for the block key can be set in the customizing applications. So usage, you can enter a block key in the supplier master record. In this case, the supplier block applies to all materials and plants. So second one is quality info record for quality management and procurement. In this case, the supplier blocks applies to a single material and plant. A block for quality reasons applies only to those materials for which QM in procurement is active. You can deactivate a block key that is active for a particular material and plant by entering a control key for QM in procurement in the material master record, in which the indicator block inactive is set. So the next field, BSR relevant. Indicator denoting that data can be stored for a vendor master record at sub range level. So the next field, plant relevant. Indicator denote that the data can be kept in the supplier master record at plant level. So then the next field, plant. Key that uniquely identifies a plant. It may be our own plant, our own company code plant, or other company code plant. So then repetition. Annual repetition for the data limit. The system uses only the day and the month of the date limit for external document identification. When you select the annual repetition field, the system determines the year based on the current year. This enables you to define the annual repetition of the numbering system for external identification of documents with a one-off entry. So the next field, date limit for external document identification. The system checks whether EDI partners have already used the same external identification for a transmitted document. The time period that the system checks is from the beginning of the EDI communication when the date field is blank. You can use the same date limit to restrict the period within which the system checks. The system checks the transmissions for which the creation date is between today and the date limit. So the procedure, define a date limit when your EDI partner restarts the numbering of documents from a certain date. Otherwise, the system determines duplicates. So the next field, train station. The name of the train station that the customer uses for receiving routine deliveries. The train station may differ from the station that the customer uses for express deliveries. So the next one, origin acceptance. Specifies whether the acceptance of the ordered goods is to take place at the point of origin. So that is on the supplier premises. So the usage, if the indicator has been set, you must post the goods receipt to valuated GR blocked stock using the movement type 107 as soon as the goods have been accepted at the supplier facility. In a second step, you can post the goods from the validated GR block stock to unrestricted use stock using movement type 109 as soon as the goods have been delivered by the supplier. So the dependencies, you cannot change the indicator in the purchasing document item. Once you have posted a follow-on document for the purchasing document item, we used to call as invoice receipt. The follow-on document is nothing but goods receipt and invoice receipt. So the next field, DMI indicator. So report key for data medium exchange. DMA is nothing but data medium exchange indicator. For foreign payments using a data medium exchange in Germany, this field controls whether the contents of the single data record are also included in the report to the Bundesbank when being made by the paying financial institutions. If no entry is made, the value will be determined from the DMI space for the house bank. Check the settings in customizing for house bank by the selecting the house bank there and check the reporting dates. So the next field, instruction key. Instruction key for data medium exchange. For automatic payment transactions, this field along with the house bank country and the payment method determined by the payment program controls which statements are given to the participating banks when carrying out the payment order. This field is used in countries such as Germany, Australia, the Netherlands, Spain, Norway, Finland, Japan, as well as for the international SWIFT format MT100. Selecting the instruction key. If data medium exchange is used, as well as in special cases when using document based payment orders, the instruction key must be maintained in the customer/vendor master record or in the system configuration for data medium exchange data for the house bank. The following holds regarding the instruction key. Number 1, if the instruction key is maintained in the master record, then this instruction key is used. If no instruction key exists in the vendor master record, then the default instruction key defined for the house bank is used. Consequently, it is not necessary to provide all business partners with an instruction key. Only the exceptions need to be maintained. So note number 1, if it is necessary to specify a instruction key for a business partner's house bank that differs from the instruction key defined in the master record, this can be done when editing the payment proposal. Note number 2, the instruction key must be entered in the document for one-time accounts. Note number 3, the 4 instruction key fields belonging to the instruction key can be overridden by entering instruction key in the document. So the additional data screen in the customer or vendor line. So the next field, payee in document. If this indicator is set, you can enter an address or bank details for automatic payment transactions in the document which differ from those in the master record. This applies only to postings to this customer or vendor. So then alternative payee. The account number of the vendor which whom automatic payment transactions are carried out. So the usage, the field is only needed if payments are not to be made directly to the vendor to whom the payable is owed. The same applies to the bank collections of receivables. The important note, the specifications in this field applies to all company codes. There is a further field in which every company code can enter an alternative payee separately. Both fields are filled the company code specifications as priority. So the next field, BBC ISR number. So POR stands for payment order with reference number, a special payment procedure of the Swiss Postal Service. The field is therefore only relevant in Switzerland. Every vendor who participates in this procedure receives a subscribe number providing the POR procedure is to be used in automatic payment transactions. This subscriber number is to be entered in the master record. When entering invoices for vendor accounts, the subscriber number is copied into the document. The payment program pays all invoices with POR number individually. For data medium exchange, the transaction TA826 for data medium exchange and TA08 for SAD are created. When pointing out a form, only a note is printed so that the appropriate blue payment order can be attached to the authorized payment order. So the next field, payment reason, identifies the reason for the payments. The payment reason classifies the type of the payment transactions such as salary payment, purchase of goods, purchase of services, and so on that you transfer from one bank to other. The payment reasons identify the payment according to the regulatory reporting requirements of your bank or the local authorities. For example, the payment reason 0001, salary payments, 0002, purchase of goods. So the next field, social insurance. Taxes in Argentina. An entry in this field shows whether the vendor has social insurance. This information is required for tax reporting purposes. This field is only applicable for the country of Argentina. So the next one, social insurance code. Taxes in Argentina. The activity indicator used for tax reporting in connection with social insurance payments. And this field also only for the country Argentina. So the next field, Standard Carrier Access Code. The Standard Carrier Access Code SCAC is an indicator used by forwarding agents in North America. Unique code for identifying a forwarding agent. So, and this code only used for North America. The next field, Core Freight Group. The forwarding agent freight group is used to group forwarding agents to determine freight code set. Usage, the freight code set determined with the forwarding agent freight group is used to define freight codes and classes. These are used for calculating freight cost and for communication with service agents. Procedure, maintain the relevant groups for the forwarding agent. So the next field, status group agent, refers to a status group for transportation service agent and is used to determine the data that the system updates in the logistics information system, or we used to call this transportation information system. Usage, you can assign statistics groups to the following categories: transportation service agent and shipment type. If you create statistics in the transportation information system, the system uses the combination of the specified statistics groups for determining the updating group. This in turn determines the fields for which the statistics are created. So the next field, service agent procedure. The service agent procedure group is used for determining the pricing procedure for shipment cost calculation. So the next field is external manufacturer. Specifies the name or number used by the manufacturer, that is not the one assigned by the RT system. Then next field, POD relevant. Supplier indicator relevant for proof of delivery. This indicator controls the process of proof of delivery during the incoming goods process for inbound deliveries. Processing is activating by switching on this indicator in the supplier master and by switching on the corresponding indicator in the delivery item category. There are the following different characteristics. So if you don't enter any data, keep it as blank, not relevant for POD. If enter A, generally relevant for POD. If enter B, only relevant for POD. If differences, so difference between notified quantity and actual quantity received. So POD is nothing but proof of delivery. The next field, carrier confirmation. This flag controls whether a confirmation message from the carrier portal is expected before the delivery can be executed. Usage: this flag is used for the return deliveries in the ERP system during the complaints and return process. If you want the selected carrier to be informed about the delivery, this flag determines whether the additional shipment information from the carrier is expected. So this located in the carrier's supplier master data. Dependencies: to use this flag, you need to know the following: carrier notification flag, delivery confirmation status, and shipment status. The next field, central deletion block. This indicator specifies that the general data in the master record may not be deleted. Central deletion flag indicates that all data in this master record is to be deleted. To delete this data, you have to run the archiving program for accounts receivable or payable. This program will archive all master records marked for deletion, provided that there is no dependent data in them. Important note: delete flags can also be used in the program for deleting master data. You should, however, run this program only to delete test data prior to production startup. The next one is alternative payee. Indicator that vendor account number which can be specified as alternative payee during document entry or defined. The usage: the field informs you as to whether alternative payee were specified. Procedure: when maintained or displaying master data, you can branch to the maintenance or display of the permitted payee using the function key next to the indicator. So the dependencies: the indicator is not ready for input but is set by the system depending on the existence of alternative payees.
In vendor master detailed explanations, the next topic number 8, under the vendor general data, tax data. Under the tax data, step number 1, tax type. Tax type is nothing but classification of companies according to tax aspects. Then what is meant by tax base? Generally we used to call as percentage tax base. The definition is tax calculation for Brazil, especially in the invoice verification. The ICMS tax value is calculated with a reduced tax base for freight charges only. The law stipulates a reduced tax base of 80% of the transport invoice. The next one is tax split. The tax split also coming under calculation for only the country Brazil. The IPI tax value is split up for this vendor. 50% of the calculated IPI tax value is posted as deductible input tax. 50% is deducted from the inventory posting or posting to expense account. The next one is sales equalization tax. Indicates that business partner is subject to equalization tax. Indicator via which a warning is issued when posting to the vendor account. The usage: the indicator is used for equalization tax in Spain for deliveries to the retail trade. So this equalization tax used for especially deliveries to the retail trade in country of Spain. The next one is label for VAT. Determines whether the company is liable to value added tax. VAT is nothing but value added tax. The next one is fiscal address. This address is used in Italy for business transactions with the tax office in Italy. The next field is information number. Credit information number. External number as a reference for a credit agency. For information only, this number used. The next field is last external review. Last date on which the credit data of the customer or vendor was checked externally. The next one is tax number. Tax number at responsible tax authority. The tax number of the vendor at the responsible tax authority. The next one is tax number type. This field is used in Argentina. The format and the check of tax number 1 depend on the 2-digit tax number type. The tax number type is an identification type for tax in Argentina and is used for the TG CGI tax report. For example, 80 for CUIT. The next field is actual QM system. So this is supplier QM system. Usage: if your QM system is maintained by the supplier, you can store description of the QM system here. The dependencies: if your material is activated for QM in procurement, the system initiates the following check whenever the purchasing function are carried out. For example, when your request for a quotation is made, or if your purchase order is created, whether the supplier's verified QM system according to supplier master record or quality info record for a combination of supplier and material meets the requirement for QM system as specified in the material master. When carrying out the check, the system relies on the defined assignments for target QM system and actual QM system in the customizing application. If the check is unsuccessful, a warning message is issued when a request for quotation is initiated, and an error message is issued for all other procurement activities. So the next field is QM system 2. Validity date of certifications, date up to which the certification of the QM system is valid. Reference account group, the next one is reference account group for one-time account, which is called one-time vendor. Account group via which the one-time account screen fields are controlled when posting to the one-time account. Usage: by using the account group specification here, you can define one-time account screen fields as required fields or suppress them. When changing or displaying documents, the field control takes place in a similar way, in that the ability to change a field is also determined by the document change rules. If you do not specify a reference account group, then all one-time account group fields are ready for input when entering a document. So this is about reference account group. The next one is tax office. This is a category indicator for tax codes. This indicator is used to allocate customers and vendors to different tax categories. The system evaluates this information during document entry to assist users in selecting the tax code. The next field, TC, category indicator for tax codes. Category indicator for tax codes, which is nothing but this indicator is used to allocate customers and vendors to different tax categories. The system evaluates this information during document entry to assist users in selecting the tax code. The next one, collection authority form, entitled to deduct withholding tax form. Definition: date from which the company code is obligated to withhold tax for the given withholding tax type. This date must be entered in customizing under the withholding tax information for the company code. The customer is obligated to withholding tax for the withholding tax type. This data must be defined in the customer master record. The next one is the same field, entitled to deduct withholding tax until. So date to which the company code is obligated to withholding tax type for the withholding tax type. This date must be entered in customizing under the withholding tax information for the company code. The customer is obligated to withholding tax for the withholding tax type. So this is about vendor tax informations. We need to fill up the data based on our client requirement. The next topic number 9, country specific enhancement 2. Under the country specific enhancement 2, the first field is tax number type. Type of tax number assigned to the business partner. The usage: you can specify the tax number types as follows: USR EOU number, state register or individual taxpayers assigned by regulatory authorities, SR NP numbers. The tax number type is mandatory as it is required for statutory reporting purposes. The dependency: tax number type is an attribute which is required for business partners. The values are required to support data requirements for tax invoices and corrective tax invoices forms. Example: you are creating business partner master data for a new customer. For a legal person, valid tax number types are 1 or 3. For a natural person, valid tax number type are 2 or 4. Next field is valid from date. Date indicating as of when an entry is valid. The next one is tax number 1. So what is meant by tax number 1? Specifies the tax number, the usage, entry, the appropriate tax number. Here you can see the left side country/region, the list of countries. So right side you can see the appropriate tax number. For example, the China, country China, VAT registration number. So for Colombia, NIT number. For example, Poland, NIP number. Portugal, NIF number. Romania, tax number. South Korea, natural persons, personal identification. So this is how, based on the country, you need to assign the tax number category. For the country of Spain, NIF number. For Taiwan, GUI registration number. For Turkey, name of business partners, tax office. For Venezuela, RIF number. For United States, social security number. UK, United Kingdom, company registration number. Like this, you need to use the different type of numbers based on the list out countries. So the next, for the dependencies, if the Philippines enter the taxpayer identification number with a V or N at the end as follows. If the business partner is liable to VAT, if the business partner is not liable to VAT. So you can enter the number and end with V. You can enter the number if not liable, end with the N. So the next field is liable for VAT. Already we discussed about liable for VAT, so no need to discuss once again. So which is nothing but determines whether the company is liable to value added tax or not. Okay, so the next one is topic number 10 under the vendor master general data, vendor text. So under the vendor text, we can start with proposed language. So you can select which language is required to manage the vendor text information in your client company. So based on client requirement and vendor requirement, you can set up the proposed languages. So we can select commonly English. The next one is language key. The language key indicates the language in which text are displayed, the language in which you enter text, the language in which the system prints the text. There are three options. So the next field is text ID. The text ID defines the various type of text related to a text object. For example, the object TXT standard text can have the following text IDs: ST for user specific standard text, individual text; SYST for cross application systems text. Various IDs for specific application departments. You must have the appropriate access authorizations in order to access these text. So up to this topic, text ID, under the vendor master, the vendor general data related topics are covered. I explain each and every topics in that detailed field explanations. I explained very detailedly each and every field in a specific topic. Especially we covered 10 topics under the vendor master general data. The next one we can go for in vendor master company code tab. Under the company code tab, there are so many topics are there. When we go to each and every topics, we will discuss each and every field, purpose, and requirement and usage with examples. Okay, thank you. The next topic number 9, country specific enhancement 2. Under the country specific enhancement 2, the first field is tax number type. Type of tax number assigned to the business partner. The usage, you can specify the tax number types as follows: USR EOU number, state register or individual taxpayers assigned by regulatory authorities, SR NP numbers. The tax number type is mandatory as it is required for statutory reporting purposes. The dependency, tax number type is an attribute which is required for business partners. The values are required to support data requirements for tax invoices and corrective tax invoices forms. Example, you are creating business partner master data for a new customer. For a legal person, valid tax number types are 1 or 3. For a natural person, valid tax number type are 2 or 4. The next field is valid from date. Date indicating as of when an entry is valid. The next one is tax number 1. So what is meant by tax number 1? Specifies the tax number, the usage entry, the appropriate tax number. Here you can see the left side country/region, the list of countries. So right side you can see the appropriate tax number. For example, the China, country China, VAT registration number. So for Colombia, NIT number. For example, Poland, NIP number. Portugal, NIF NIF number, Romania tax number, South Korea natural persons personal identification. So this is how, based on the country, you need to assign the tax number category. For the country of Spain, NIF number. For Taiwan, GUI registration number. For Turkey, name of business partners, tax office. For Venezuela, RIF number. For United States, social security number. UK, United Kingdom, company registration number. Like this, you need to use the different type of numbers based on the list out countries. So the next, for the dependencies, if the Philippines, enter the taxpayer identification number with a V or N at the end as follows. If the business partner is liable to VAT, if the business partner is not liable to VAT. So you can enter the number and end with V. You can enter the number, if not liable, end with the N. So the next field is liable for VAT. Already we discussed about liable for VAT, so no need to discuss once again. So which is nothing but determines whether the company is liable to value added tax or not. Okay, so the next one is topic number 10 under the vendor master general data, vendor text. So under the vendor text, we can start with proposed language. So you can select which language is required to manage the vendor text informations in your client company. So based on client requirement and vendor requirement, you can set up the proposed languages. So we can select commonly English. The next one is language key. The language key indicates the language in which text are displayed, the language in which you enter text, the language in which the system prints the text. There are three options. So the next field is text ID. The text ID defines the various type of text related to a text object. For example, the object TXT standard text can have the following text IDs: ST for user specific standard text, individual text, SYST for cross application systems text, various IDs for specific application departments. You must have the appropriate access authorizations in order to access these text. So up to this topic, text ID. Under the vendor master, the vendor general data related topics are covered. I explain each and every topics in that detailed field explanations. I explained very detailedly each and every field in a specific topic. Especially we covered 10 topics under the vendor master general data. The next one we can go for in vendor master company code tab. Under the company code tab, there are so many topics are there. When we go to each and every topics, we will discuss each and every field, purpose, and requirement and usage with examples. Okay, thank you. In financial accounting and controlling, we discuss about vendor master company code tab. Under the company code data, the first one is account management. In vendor account management, the step number 1, reconciliation account. So what is meant by reconciliation account? A reconciliation account is a general ledger account that automatically records all transactions from vendor subledgers. Whenever you post a vendor invoice in MIRO, or post a vendor payment in F-53 or F110 by using automatic payment program, or post credit memos, SAP automatically updates the linked reconciliation GL accounts in real time. Where is it maintained? You assign the reconciliation account in the vendor master. So the menu path, go to vendor master, company code data tab. Under the company code data tab, account management tab. Under the account management, you can see the reconciliation field account. So example, if your vendor is, let's say, V1001, you may assign 160000 vendor reconciliation account. Now all postings to vendor V1001 will be updated in 160000. Purpose of reconciliation account: connects the subledger to the general ledger, ensures automatic financial accounting updates, prevents direct postings to control accounts, helps in accurate balance sheet reporting. These are all the purpose of reconciliation account. Why you cannot post directly to reconciliation accounts? Manual posting to avoid corrupting vendor balance. Only vendor transaction can hit the GL. The next field in the vendor account management, head office. What is head office in SAP Vendor Master? In SAP, the head office function is used when a company has multiple branch vendors, one central head office vendor. All accounting for the branches will be posted to and cleared through the head office vendor. The purpose of head office function, it helps companies manage centralized payments, consolidated statements, group level vendor balances. Example, vendor V1001 Chennai branch, vendor V1002 Mumbai branch, vendor 1000 is the head office. So both branch vendor can be assigned to head office. Now all invoices of 1001 1002 post to 100 account. Payment is made only to 1000 account. Vendor line item are shown under head office vendor. Where to maintain the head office? In Vendor Master, go to Company Code tab. Under the Company Code Data Correspondence tab, you will find the field head office. Enter the vendor number of the head office. So the important notes: branch vendors cannot be reconciliation accounts. Branch vendors only reference the head office vendor. Head office vendor must have its own reconciliation account because all postings will hit that vendor. Branch vendor postings appear under head office. In FP-L1N, you will see items grouped. So the next field, short key. What is meant by short key? So short key controls what informations will automatically appear in the assignment field of vendor accounting. It helps in easy line item sorting, faster clearing of open items, simplified payment reconciliation. Where is short key maintained? In Vendor Master Company Code Data tab, under the account management, you can see the short key. So purpose of short key: when a vendor invoice or payment is posted, SAP will automatically fill the assignment field based on the short key. This helps to group and sort line items in FBL1N and F-44, etc. Common short keys and their meanings. 001 posting date. So you can see the example how the field look like. 002 document number, 003 vendor invoice number, 012 customer vendor reference number, 022 baseline date. These are all the examples. Most commonly used in Vendor Master, short key 001 assignment vendor invoice number. This is a preference option because make reconciliation easy, help in matching PO and invoice, useful in payment reference. So the next field is subsidy indicator. What is the subsidy indicator in SAP? The subsidy indicator is used in SAP to identify whether a vendor receives subsidies or grants from a government or other authority. It is mainly used for statutory reporting and tax related requirements in certain countries. So where is it found? You will see the subsidy indicator field in Vendor Master Company Code Data tab in Vendor Account Management. Purpose of the subsidy indicator: it is used to track vendor who receives or provide subsidies, support government reporting formats, help in tax deduction or special accounting rules, control how transaction should be reported in legal reports. Example, a government aided supplier may receive a certain subsidy for supplies. If you set a subsidy supply is 1, SAP will mark transaction for the vendor as subsidy related. Include it in specific statutory report, especially it is country specific. So the important notes: subsidy indicator is country specific, mostly used in Eastern Europe and Latin America. In India, localization it is rarely used unless your organization has special government reporting needs. It does not affect accounting directly, it is for reporting and classification. The next field is authorization group. So where is authorization group is maintained. Under the company code data, under the account management, you can see the authorization group. So the purpose of authorization group is used restrict vendor master access, control which users can work with certain vendors, protect sensitive vendors, directors, government vendors, critical suppliers, intercompany code vendors. These are all the examples. How it works? Simple explanations. You assign an authorization group, example A001 to a vendor. You assign the same authorization group value to a role authorization object. So authorization object is F-LFA1 underscore BEK. So the field is BEGRU, authorization group field technical name. Only users with this authorizations can open or modify that vendor. Example scenario, your company has a vendor used for direct payments or intercompany code transactions. You won't want to every user to see or edit this vendor. So vendor 2001 authorization group is A001. Only finance managers have the access to A001. Other users get an error, you are not authorized to display the particular vendor. You can see this kind of errors. So the next field is planning group. What is planning group in SAP Vendor Master? Planning group is used in cash management and liquidity planning to classify vendors into groups for cash flow analysis, liquidity forecast, payment behavior tracking, bank position planning. It helps the treasury or cash management team understand when cash flows are expected for different types of vendors. So purpose of planning group is used to categorize vendor based on how their payments should appear in cash management reporting. So we can use FF7A for cash position, FF7B for liquidity forecast, FF7C for cash flow total records. Different planning groups lets SAP classify expected liabilities more accurately. Now when invoices are posted, SAP reads vendor's planning group, place the cash flow into the correct liquidity bucket. So the configuration information is go to SPRO, treasury, cash management, planning, define planning groups. So the next field is, before going to next field, you can see the planning group examples. 001 regular suppliers, normal payment cycle. 002 critical suppliers, payment need priority. 003 intercompany code vendors, internal group transfers. 004 government vendors, statutory payments. Like this you can define the planning group based on your client requirement. The next field is release group. What is release group in SAP? Release group is used to in SAP release strategy. It's a kind of approval workflow for purchase requisitions and purchase orders and a request for quotations and contracts. It is a classification object that groups together release codes and release strategies. So SAP knows which approvers belong to which approval chain, which document type is controlled by which release setup. The purpose of release group. Release groups helps SAP separate and organize different approval process such as raw material, PR approvals, capital purchase approvals, service PO approvals, import PO approvals. Each can have different approval hierarchy. So where is release group used? In purchase requisitions, under the release strategy, header items like CE KKO, item level, CBON, CEBAN. In purchase order level, CE KKO, header level. So release group is a key field in configuring these. Example, let us say you want to approval process release group R1 used for raw material purchase requisitions. The approval flow look like this. First the store manager will approve and the manager is going to approve and finally the general manager is going to approve. So release group R2 used for capital purchase orders. Approval flow like this: manager, finance and MD, managing director, the final approval. Because these are in different release groups, the approval chain and conditions stay separate. Okay, so I'm just giving example R1 R2, two different release group with two different chain of approval process. So related elements in release strategy, a release group work along with release codes, release indicators, release strategy, release prerequisites, and classification of characteristics. So the next field is minority indicator. What is meant by minority indicator in SAP? The minority indicator is used to identify vendors who belong to recognized minority categories for government or statutory reporting. It is mainly used in countries where companies must report minority-owned suppliers, special procurement categories, social responsibility complaints, government mandatory diversity reporting. This field does not affect accounting or purchasing, but it is used for classification and only reporting purpose. So purpose of minority indicator, it helps organizations track procurement from minority vendors, comply with the government diversity requirements, generate special reports for audits, claim benefits or credits for minority based purchase, supply chain transparency. These are all the purpose of using minority indicator. Example, suppose your company buys from a vendor who is certified as a SC or ST vendor, human owned business, small disadvantages business, minority owned SME. SME is nothing but small medium enterprise. You assign a code in the minority indicator field such as 01 SCST supplier, 02 human entrepreneur, 03 minority owned, like this. Then the SAP can include these vendor in spend analysis, diversity procurement reports, and government compliance reports. The important notes when you are using the minority indicator, it is country specific, widely used in US, Canada, and some other regions. Has no impact on posting or payments, used mostly for reporting, not configuration. In some organizations, codes are audited annually. So the next field under the account management, certification date. So what is meant by certification date in our SAP Vendor Master? Certification date is the date on which the vendor was officially certified for a specific status, usually related to minority status, subsidy eligibility, quality inspection, quality certification, government approved vendor programs, diversity supplier certifications. It is used mainly for statutory complaints and reporting, not for accounting or purchasing. So purpose of certification date. The certification date helps companies track when a vendor's minority or statutory certification begin, when the certification is activated or expired, compliance with the government or audit requirements, eligibility for diversity or subsidiary reporting. So these are all the purpose of certification date. For example, a vendor is certified as a minority owned business on April 1, 2024. You enter this as a certification date. SAP can then include this vendor in diversity spend for periods after the certification, exclude them before the date, show validity in audit reports. So the important notes when you are using the certification date. The certification date is informational only, no posting impact, often used in public sector and large corporate procurement, works with reporting tools like SAP BW, SAP Ariba, diversity reports or customer reports. So the next field is interest indicator. So what is meant by interest indicator in our SAP Vendor Master? The interest indicator is used to determine how interest should be calculated on overdue vendor items. If your company wants to charge or pay interest on delayed payments, the interest indicator tells SAP whether the vendor is interest relevant, which interest calculations rules apply, what rate or formula is used. So it is part of the interest calculation configuration in accounts payable. Purpose of the interest calculator, it controls if overdue vendor invoices should be included in interest calculation, which interest calculation type to use, which rates or terms apply during this interest run. So example, let's say interest indicator V1 12% yearly. So the grace period is 10 days. So the calculation method is simple interest. So the interest indicator V2 15% yearly, zero grace period, compound interest. So if vendor invoices cross due date, SAP use this interest indicator to calculate interest in FINT report. So the important notes: if no interest indicator is maintained in vendor master, is not interested relevant. Mostly used in Europe and public sector, very rarely used in India unless required by contract. It does not affect payments automatically. Interest is calculated only when you run interest calculations. So the next field is interest cycle. So what is meant by interest cycle in our SAP system, especially in vendor master? Interest cycle determines how often interest is calculated for a vendor during the interest calculation run, FINT. It tells SAP whether interest should be calculated monthly, quarterly, yearly, or for every run, how the interest periods are divided, how postings should be grouped. It works together with the interest indicator. The purpose of interest cycle: the interest cycle defines the number one, frequency of interest calculation; number two, how SAP groups overdue items into interest periods; number three, whether interest should be accumulated or calculated fresh in each period. So these are all the purpose of interest cycle. So the common interest cycle values, let's say 01 monthly interest cycle, 03 quarterly interest, 12 yearly interest, so 00, so no cycle, simple run. Okay, so you can use the values, depends on your client requirement configurations. For example, vendor ABC's interest relevant interest indicator is V1, which you set. So interest cycle is 01, meaning every due invoice will be included in a monthly interest period. If invoice is overdue from April, SAP calculates interest for entire April period. Next calculation happens in the May cycle, not daily, it is only monthly basics. If the interest cycle is 00, SAP calculates interest every time you run FINT reports without grouping by months or quarters. So whenever you are going to run it, then system will calculate the interest. Okay, so the technical link is interest cycle works with interest indicator, interest calculation types, interest rules, interest period settings. So this helps accounts payable avoid daily manual interest tracking. The next field is last key date. So what is meant by last key date? The last key date is used in interest calculation to store the last date on which interest was calculated for the specific vendor. This date is automatically updated by SAP when you run an interest calculation run, FINT. It helps SAP avoid double calculation interest, calculating interest for the same period again. So generally this last key date is used for ensuring there is no double check, there is no same period used once again. The purpose is up to which date interest has already been calculated, from which date the next interest calculation should start. This prevents duplication interest postings. So the important note is you should not manually change this field unless correcting data. If it is blank, no interest calculation has been done for this vendor. Usually mainly in countries where interest runs are regular, like Europe, public sector, long-term AP contracts, accounts payable contracts. The next one is last interest run. So in SAP stores the details of the most recent interest calculation run. So this is for customers, vendors, interest, dunning interest, etc. So you can review when interest was last calculated. So where to check the last interest run? So in transaction FINT, FINT AP, FINT AR. So especially for accounts payable and accounts receivable, if you are working with interest calculation, go to T code FINT, enter your company code, business partner and customer or vendor. So enter the key date, then click on the environment, interest run list. You will see the last run date, run identification ID, items included interest amounts, all the informations you can see. So this is one option. Another options in transaction F110 for payment program interest. If you want to know interest calculation during the automatic payment run, go to F1110, enter run rate and identification, go to menu, environment, payment log. Here you can see whether interest posting happened in the payment run. So third one is table level. You can also view the last interest run in SAP tables. So these are all the tables you need to use to know the data. So the next field is withholding tax code. So what is meant by withholding tax code? The withholding tax code in India we used to call as TDS, is used to define TDS rate, for example 1%, 5%, 10%. So TDS type is contractor, professional, rent, commission, etc. So the threshold limit is surcharges, cess rules, posting rules. Each withholding tax code represent a specific rate plus rule. Example in Indian TDS, 01 means professional fees 10%, 02 contracted with 1%, 03 rent with 10%, 04 commission with 5%. Like this you can use this examples in Indian TDS system. So how to configure this? So go to financial accounting global settings, withholding tax, extended withholding tax, calculation, define withholding tax codes. Or you can use the T code directly, OBWW. Required master data to set up this withholding tax code. So withholding tax type is required. For example, you can use the T code to create the tax type OBCG, like professional fees, contract fees or rent fees. So then withholding tax code you can create by using the OBWW T code. So here you can define percentage basic rate or surcharges or cess or minimum maximum base amount or thresholds. So the number 3, assign withholding tax in vendor master. So go to /NBP under the company code data tab. You can go to withholding tab, assign your withholding tax type and withholding tax code. So if exemption certificate is required, you can enter that one also. For example, posting examples, your invoice value is 1 lakh rupees. So withholding tax code 01, TDS at a 10%. SAP automatically calculates. So 10,000 is TDS amount, post the remaining amount 90,000 to vendor. The next field is withholding tax country / region key. The withholding tax country / region key identifies which country's tax rules should be applied for withholding tax. We used to call as TDS, withholding tax, retention tax, etc. So based on the country, the name will change and the procedure will change. SAP needs this because each country has different tax laws, rates, thresholds, certificates and reporting formats. So why it is needed? Because TDS rules are different for India, US, UK, UAE, etc. SAP must apply the correct tax type, tax code and calculation procedures. Reports and forms like India TDS files, 1099 forms, etc. depends on the country requirement. So these are all the examples of withholding tax country keys. For India, TDS tax deducted at source, and US 1099 withholding rules. For United Kingdom, PAYE CAS withholding. For Germany, German withholding tax regulations. For UAE, usually no WHT withholding tax in UAE. Singapore withholding tax for services and interest. In India, always use for TDS setup. So where to maintain this CDS setup? So where to maintain this configurations? So go to /NSPRO, CP reference IMG, financial accounting global settings, withholding tax, extended withholding tax, basic settings, define country for withholding tax. No manual entry is usually needed in the vendor master. And the next field is recipient type. So what does mean by recipient type? Recipient type identifies what kind of vendors you are paying specifically for withholding tax TDS purposes. Different recipient types may have different TDS rates, exemptions or rules depending on the country's tax laws. This field helps SAP apply the correct withholding tax calculations. So why is recipient types important? Because the TDS rules often depend on who the payment is made to. For example, individual, company or firm, HUF, trust, preparator, partnership, government body, foreign vendor. There are different types. So SAP uses the recipient type to determine whether withholding tax is applicable, which TDS code should apply, whether the reduced or zero rate applies, threshold limits and exemption rules. All this informations need to be coming under recipient type. So examples in Indian TDS rate changed based on the recipient category. Examples of the recipient types in India. So the recipient code is 1 individual or proprietorship, 2 company, private limited or limited, 3 partnership firm, 4 HUF, 5 trust or society, 6 government, 7 foreign company. So like this you can create different code for recipient type. So the next field is exception number. So we need to understand what is meant by exception number. Exception number is the certificate or reference number issued by the tax authority that allows a vendor to receive reduced TDS or no TDS on payments. This is used mainly in extended withholding tax, especially TDS in India. SAP stores the exemption reference here so it can apply reduced tax rates, apply zero tax if fully exempt, apply zero tax if fully exemption, track validity of the exemption. So when is an exemption number is used? Vendor submit TDS exemption certificates like lower deduction certificate under section 197, no deduction certificate, exemption under special government notifications, PAN based temporary exemption. So PAN is nothing but permanent account number. SAP needs the certificate number as a proof. So example in India TDS, the income tax departments may issue section 197 certificate, vendor gets reduced TDS rate. Example, professional fee instead of 10%, vendor gets 2% as a TDS. So SAP needs the exemption number, which is nothing but certificate number. The second option is from 10% to 0%, which means exemption. Vendor is exemption for a specific period. SAP requires exemption number, validity from and to date, and reduced rate information also. So why SAP needs it? For audit trail, for TDS reports, for validating reduced zero rate to avoid manual errors. Valid until is the expiry date of a vendor's TDS or withholding tax exemption or reduced rate certificate. It tells SAP how long the exemption or reduced rate is applied. So purpose of valid until, SAP uses this date to number 1, stop applying exemption after expiry. Number 2, automatically return to normal TDS rate once expired. Number 3, ensure TDS calculation follow legal validity. Number 4, prevent wrong or excess exemptions. The important information, if you leave valid until blank, SAP assumes no exemption applies. So it's very important. So the next field is exemption authority. So what is authority? Exemption authority is a government department or legal authority that is issued the vendor's withholding tax exemption or lower certification. So SAP stores this so that you know who issued the exemption. Auditors can verify the certificate. Reporting remains legally compliant. So why SAP needs exemption authority? Because withholding tax exemption must be supported by proper certification issuer, government authority, complaints for audits and legal checks. When generating TDS report, SAP may print this field for statutory use. So the next field is previous account number. Previous account number is used to store the vendor's old account number if the vendor master was migrated from a legacy system like from Tally or Oracle or from the old SAP version. A different company code and old account structure used before rememoering and manual vendor ledger which is coming under pre-ERP systems. It is not used for postings, it is only reference informations. Okay, you can use the existing old account number as a reference informations when you are migrating the system from SAP old version to latest version, let's say R3 system to S4 HANA or ECC to S4 HANA, or from other ERP system like a Tally or Oracle to SAP system. Or you can transfer the manual ledger to in SAP software. So why is it used? This field helps finance teams may old vendor numbers to new SAP vendor numbers. During audits, if old bills or vouchers still show the old account number for smooth transaction from old ERP to SAP to avoid confusions after renumbering. Important notes, this fields does not affect accounting postings. It is only for reference, audit and migration purpose. You can leave it as blank if not used. So what is personal number? Personal number is the employee ID from SAP HR which is coming under HCM, Human Capital Management, that links a vendor to an internal employee. This field is used only if the vendor is also an employee, such as employee who receive travel reimbursement, employees receiving petty cash payments, employee who act as a freelancer consultants but still have an HR number, employee who need vendor type payments outside payroll. SAP stores the HR personal number under the PE or NR technical field in our SAP system. So why personal number is used? If links FI finance with HR human resources for employee travel expense reimbursement, when an employee submit expenses, SAP post FI documents to a vendor linked with their personal number. Second one is cross application reporting, HR plus FI combined reports. Third one is avoid duplicate master data. The system knows the vendor is actually an internal employee. And payroll related postings if configured. So where it comes from? From SAP HR module like HCM2, the T code PA20, PA30, PA40. So for example, employee name is Suresh, the personal number is 1005. In vendor master, the personal number is 1005. You have to enter the same number. The next field is main economic activity. Main economic activity represents the primary business or economic activity of the vendor. It is typically a classification code that tells SAP what type of business the vendor is involved in, manufacturing or services or construction or transport or trading, etc. Okay, this field helps in reporting compliance, statistical analysis or government or tax related classifications if required. So why it is used? Companies use this field for the number one is legal or statistical reporting. Some countries require reporting vendor activities for tax authorities, government statistics, industry classifications. Number two, vendor segmentation, useful for spend analysis, KPI reports, category wise purchasing decisions, risk assessment. Number three, complaints and audit. Some industries have specific complaints rules. So the next field is a distribution type for employment tax. The distribution type for employment tax is used when the vendor is actually an employee and you are processing employment related tax payments through the SAP FI instead of payroll. This field tells SAP how to distribute or classify taxes that related to employee payments, such as the number one, travel reimbursement with the taxable components. Number two, allowances paid via financial accounting. Number 3, contract or part-time payments made to employees. Number 4, any employee payments that require statutory tax reporting. This fields is only used when FI and HR payroll are integrated. So when this field is used, you will use this field when the number 1 vendor equal to employee linked via personal number. So here vendor means it is an employee. Employee is the vendor. So and number 2, taxable payments to an employee go through FI, not payroll. Number 3, country specific labor/tax rules require proper classification of the tax. If your vendor is a normal business vendor, this field is not required. Keep it as a blank. If the vendor is an employee, your internal employee, then you need to use this field. So the next one is activity code for gross income tax. So which is nothing but it is a country specific classification that tells SAP what type of activity or service the vendor performs for the purpose of gross income tax or professional tax reporting. This field helps SAP determine whether the vendor's payment is subjected to gross income tax or which activity code or rate should be used. Number 3, how to classify the vendor in statutory declarations. This field is mainly used in Latin America countries, Mexico, Argentina, Brazil. In many other countries, including India, this field is not used at all. So why is it used? For countries that use a gross income tax, the government needs the activity code to classify number 1, what service the vendor performs, number 2, what industry they belong to, number 3, which gross income rate applies, number 4, whether exemptions exist, number 5, SAP use this code to determine the correct withholding or reporting during FI postings. For example, the country specific, let's say Argentina, so common activity code include 010 professional service, 20 construction service, 30 wholesale trade, 40 retail trade, 50 transport service, 60 manufacturing. Like this, they are going to use different examples. These code affect the gross income withholding. For example, in Mexico or Brazil, industry classifications, gross income tax reporting, regional tax distribution. In India, it is not used. So just keep it as a blank when you are creating vendor for Indian companies. All this field coming under vendor account management in company code data. Next we can go for vendor payment transactions. Under the vendor payment transactions, you can see the detailed each and every field requirements. So under the financial accounting and controlling, in vendor master company code data, step number 2, payment transactions. Under the payment transaction, the first field is payment terms. What is meant by payment terms in our SAP vendor master? Payment terms define when and how a vendor must be paid. They control due date calculation, cash discount eligibility, payment blocks and unblocks, payment run behavior under F110. Payment terms affect all vendor invoices automatically. How payment terms work in SAP? The payment terms calculated the baseline date, then SAP adds the number of days to calculate the due date. For example, payment terms is 30 days, baseline date is 10th January 2025, the due date will be 19th February 2025 based on 30 days payment terms. Cash discount examples. In payment terms, 2% cash discount if paid in 10 days, otherwise you need to pay the entire invoice amount in 30 days. Let's say invoice amount is 1 lakh rupees. The payment within 10 days, you can able to pay only 98,000 rupees. After 10 days, you must pay the 100% amount 1 lakh rupees. SAP automatically performs this during payment run in F110 T code when you are running the APP automatic payment program run. Which payment terms should you select? Depends on your agreement with the vendor. Let's say vendor gives 30 days credit, payment terms 0002 for 30 days. Vendor wants immediate payment, then you can use the payment terms 0001, immediate payment. Give yearly payment discount, the payment terms 2% discount in 10 days and net in 30 days. Constructions or subcontract vendors for long credit, payment terms it should be 60 or 90 days. So like this, based on the different requirement, different conditions, you can create different payment terms. So, and based on the specific vendor requirement, we can select the payment terms. The important notes: the payment terms from PO override vendor master. If blank in invoice, SAP takes from vendor master. Change affect new documents, not old ones. Whatever the changes you are going to make it will be affect the future new documents. There is no any impact on old document which we posted already in the SAP system. So the next one is credit memo payment terms. What is meant by credit memo payment terms? Credit memo payment terms in SAP define how refunds or credit memo issued to a vendor or customer are due for payment. This field is used specifically for credit notes, not for normal invoices. Where it is used in vendor master, under the company code data tab, you can go to vendor payment transactions. The purpose: credit memo payment terms override the regular payment terms only for credit memos. Example: normal payment term is 30 days, credit memo payment terms immediately, due instantly. So if you post a credit memo, SAP will use the credit memo payment terms, not the invoice terms. This helps ensure refunds and adjustments are settled correctly. Why different payment terms? Credit memos may need to be cleared immediately. You may want a different cash discount logic for credit memos. Helps in automatic payment program F110 for correct due date calculation. If you want, I can explain how this interacts with F110 clearing or payment term configuration in OPB8. So the next field is tolerance group. Tolerance group in SAP for vendors and customers defines the limit within the company within which the system can post automatic differences during payment process. Purpose of tolerance group is it controls payment differences automatically posted, the number one option. How much difference SAP can post without manual intervention during incoming payments for customers, outgoing payments for vendors. Number two, cash discount permissions. Whether a customer or vendor is allowed cash discount after payment term expiry, partial cash discount. Number three, underpayment and overpayment limits. Defines maximum overpayment SAP can accept, maximum underpayment SAP can write off, maximum percentage difference allowed. So example, if the tolerance group allows underpayment 200 rupees, overpayment 150 rupees, cash discount tolerance 3%, then during the payment, if the customer pays 100 less, SAP writes off automatically. If customer pays 120 extra, SAP accepts as overpayment. If customer takes 3% extra cash discount, SAP will allow automatically based on this configuration. So you can use the OBA3 T code to create this particular tolerance group for customers and vendors. The next field is check caching time. Check caching time in SAP is used to define how many days after issuing a check the system should expect it to be cached. So where you see it under the vendor master company code data, go to vendor payment transactions, then you can see the field check caching name. Check caching time. The purpose: when you make a vendor payment through checks, SAP needs to estimate when the check amount will actually leave your bank account. This field helps SAP delay bank accounting clearing. The payments stay in an intermediate clearing account for the number of days you enter. Improve cash flow planning. The system calculates cash flow, cash outflow date, liquidity forecast, payment proposal, timing. So these are all the system will calculate. For example, if check cashing time is 3 days, vendor payment run F110 issued check on 10th November, SAP assumes the vendor will cash it by 13th November. Bank account clearing postings will expected on only 13th November. The typical use cases, countries where the check payments are common, US like and India, organizations that issue post-dated checks, companies needing accurate liquidity management. The next one is payment reason. Payment reason in SAP is used to specify the purpose or justifications of the payment that will appear on payment documents, bank files and statements. Where you find it under the company code data, payment transactions, you can see the payment reason. So also it is appear in customer master for incoming payments. Purpose of payment reason, it helps SAP and banks understand why the payment is being made and provides clarity in bank transfer like NEFT, RTGS in India and SCPA in EU. The payment reason appears in number 1 bank statement, number 2 payment advice, number 3 vendor bank notifications. Then automatic payment run in F110 documentation. When SAP generates the payment file, the payment reason is included in the payment medium. So legal and statutory requirements. Some countries mandate that every bank transfer must include a payment purpose. Example of payment reasons: INV invoice payment, ADV advance payment, REB rebate payment, REF refund, SAL salary, tax payment. These are all the examples. The example scenario: vendor invoice value is 50,000 while creating vendor master or during F110 run. Payment reason INV, bank file shows payment reason invoice payment for vendor 30001 INV. Vendor understands immediately. Configuration for this payment reasons under the financial accounting, accounts receivable and accounts payable, business transactions, outgoing payment, define payment reasons. So you can create custom payment reasons, codes and assign descriptions. The next field is check double invoice. So when this indicator is activated, SAP automatically checks whether the invoice with the same key fields has already been posted. SAP compares vendor number, invoice date, invoice reference number. Usually it is invoice number only and invoice amount. So, and the purpose is this prevents duplicate vendor payments, incorrect accounting entries, fraud or accidental double posting, manual review effort. So these are all the preventions, the usage of check double invoice field. How it works? Simple example: vendor submit invoice. The invoice number is 1001 50,000 rupees. You post in Miro or FB60. Later someone try to post the same invoice 1001 again. Because the double check invoice is active, SAP stops the where it is controlled. There are two places for duplicate check control. One is vendor master. This field turns the check on off for the specific vendor. In system configuration, go to material management, financial accounting, invoice verifications, set tolerance for duplicate invoices, or you can use the T code directly, OM or DC. So configuration defines which fields SAP should compare and system will generate error or warning message behavior. Important notes: if the vendor uses the same invoice number every month, you may deactivate this field. Very rare cases used to happen. Best practice: always keep it on for all vendors. The next field is payment methods, where you maintain it. In vendor master, company code data, payment transactions, you need to maintain the payment methods. The purpose of payment methods, you can enter one or multiple payment methods. Purpose of payment methods, this field controls which payment types are allowed for this vendor. For example, bank transfer only, check only, no cash payments, international payments allowed. Which invoices are considered in F110 payment run. If an invoice does not match the payment method allowed for the vendor, SAP will not pick it up. Determines the format required for payment files. For example, NEFT, RTGS, SEPA, XML, BACS, these are all the format required for payment files. The next field is house bank. Purpose of house bank, it tells SAP from which bank account the payment should be made when paying this vendor. Select the correct bank during payment run F110. SAP will choose this house bank for vendor payments. Assign the right account details like a bank name, account number, GL bank account, check lots, payment medium file structure, and control which bank account is used for different vendors. For example, local suppliers, HDFC Bank, international suppliers, Citibank, high value vendors, ICICI Bank. So first of all, what is meant by house bank? A house bank is your company's bank stored in SAP with bank key, bank account, account ID, currency, account GL mapping. You can have multiple account IDs under the same house bank. So let's say under the HDFC Bank, you can able to create current account, salary account, vendor payment account. To configure this bank account, you can use the T code F512. So the next field is payment block. So what is meant by payment block? The purpose of payment block, the payment block is used to stop SAP from paying a vendor or a specific invoice, prevent automatic payment. Invoice will not appear in F110 payment proposal, which is nothing but APP, automatic payment programming proposal. And then manual control, used when invoice is under dispute, goods not received, GR, IR issue. GR means goods receipt, IR means invoice receipt, and wrong price or wrong quantity, vendor reconciliation needed. Due to this reasons, you can control the invoices from the APP by using this payment block. And financial audit control stops unapproved invoices being paid. These codes depend on company configurations. So the configuration menu path under the financial accounting, accounts payable, go to business transactions, outgoing payments, and you can define the block key descriptions. If block is for vendor or invoice, usage in F110. Vendor level versus invoice level payment block. There are two methods to block an invoice. One is vendor level, another one is invoice level. First one is vendor level. Blocks all invoices for that vendor, usually when vendor is suspended or inactive. Invoice level blocks only the specific invoice, most commonly used type due to various issues. So these are all the common payment block codes. A means blocked for payment general block, B block due to missing GR goods receipt, C quantity inspection block, D block by user manual or block for release workflow, V vendor level payment block. Okay, these are all the commonly used codes. Anyway, based on the client requirement, you can define and you can use it. Then payment method supplement. The purpose of payment method supplement, it further classifies or controls how a payment method behaves. This field is used when one payment method has multiple variants. Example, NEFT or RTGS under the same bank transfer, regular check versus special check format, domestic transfer versus foreign transfer, special bank selection rules, priority payments, different payment medium formats. So these are all the examples for payment method supplement. So there are two scenarios. The first scenario, bank transfer by payment method T, 01 NEFT, 02 RTGS, 03 IMPS. Like this you can define. And example 2, scenario 2, by check mode you can enter the payment method C. A is normal check, B is courier check, C is high value check. Like this you can differentiate the payment method supplement. So the next one is grouping key. Grouping keys in SAP is used to automatically derive other fields during document posting, such as payment terms, payment method, payment block, house bank, short key, assignment field. It helps SAP fill these fields automatically based on the predefined logic, reducing manual entry. Purpose: grouping key is used for automatically deriving values during invoice postings. For example, based on posting date, the system can automatically generate assignment numbers or fill due dates. Second one is automatic assignment field generation. A common use is, let's say, Z01 assignment equal to document number, Z02 assignment equal to posting date plus vendor number, Z03 assignment equal to fiscal year plus posting dates. The next one is standardization of accounting data. Ensure consistency for reporting, customer/vendor analysis, automatic clearing. The configuration menu path. Under the financial accounting, accounts receivable and payable, go to business transaction, grouping keys. There you define grouping key ID, what field values SAP should derive, assignment terms, payment data, all the information you need to update. So the key points: grouping key saved date entry. Grouping key saves data entry time, helps maintain consistent document references, works only if required configuration in IMG. You can use different grouping keys for different vendors. So these are all example of grouping keys. 001 assignment equal to posting date, 002 assignment equal to document number, 003 assignment equal to vendor number plus posting date, 004 for terms based on GR rate, 005 due date adjustment based on the calendar. So like this you can use different type of grouping keys based on your client requirement. The next one is alternative payee. Alternative payee in SAP is used to when payments for a vendor should be made to a different vendor or third party instead of the original vendor. The purpose of alternative payee: it tells SAP, do not pay this vendor directly, make the payment to another specific vendor. This is commonly used when number one, parent company receives payment on behalf of subsidiaries. Example, vendor ABC distributors, payment should go to ABC corporate head office. So here ABC distributor is a subsidiary, ABC corporate is the head office for the, let's say, parent company. Number two, agents or brokers receive payment. Example, payment for goods goes to a sales agent. And vendor has multiple bank accounts managed separately. Vendor has outsourced collections. So types of alternative payee. There are three ways SAP supports. The first way, vendor level alternative payee, defined in vendor master, always pays to the alternative payee vendor. Number two, one-time alternative payee, specified while posting an invoice in FB60 or Miro. Only that invoice is paid to the different vendor. Number three option, exclusive alternative payee, company code level, configured so that only the alternative payee is allowed, original vendor is never paid directly. So you can set up three levels. One is for invoice level, another one is for vendor level, another one is for company code level. So these are three ways you set up the alternative payee. For the configurations under the financial accounting, accounts payable, business transaction, maintain alternative payee. You define which vendor can be alternative payees if exclusive payment is allowed. The important notes: if blank vendor is paid normally, if alternative payee is blocked or inactive, system may give payment run error, appears on payment advice and bank file transparency. The next field is bill of exchange limit in local currency. So bill of exchange limit in local currency in SAP is the maximum credit limit allowed for a vendor when setting invoices using bill of exchange. It is maintained in the vendor master. The purpose, this field controls maximum exposure allowed for a vendor. SAP checks this limit when posting invoices, running the automatic payment program F110, posting bill of exchange settlement. If the limit is exceeded, SAP will block further bill of exchange posting for that vendor. Example, vendor has a bill of exchange limit is 5 lakh rupees. Bills already issued for 3,50,000, remaining available 1,50,000. In a new bill of exchange post is 2 lakh, SAP will reject or block it because the limit exceeds the 5 lakh. So what SAP tracks by using this bill of exchange? When bills of exchange are used, open exposures is tracked automatically, balance reduces as the bills are cleared and paid. For the configuration under the accounts receivable, accounts payable, go to business transactions in bill of exchange. Settings cover posting rules, dunning rules, payment configuration and limit behavior. So the typical use cases used in countries and industries where vendors allow deferred payment via negotiable documents. Bill of exchange are common in France, Italy, Spain and some Asian markets. Used to control financial exposure, prevent exceeding agreed credit limits, maintain credit discipline. These are all the controls used. The next one is indicator clearing between customer and vendor. In SAP allows automatic netting or clearing of open item between a business partner who is both a customer and vendor. The purpose, if the same business partner is customer in AR accounts receivable, vendor in accounts payable AP, this indicates allows SAP to offset receivables and payables against each other automatically. So, for example, the role customer sales invoice, the balance is 50,000 receivable. The role is vendor purchase invoice, 30,000 payable. With this indicator on, SAP can clear how it works. The condition, same company code, customer and vendor master must reference each other. Vendor master must store the related customer number. The customer master must store the related vendor number. Clearing indicator must be active in both master datas. So how to configure it? Go to financial accounting, accounts payable receivable, business transactions, clearing cross-company code clearing between customer and vendors. The benefits, reduce manual reconciliation, lowers outstanding balances, useful for group companies, employees or partners who buy and sell. The next field is single payment. Meaning, single payment is an indicator in SAP that ensures only one payment is generated for all open items of a customer or vendor during a payment run instead of multiple payment documents. So, the purpose, if this checkbox is selected, SAP groups all due invoices into one consolidated payment instead of issuing multiple checks, transfers or payment documents. Helps reduces bank charges and simplify reconciliation. The typical business use cases, vendor who request a single consolidation payment statement and customers where payment receipts must be merged into one entry, companies wanting to minimize transaction charges. If the indicator is not selected, payment program may generate multiple payments depending on items, due, dates and other settings. The next one is indicator send payment advices by EDA. This means the indicator tells SAP that payment advice notes should be sent electronically via EDA. EDA is nothing but electronic data interchange instead of sending them by print, email or post. So what is payment advice? A payment advice is a document sent to a customer or vendor showing which invoices were paid, how much was paid, deductions, discount, etc. It is usually issued during an automatic payment program under F110. What this indicator does? If this field is ticked, SAP will generate payment advice as an ADA message. So no paper or printout version is created unless configured separately. The vendor or customer must be set up for EDI communications. Example, IDOC like a PX or 2002. If this field is not selected, the payment advice is produced normally, printout, email, etc. The business use case. This is typically used for the large companies processing high invoice volumes, vendors or customers who want automatic digital updates, integration with ERP to ERP communications. The next field is Payment Clearing Group ID, meaning the Payment Clearing Group ID is a field used in SAP to group open invoices, so for clearing purposes during payment runs or manual clearing. Here I can say open invoices like invoice, credit memos, etc. It helps SAP decide which item should be cleared together based on grouping logic. Purpose, it allows the system to identify items that belong to the same payment group, clear items only within the same group, prevent mixing unrelated items during clearing. Example, if a vendor supplies raw materials, services, you can assign payment clearing group RM for raw materials invoices, payment clearing group for SRV for service invoices. During payment run F110, raw materials invoices cleared only with RM items, services invoices cleared only with the SRV items. Benefits, better control in clearing, prevent incorrect mixing of invoices, helps in matching and reconciliation, useful in grouped or complex payment process. The next field is indicator send payment advice by XML. Meaning this indicator determines whether the SAP should send payment advice documents in XML format to the customer or vendor. Payment advice is a document that tells the business partner which invoice were paid and how the payment amount was allocated. Purpose, if the indicator is set, SAP will generate and send the payment advice in XML format, usually through email or integration middleware, for example PI, PO or CPI, or EDI XML messages or bank communication channels. Example scenario, a vendor requests the payment advice must be sent in XML for their automatic reconciliation system. When this indicator is checked during the payment run F110, SAP will generate XML payment advice, send it electronically, not send a paper or PDF version unless configured additionally. Why is XML used? Because it is machine readable, easy to integrate with the third-party systems, used extensively for automation and electronic data interchange. If the indicator is not set, SAP will use the defined methods such as email, PDF, printout, EDI message if separately configured. So the next one is prepayment relevance in supplier master. Meaning prepayment relevance is a field in the vendor or supplier master that indicates whether a vendor involved in advance payment before goods or service are received. If this indicator is set, SAP treats the vendor as requiring down payments, which can affect how postings and payments processing work. The purpose, a company must pay a vendor a portion of the amount before delivery. Tracking and clearing of the advance payments must be controlled. Financial reporting needs to identify such vendors separately. So what happens when it is active? It set a prepayment relevant. Down payments to this vendor are posted to special GL accounts. SAP may require prepayment informations during invoicing or PO processing. Reporting and payment programs can filter such vendors accordingly. The business examples use this option when the vendor requires advance payment before shipment, initial deposit before contract execution, stage-based payments, for example 20% upfront, 80% later. Common in industries like construction, heavy machinery, import requiring project-based services, generally used the prepayment or the advance payment options. If the field is not activated, SAP will treat the vendor like a normal supplier and no special GL routing is applied. Payment process only after the invoicing. This is standard flow. Fine. So we discussed elaborately all the fields coming under vendor payment transactions in company code data tab. Thank you. We'll see you in vendor correspondence. Under the financial accounting and controlling, in vendor master company code data, step number 3, vendor correspondence. Under the vendor correspondence, the first field is Dunning procedure. What is meant by Dunning procedure in our SAP system? The Dunning procedure in SAP defines how the system will send reminders or notices to a customer or vendor when invoices become overdue. It controls how many reminder levels exist. For example, level 1, level 2, level 3, level 4, like that. How many reminder exist? Time gap between one reminder to another reminder. Let's say, for example, 5 days or 3 days between one reminder to another reminder. Text used in each reminder letter. What kind of format, what kind of informations need to be there in that reminder notice? Charges or interest added. So you can add additional charges when you are sending the reminder notice for the overdue payment, or you can calculate interest also during this Dunning period. Where is it used? You maintain the Dunning procedure under the customer master or vendor master in company code tab, vendor correspondence. Especially in vendor master, under the vendor correspondence in company code data tab, you can assign your Dunning procedure. How it works? When the customer or vendor invoices are overdue, SAP runs the Dunning run F150. Based on the assigned Dunning procedure, SAP decides whether the reminder is needed, which Dunning level to apply, what message and charges to include. Examples of Dunning levels, let's say level 1, 10 days friendly reminder, level 2, 30 days turn reminder with warning, level 3, 45 days legal warning or recovery notice. So these are all the some examples. If no Dunning procedure is assigned, customer or vendor will not receive reminder automatically even if payments are overdue. Next field is Dunning block. What is meant by Dunning block in SAP? A Dunning block is a field in SAP used to prevent a customer or vendor from receiving Dunning letters even if they have overdue invoices. When this block is set, the business partner is excluded from the Dunning run. When you are running the Dunning run in F150, where is it used? Okay, you can maintain this Dunning block under the vendor master company code tab, vendor correspondence. Why is it used? The block is helpful when customer or vendor is a dispute, payment extension or installment plan is agreed, legal or special handling is required, temporary suspension or reminder is needed, VIP customers should not receive automated notices. These are all the reasons to block specific invoice or specific vendor related invoice. Types of Dunning blocks. A Dunning block can apply at two levels. One is at master data level, blocks all items for a specific partner in the sense either it is a customer or vendor. Second level is line item level, so blocks specific invoice only when we are running the automatic payment programming or automatic Dunning run. Behavior in SAP, if a Dunning block is set, partner is skipping during F150 Dunning run, no reminder letters are created, no change in due dates or balances, only impact automated correspondent. The example scenario, situation invoice under dispute, why block is used, customer say amount is incorrect. Second one is negotiated, delayed payment, no reminder needed, holiday or vacation shutdown, temporary stop notices, high value customer, managed manually instead of sending automated notices for high value customers. The next field is account number of the Dunning recipient. The field specifies which customer or vendor account should receive the Dunning letters. If the reminders should be sent to a different account, then the one owing the money. In simple terms, you enter another account number here. Dunning notices for the current account will be sent to that alternative account. Why is it used? The feature is useful when a head office receives dunning letters for all branch accounts. Group companies want all reminders addressed to a central accounts payable team. One vendor manages invoicing and payment for multiple related vendors. Dealers or franchisees networks have a parent company handling collections. So these are all the examples. The account number 50001, the branch is Chennai, dunning recipient is 5000, and the account number 5002, branch is Coimbatore. So the dunning recipient is 50000, which means the head office account is 5000. If you sent 5000 as a dunning recipient for the branches, then the branch accounts overdue invoices will generate reminders that are sent to head office only 5000. If some invoices pending in Chennai branch or Coimbatore branch, straight away we can send it to only head office, and head office will take care of the remaining activities. Effect on dunning run F150. If this field is filled, the specified recipient account is used for correspondence. Related invoices are grouped and printed, sent together. The original account still holds the financial postings, only letters are redirected. Different from address redirect. This is account level redirection, not just changing the printed address. Alternate account decides who receives notices, how items appear in the dunning log. So if left blank, the same customer or vendor account receives its own dunning letters as normal. The next field is date of last dunning notice. This field shows the date of which the last dunning letter was issued to the customer or vendor. SAP automatically updates this date every time a dunning run in F150 issues a new reminder letter. The purpose, it helps SAP, the number one, determine the time gap between dunning levels. Number two, decide whether the next reminder is allowed based on the dunning procedure rules. Number three, track when the customer or vendor was last reminded. Example, if a customer's last dunning notice was sent on November 15th, 2025 and the dunning procedure requires 10 days gap between levels, the next dunning can happen only after 25th November 2025. If you run F150 before the date, SAP will not increase the dunning level. So the example for related fields, dunning level, current reminder stage 1 to 3, date of dunning key, run date of the last dunning, next dunning date, date when next reminder is allowed. If field is blank, which means no dunning letter has ever been issued, customer/vendor has never been included in a run, or dunning is disabled for this particular account. The next line item, date of the legal dunning proceedings. The date of the legal dunning proceedings is used to record the exact date when a customer's overdue account has legally entered formal debit, recovery or legal collection action. Why this date is important? The number one, stops normal dunning notices. Once legal actions have started, the system should no longer send a regular reminder or dunning letters. Number two, indicates legal status of the customer. It shows that the account is within court-driven or legal recovery process. Number three, provide audit and complaints proof. The date acts as a legal record for financial audits or court references. Number three, provides audit and complaints proof. The date acts as a legal record for financial audits or court references. Number four, prevent additional charges or interest if required. Some organizations stop calculating late fees or interest after the legal process begins. Number five, helps accounts receivable team track case timeline. They can see from when the matter moved from from internal reminder to legal requiry. In simple terms, it means from this date we are no longer just reminding the customer. This debt is now handled legally. The next field is dunning level. What is meant by dunning level? Dunning level refers to the stage or step number in the dunning process that indicates how many times a customer has been reminded about overdue payments. Each level represents how serious the reminder has become. Examples of the dunning levels: level 0, no reminder, customer has unpaid invoice but no reminders sent yet. Level 1, first reminder, gentle reminder to pay. Level 2, second reminder, more urgent follow-up. Level 3, final notice, serious warning before legal action. Level 4, legal or external collections, sent to lawyer or legal agency. So this is how you have to set up the dunning level. The next field is dunning clerk. A dunning clerk is the employee responsible for managing and following up overdue customer payments in an organization. This person monitors pending invoices, sends reminder notices, and coordinates with the customer to ensure payments are collected on time. The main responsibility of a dunning clerk, the number one is send dunning notices, which is nothing but payment reminders. Number 2, monitor overdue invoices and track the dunning level. Number 3, contact customers through email, phone or letter. Number 4, update customer payment status in the system, let's say in SAP. Number 5, coordinate with the sales or legal team if customers do not pay. Number 6, maintain collection records and reports. The role in SAP, dunning clerk code is assigned to each customer in the master data. This helps identify which clerk is responsible for each customer, print their name and contact details on the dunning letters, track performance and workload. So let's say clerk code DK01 Mr. Ravi for the region Chennai, DK02 Ms. Priya for the branch or region Bangalore. They are the responsible dunning clerk. If a customer assigned to DK01 become overdue, SAP will send reminders with Ravi's details and show that Ravi is responsible for collecting the payment. Simple explanation: a dunning clerk is a person who follows up with customers who have not paid their invoice on time. The next field is key for dunning notice grouping. The key for dunning notice grouping is a field SAP used to group multiple customers or vendor together so that they receive a single combined dunning notice instead of separate letters. This key tells SAP how to group the accounts during the dunning run in F150. The purpose of this dunning notice grouping: it helps when a company has multiple branches but the head office should receive one consolidated dunning letter and several customer accounts belong to the same corporate group and the business wants one statement instead of many small reminders. So these are all the examples. For the customer C1001 Chennai branch, 1002 Coimbatore branch, C1003 Bangalore branch. But we assign the grouping key G001 for all the three branches. When SAP run dunning, instead of sending three separate letters, it creates one consolidated letter showing overdue invoices of all three branches. The advantages when we are using this dunning notice grouping: reduces printing and communication cost, clear collection communications, centralized handling by one finance department, better control for corporate customers. These are all the advantages. The simple explanations: this key allows SAP to merge multiple accounts into a one dunning letter during payment follow-up. The accounting clerk abbreviation is a short code stored in the customer or vendor master in SAP that identifies the person responsible for maintaining and monitoring the account in accounts receivable or account in accounts payable. It is usually a short ID like AR01, MK, PG, RAJ. This code represents a real accounting clerk in the company. Purpose: this field helps the number one, identify who is responsible for the customer or vendor account. Number two, print clerk details on account statements or dunning letters. Number three, support internal tracking and audit. Number four, filter the short accounts by clerk in reports, easily route queries and communications. So for example, AC01, the clerk code name is Priya. AC02, the clerk code name is Rahul. And customer C1000 is assigned AC01 Priya. Then dunning letters and account statements will show contact Priya AC01. Reports can filter account by AC01 or AC02. Number of overdue account per clerk. The business benefit: number one, clear responsibility. Number two, faster query resolution. Number three, organized workload distribution. Number four, better reporting and monitoring. The simple explanation: it is a short code that tells SAP which accounts is responsible for a customer or vendor account. The next field is our account number with the vendor. The field stores the account number that the vendor has assigned to your company in their own system. Think of it as how the vendor identifies your company in their records. Why is it needed? Vendors often maintain a unique account number for every customer they supply in SAP. You store this number so that it appears on purchase orders and correspondence. Number two, helps the vendor identify your account easily. Number three, ensures payments and inquiries match correctly. Example: your company buys from a supplier called ABC Industries. In your SAP system, ABC may have the vendor number 200001. In the vendor system, your company may be known as CUST_789. So in this field, you store CUST_789 whenever you send documents like purchase orders, payment advice, remittance informations. The vendor can immediately recognize your account. The typical business use cases: vendor assign your company a customer number, payment reconciliation becomes easier, vendor can match orders and invoices quickly, helps avoid confusions if multiple legal entities exist. The simple explanation for this topic: this is a customer number that your vendor uses to identify your company in their system. The next field is clerk at vendor. Clerk at vendor is a field in the vendor master that stores the name or code of the vendor's representative who handles your account. In simple terms, it is the contact person at the vendor side responsible for orders, invoices, and communication with your company. The purpose: this information helps your accounting or purchasing team. Whom to contact at the vendor for queries such as invoice issues, payment disputes, delivery problems, pricing clarifications. And number two, improve communication speed and accuracy. Number three, print the contact name on documents such as purchase orders, payment advices, statement or letters. Example: vendor ABC Industries suppliers, vendor clerk is Ms. Priya. When issues arise, example payment mismatch, your accounts payable or procurement team knows contact Priya for ABC Industries to solve the issues. Benefits: speed up communications, avoid confusions about whom to contact, helps in follow-up for invoices and payments, improve vendor relationships management. The simple explanation for this topic: it is the contact person at the vendor side responsible for managing your company's account. The next field is accounting clerk's telephone number at business partner. This field stores the phone number of the person responsible for accounts or payments at the vendor or customer side. The purpose: helps your internal team quickly contact the responsible clerk at the business partner for finance related matters such as invoice clarifications, payment status inquiries, dispute resolution, missing document follow-ups, and speed up communication and avoid delays in the payment processing. So where it is used appears in vendor customer master data under the vendor correspondence details. Can also show on reports, dunning notices, payment advice and invoice printouts depending upon the configuration. The next field is accounting clerk fax number at the customer or vendor. This field stores the fax number of the person responsible for accounts at the business partners organizations like AP or AR, accounts payable or accounts receivable. The purpose used when your company needs to send dunning notice, payment reminders, statement of accounts, invoice dispute documents and payment confirmations. Provides a direct communication channel to the responsible finance person at the customer or vendor companies. So this is the purpose, and where it is used, obviously under the vendor correspondence you can see the accounting clerk fax number. So the next field is internet address of partner company clerk. This field stores the email ID of the accounts clerk at the customer or vendor company, so which is nothing but the finance contact person. Purpose enables direct electronic communications with the person responsible for invoice queries, payment issues, dunning notices, statement of accounts, reminders and settlement discussions. Helps SAP automatically use this email address while sending a dunning letters, payment advice, reminders, correspondence, documents. The next field is indicator local processing. SAP, the local processing indicator is used in the customer or vendor master and affects how correspondence and dunning are determined for branch or plant specific accounts. The purpose, this checkbox tells SAP that the dunning and correspondence should be processed locally. Statements, reminders and notices should be generated at the company code or branch level, not centrally. Why is this needed? Some companies have multiple branches, regional offices, decentralized accounting. In such cases, each branch may want to send its own dunning letter, payment reminder, balance confirmations, statements of accounts. If local processing is on, then the specific branch process its own dunning letters or sent from that location. Local accounting employee handles follow-up. If local processing is off, then all dunning and correspondence is processed centrally, typically from the head office. So the typical business scenario example, a company has branches in Chennai, Coimbatore and Bangalore. Each branch deals with its own customers and collections. If the customer master has local processing enabled, then Chennai branch will generate dunning notices only for its Chennai customers. Other branches cannot issue the letters. Effect on reports. When enabled, SAP selects documents belong to the local company code based on account assignments. Like a summary, settings checked, dunning and correspondence process locally, branch level. If unchecked, centralized processing, corporate level. So this is a summary of indicator for local processing. The next one is indicator for periodic account statements. This indicator is SAP controls whether the customer or vendor should receive periodic account statements such as monthly statements, quarterly statements, yearly statements. When enabled, this customer or vendor will be included automatically in the next periodic account statement run. How it works? If the indicator for periodic account statement is on, then the business partner will receive a statement at regular intervals. Their open items and balances will appear on the printed emailed statement. They are automatically selected when running daily monthly processing. If the indicator is off, the partner will not be included in regular statement unless selected manually. The typical business scenario example, a company with 5,000 customers want to send monthly account balance statement to all customers. Statements should include outstanding invoices and payments. By enabling this indicator in the customer master, SAP automatically identifies the customer during if the FY 27 period account statement run. So what it controls? Setting is on, checked, meaning partner receives periodic account statement. If unchecked, which is off, partner is excluded from automatic statement runs. So the next field is account memo. Account memo is a free text note field used to store important internal information about the customer or vendor. This text is visible only within SAP, is not printed on invoices or statements or external documents. Helps accounting and finance users remember special instructions or remarks. The typical use cases: example of what might be entered in the account memo: customer pays only after 45 days, vendor gives 5% cash discount for bulk purchase, customer under legal monitoring, follow before dispatch, do not ship to old warehouse address, expect payment delays, verify the credit before dispatch. So these are all the typical use business cases for account memo. So we discussed elaborately each and every field under the vendor correspondence in company code data in our vendor master. Thank you. In financial accounting and controlling, vendor master company code data, the fourth topic is vendor status. In vendor status, the field number 1, central posting block, all company codes. Central posting block is a control indicator in the customer or vendor master that prevents all postings for the vendor or customer in every company code of the client, such as invoices, credit memos, payments, etc. When this box is ticked, no FI posting can be made, applies globally across all company codes. The master record remains active but blocked for transactions only. The purpose: it is used when the business relationship is temporarily stopped, the customer or vendor is under investigation, dispute, or credit hold, the company wants to prevent new accounting documents until verification, vendor or customer is closing or no longer used. So in these 4 different situations, we used this central posting block for all company code level. Effects: once activated this option, no new documents can be posted. Existing process like a payment run, F110 or dunning level will also stop. Master record cannot be used for normal accounting activities. So the difference from other blocks: the block type, posting block company code level, blocks transactions only in one company code, central posting block, block postings in all company codes, purchasing and sales block, blocks transaction only in MM procurement or SD modules for sales. The next field is posting block for company code. Posting block for company code is a control indicator in the vendor or customer master that prevents FI postings for the specific business partner in one company code only, such as invoices, credit memos, payments, etc. It does not affect other company codes. Master record remains active but blocked for transactions in the selected company code only. The purpose: used when business transactions need to be temporarily stopped for a customer or vendor in one specific company code. Account is under audit or verifications, outstanding issues or dispute exist. Vendor or customer is to be phased out in the company code but still used elsewhere. Effects: if this posting block is active, no accounting entries can be made under the T code FB60, FB70, F-02, Miro, F110, etc. Payment run and dunning will ignore the partner. Other company codes can still post if not blocked. The difference from central posting block: only one company code and it is only local block. When you are using the central posting block, then it is blocked for all company code in the client and it is a global block. So this is the difference between posting block at company code level and posting block at central blocking, which is all company code. So the next one is deletion block for master record, company code level. So deletion block at the company code level is a flag in the customer or vendor master that prevents the master record from being marked for deletion or removed in that company code until certain checks are completed. It ensures the account is not accidentally deleted, posting, payment and reporting integrated is protected. This block applies only to one company code, not the entire client. The purpose of this line item or the field used when open items, balances or transactions still exist and management wants to review the account before deletion and the account is still linked to ongoing business processes and the vendor or customer should not be removed yet. When it does, when this block is activated, the system does not allow the deletion flag to be set for that company code. The user must first remove the block before deletion. The master records remains active. So the difference from deletion flag: item deletion flag stop the user from marking an account for deletion. So deletion flag marks the account as deleted, after which no new postings are allowed. So this is the difference between deletion block and deletion flag. The next field, deletion flag for master record, company code level. So a deletion flag at company code level is used in SAP to mark a customer or vendor master record as deleted in a specific company code. After this flag is set, the master record cannot be used for new postings such as invoices, payments, credit memos, etc. And the master data still exists in the system but is treated as inactive. You can still view old transactions and reports. This deletion flag affects only that one company code, not the entire client. Purpose of this field used when the business relationship with the customer or vendor is completely stopped in that company code. No future transactions are expected. All open items are cleared. Master data needs to be cleaned up. What it does: when this flag is activated, new FI postings are no longer allowed. Payment run F110 and dunning exclude the account. Master data does not appear in normal input searches. The record remains in the system for audit and history purpose only. The account is finally removed only after achieving the existing business transactions data. So the difference between deletion flag and deletion block. So the difference from central deletion flag. So the deletion flag is marks the account as a deleted, no new transaction allowed. But deletion block prevents setting a deletion flag used for protection before deleting. So the difference from central deletion flag: company code deletion flag applies only to one company code. Central deletion flag applies to all company codes in a specific client. So whatever the company code available in that specific client, all the company code is going to be applied in the central deletion flag. So the first one is you can apply for only one company code, the other company code which will not affected at any cost. So this is about vendor status, topic number 4 under the company code data. Thank you. So the next one, financial accounting and controlling FICO, vendor master, especially in company code data. Step number 5, vendor withholding tax. Under the vendor withholding tax, the first topic, indicator for withholding tax type. Indicator for withholding tax type is SAP is used to specify which kind of withholding tax applies to the vendor or customer, such as income tax, service tax like a TDS, dividend tax, contractor tax, professional fees tax, etc. It tells SAP what category of TDS or withholding will apply when invoices or payments are posted. The purpose This field activates withholding tax for the business partner, determines how tax is calculated, controls the tax rate, base amount, exemptions and posting rules, allow multiple tax types for the same vendor if it is applicable. Example, a vendor may have like a type 43 like a TDS on contractor, maybe type 52 TDS on professional fees. SAP will apply the correct one based on this indicator. So where it is used in FI posting FB60 and Miro and F-02 vendor invoice and payment run F110, then adjustment entries, tax reports, for example statutory TDS reports. So the next field is text 40 characters long. Meaning of this field is a free text field that allows users to enter up to 40 characters of descriptive information related to the vendor or customer. It is usually used to store short notes, labels or reference text that is useful for accounting purpose. The text can be used for additional internal remarks, identification notes, short descriptions, business partner reference codes, information that does not fit into fixed fields. It is visible to SAP users but not normally printed on external documents unless specifically configured. So where it is found, this field may appear in vendor master, customer master, withholding tax details, certain document screens. So when we talk about the characteristics, maximum 40 characteristics, free format like letters, numbers, symbols. You can use alphanumeric, there is no any restrictions. Optional field used only for internal record informations. Examples, some typical entries: TDS exempt for financial year 2025, preferred transport vendor, works with the Chennai branch only, PAN pending submissions, annual contract vendor. The next field is withholding tax code. The withholding tax code in SAP defines the specific rules and percentage rate of withholding tax TDS that should be applied to a vendor or customer. It determines tax rate percentage and calculation base like a gross or net amount and rounding rules and posting accounts and when and how tax should be deducted. It works together with the withholding tax type. The purpose of this withholding tax code: SAP uses the withholding tax code to automatically calculate TDS or withholding during invoice or payment posting, and number 2, post the tax amount to the correct GL account. Number 3, ensure compliance with government tax regulations. Number 4, generate reports for statutory returns. So here it is the example: withholding tax type 43, withholding tax code 01, meaning TDS on contractor at 1%. Tax type 52, tax code 02, TDS on professional fees at 10%. Tax type 52, tax type 54, tax code 03, TDS on commission at 5%. If a vendor is linked to withholding tax type 43 and withholding tax code 01, so SAP knows deducted 1% TDS, use the specified posting accounts, apply during invoice and payment. So when it is used, withholding tax code is applied in invoice posting like the T code FB60, Miro FB70 and F-02, and payment run F110, adjustment postings, reporting statutory compliance, and data stored. Examples of rules inside a withholding tax code: tax percentage, minimum taxable amount, surcharges and cess, chapter or section reference, GL accounts for tax posting, whether tax is at invoice or payment. These are all the informations stored under the data, and difference between withholding tax type and withholding tax code. Withholding tax type, category of tax, for example TDS or contracts or fees or rent. Withholding tax code specify rate and calculation rules under the withholding tax type. So the next field, indicator subject to withholding tax. So the subject to withholding tax indicator in SAP specifies whether a vendor or customer is liable for withholding tax, which is nothing but TDS in India. If this checkbox is selected yes, SAP will calculate and deduct withholding tax during invoice or payment posting. Not selected no, SAP will not apply withholding tax even if the configuration exists. So the purpose, this indicator is used to activate withholding tax calculation for the business partner, ensure proper TDS deducted based on legal requirements, prevent tax calculation for exempt vendors or customers. The typical business scenarios, if selected yes, vendor is liable for withholding tax such as contractors, professional service providers, rent or commission service suppliers. If not selected no, vendor is not subject to TDS. For example, vendor exemption under government rules, foreign vendor not taxable in the country, one-time vendor for small non-taxable purchases, exempt companies with valid exemption certificate which is provided by government bodies. So where it is used during invoice posting, FB60, Miro, FB70, F-02, payment run, F110, adjustment and reversals. If enabled, SAP checks withholding tax type and withholding tax code, recipient type, exemption limits. All these four field SAP will select if the subject is selected yes. What SAP does internally? When it is enabled, SAP reads withholding tax type and withholding tax code, calculates TDS, posts withholding tax to proper GL accounts, store details in table like with underscore item. The next field is type of recipient. The type of recipient is a field in SAP's withholding tax setup that identifies the legal or business category of the vendor or customer who is receiving the payment. Different recipient types may be taxed differently based on government regulations. The purpose of type of recipient, this field helps SAP apply the correct withholding tax rules, exemptions and rates, distinguish tax treatment between different kind of payees, ensure compliance with statutory requirements. So the examples, some possible recipient types vary by country. So the recipient type is individual, the meaning is a person, freelancer or consultant, etc. And the recipient type is a company, registered business or legal entity. If the recipient type is partnership, then LLP, firm or partnership. If the recipient type is government, then the government body or department. If it is NGO, trust or non-profit organizations. Foreign vendor subject to different tax rules. These are all the examples. Different countries may define different recipient types based on the income tax law. So where it is used, again SAP checks type of recipient during invoice posting, FB60, Miro, F-02, FB70, all these T codes, and payment runs, F110, withhold tax reporting. It helps determine applicable TDS percentage, minimum taxable limits, whether exemptions apply or not, posting logic. So the next field is withholding tax identification number. The withholding tax identification number is the official tax registration number of the vendor or customer used for withholding tax, which is nothing but TDS purposes. In India, when we talk about withholding tax, which is nothing but TDS, we are talking about TDS, tax deducted from the source. It is issued by the government tax authority and uniquely identifies the vendor for tax reporting and compliance. So the purpose of this withholding tax identification number is SAP stores this number so that it can be printed on statutory documents like TDS certificates. It is includes in government tax filings and reports. Auditors and authorities can verify vendor tax status. SAP can validate exemption or tax applicability. These are all the purpose to use this withholding tax identification number. Examples: the purpose and format vary by country. So in India, PAN number, permanent account number is used. In US, EIN, employer identification number or SSN is used. In UK, UTR, unique taxpayer reference number is used. In Germany, so tax number or VAT ID. In Australia, ABN, Australian business number. Like this, these are all the examples. Country based, the number is going to change. When SAP uses it, SAP prints this number in TDS certificates, withholding tax reports, payment advice, statutory returns, during audits or reporting. This helps uniquely identify the vendor or customer. So the technical informations, it works along with withholding tax type, withholding tax code, exemption details if maintained, data stored in vendor master table like NLF, BW, LF, B1, etc. So the next field is exemption certificate number. The exemption certificate number is SAP is the reference number of the official government issued certificate that exempts a vendor or customer from withholding TDS either fully or partially. This certificate is usually issued by the tax authority when the vendor qualifies for reduced tax deduction, qualifies for zero tax deductions, has special approval for exemption for a certain period. Purpose: this number is stored in the SAP so that the exemption can be legally validated. The number prints on statutory tax documents such as TDS certificate. Authorities or auditors can cross-check the exemption status. SAP knows not to deduct tax during invoice or payment posting based on exemption rules were used in SAP. During vendor invoice posting FB60 Miro, customer billing FB70, payment trends F110, withholding tax reporting, if the exemption conditions are satisfied in SAP, applies reduced or zero withholding tax, reflects the exemption reasons in tax reports. So these are all the used cases. Example, real life examples of exemption certificates. In India, the section 197 lawyer or nil TDS certificate. In US, W9 exemption declaration. In UK, tax arrangement approval for HMRC. In Germany, certificate for withholding relief under double taxation treaty. The typical scenario: a contractor submit a government certificate that allows TDS at 0% up to 10 lakh until 31st March 2026. You enter exemption certification number, validity dates, exemption limit and percentage. SAP ensures no tax deducted within the approval limit, which means until 31st March 2026 for up to 10 lakh rupees. There is no TDS, which is 0%. So the next field is exemption rate for batch input. Exemption rate for batch input in SAP, especially in vendor master withholding tax type, which means it is the percentage of tax exemption that applies to a vendor when entering data through batch input, such as during mass uploads, data migration, recording programs, BDC, interfaces like LSMW, BABI, etc. Why it is used? If a vendor has a tax exemption certificate, they may not be required to pay full withholding tax. So instead of the normal withholding tax rate, for example 10%, SAP allows you to specify an exemption percentage such as 100% exemption, no tax deducted, 50% exemption, only half of the tax applies. So the example, normal TDS rate is 10%, vendor exemption rate is 6%. So effective tax calculated 10%, multiply with 100 minus 60, which is equal to 4%. Okay, so the normal rate is 10%. So vendor get exemption 60%, which means you can apply for only 4% for a specific vendor. In summary, exemption rate for batch input equal to a percentage used during mass data entry to reduce or fully waive withholding tax for a vendor based on exemption documentation. So the next field is date on which exemption begins. What it is? The start date of the tax exemption period granted to a vendor for withholding tax. From this date onward, SAP will apply the reduced or zero tax rate based on the exemption details. Why it is needed? Vendors who have a TDS exemption certificate, a lower deduction certificate, or a temporary tax relief or exempt only for a defined time. SAP must know when this exemption becomes effective. Example, if a vendor received an exemption validity from April 1, 2025 to March 31st, 2026, then date on which exemption begins is April 1, 2025. Date on which exemption ends is 31 March 2026. During this period, SAP will apply the exemption percentage instead of the full tax rate. In simple words, the date on which exemption begins equal to the first day from which the vendor's withholding tax exemption becomes valid in our SAP system. So these are all the field which is coming under vendor withholding tax in company code data in our vendor master. Thank you. So in vendor master company code data, topic number 6, vendor text. Under the vendor text, the first field is language key. The code that identifies the language used for communication, printing and display for a customer or vendor master. Why it is important? The key determines the language in which invoices, statements, dunning letters and correspondence are printed. This language for description, the language for descriptions and text fields were supported. The default language for system communication with that business partner. Examples: the common SAP language keys: English EN, German DE, French FR, Spanish ES, Tamil TA. Like this, for each and every languages there is a 2-digit key. By using that 2-digit key, you can select the proposed language. The next field is text ID. What is text ID in SAP Vendor Master? A text ID is a code that identifies a specific type of text stored in master data or documents. It helps SAP classify and organize different type of long text. Where it is used? The text ID appear in customer master, vendor master, material master, sales orders, purchase orders, billing documents, and examples of where text ID is used. Let's say sales notes, delivery notes, internal notes, purchase instructions, technical descriptions. These are all the used cases. In example, why text ID is needed? It helps SAP store multiple different text separately, retrieve the right text for printing forms, for example, invoice, PO, delivery, etc. Avoid mixing up different text purposes. Example of text IDs: 001 sales order text, 002 delivery text, 003 invoice text, 004 internal note, Z001 customer specific remark. Like this, you can create multiple text ID with the descriptions based on our client requirement. The next one is short text and a long text. A short description field with a limited character length, Store directly in the master data table used for quick identification of the record where it is used. Material master, for example, material short text, vendor master and customer master descriptions, general ledger account short descriptions, sales and purchase document item short descriptions. The purpose to quickly understand what is the master record is about without opening additional screens appears on reports, drop-down menus and selection list. The long text, what it is? A detailed description field without strict character limits, stored separately in a SAP text table, not directly in the main master table. Can contains multiple lines where it is used. Material master long descriptions, customer and vendor instructions, purchase order line item text, work center description, routing operation notes. The purpose to store detailed information that does not fit in short text field such as specifications, instructions, usage informations, quality notes, terms and conditions. So the simple difference between short text and a long text. So one is length. When we talk about length, in short text is limited characteristics, in long text almost unlimited. So in the future side, stored in main master table when we talk about short text, separate text table when we talk about long text. Another one is usage. Short text for identification, long text for detailed notes or instructions. The another one is displayed in list and search screens for shortcut, drill down view or text editor for long text. So this is a simple difference between short text and long text. Very simple explanation. Short text equal to title, long text equal to full description. The next field is more text exists. What it indicates? This is the system generated indicator shown in master data such as vendor master, customer master or purchase order items. It tells you that additional long text has been maintained for this record. The location, you may see this indicator in vendor master, customer master, material master, purchase order item details, sales documents, work centers, routings, etc. So these are all the locations you can able to see the more text exist options. The purpose to inform the user that long text or notes are stored even if they are not immediately visible on the screen, helps users know there is more information to view before making business decisions. How it works? When the users enters long text in the text editor, for example via button text, SAP automatically set the flag more text exists. If the long text is deleted, the indicator will disappear automatically. The very simple explanations, more text exists means extra notes have been entered and are available to read. If you want, I can also show where the long text is stored in SAP tables. For example, the table is stxh/stxl. So these are all the examples. So this is about vendor master text informations. Thank you. So under the vendor master company code, 7th one is vendor country specific enhancement. The first field is section code. Section code in SAP used vendor and customer masters. What is section code? Section code is a field used mainly in withholding tax TDS configuration, especially in countries like India. It helps SAP identify the legal section of the Income Tax Act under which withholding tax TDS is applied. The purpose, the section code tells SAP under which tax law section the vendor payment is taxable, how TDS should be calculated, which tax rules and rates apply. These are all the purpose where it is used. You will normally find the section code in vendor master and customer master and withholding tax configurations. Then TDS postings and reports. So the example forms 26Q, 27Q, etc. So these are all the example of section code in India, especially used for TDS. TDS is nothing but tax deducted from source of income. The section code 194C, payment to contractors, 194J, professional services, 194I, rent, 192, salary, 194H, commission, 195 for payment to non-residents. Why section code is important? It ensures the number one, correct TDS percentage. Number two, proper reporting in statutory returns. Number three, accurate compliance with tax laws. Number four, correct classification in TDS certificates. The very simple explanation, section code identifies under which government tax rule the TDS should be applied for a vendor or customer. If you want, I can also explain where section code is configured in SAP, how it flows during invoice posting, which table stores it. The next field is exemption certificate number. We discussed in previous sections. You can see the previous video about exemption certificate number. The next we can go for exemption rate. Exemption rate is the percentage of tax that is exempted for a vendor or customer from withholding tax. So withholding tax, which is nothing but I'm talking about TDS in India. Why it is used? Sometimes a vendor has a government approved tax exemption or is eligible for reduced TDS rate, has submitted a certificate allowing partial or full exemption. In such cases, SAP uses the exemption rate to calculate only the taxable portion. Example, vendor total invoice value is 1 lakh rupees. So the normal TDS rate is 10%, exemption rate is 60%. So the taxable portion is 40% of the invoice value, which means the TDS calculation is look like this: 1 lakh multiply with 40% into multiply with 10% equal to 4,000. So in normal TDS, 10% means it should be 10,000. So the government gives 60% as exemption rate, then you can get only 40% TDS, which means 4,000 rupees. So where it is maintained, you enter the exemption rate in vendor master withholding tax tab. This works along with exemption certificate number, exemption start date and end date. So very simple meaning, exemption rate tells SAP how much of the vendor's payment is not subject to withholding tax TDS. If you want, I can also explain flow in accounting entry or SPRO configurations. So the next field is date on which exemption begins. This field also already discussed in the previous videos, so you can go through that. Anyway, let me give short descriptions. This is the date from which the vendor is allowed to receive TDS benefits or exemption benefits. So this is the date on which exemption begins, which is nothing but the start date of the exemption benefits or TDS benefits. So date on which exemption ends. So this is nothing but date on which exemption ends is the last date on which the vendor is eligible for TDS exemption or reduced TDS rate. So the next field is reasons for exemption. Reasons for exemption is a field used to record why a vendor or customer is exempt from withholding tax TDS or allowed a reduced deduction rate, why it is needed. Government authorities may grant tax relief for special tax status, government or public sector organizations, charitable institutions, lawyer deduction certificate, startup tax benefits, export service exemption, temporary tax relief due to policy. SAP need this information for compliance, legal reporting and audit trails, justification for tax benefits. So how SAP uses it? When you post a transaction, SAP checks the exemption settings, applies reduced or zero withholding tax, stores the reason for reference in reports. This ensures transparency and supports audit documentation. So the typical examples: Ration code 01 meaning lower deduction certificate issued by Income Tax Department.
Reason code 02 fully exempt under government notification. Reason code 03 charitable non-profit institution. 04 export service exemption. 05 government department supplier. 99 other and special cases. Like this, you can create multiple reason code based on your client requirement in real-time business scenarios. So the simple understanding, reason for exemption explains why the vendor is not being charged fully or any withholding tax. Indicator for withholding tax type. What is it? The field is used to identify whether a particular withholding tax type is active or applied for the vendor or customer. It tells SAP whether the withholding tax should be calculated, which tax type applies, for example, TDS on services, TDS on rent, or TDS on interest, etc. Why it is needed? A vendor may be a fully taxable, partially exemption, not subject to tax under certain conditions. This indicator controls whether SAP should calculate withholding tax or skip withholding tax, or sometimes calculate partial withholding tax. How SAP uses it? If this indicator is checked active, the withholding tax type is applied during posting and a tax is calculated. If not checked, SAP ignores this withholding tax type for the vendor. So the example in India TDS, you may have multiple TDS types. Let's say T1 TDS on contract section 194C, T2 TDS on professional fees section 194J, T3 TDS on rent section 194I. For a vendor, if only T1, T2 are active, tax applies only under 194C or 194J. If none are active, vendor is not subject to TDS. So very simple understanding. This indicator tells SAP whether a specific withholding tax category should apply to the vendor or not. The text 40 characters long, which is nothing but you can enter up to 40 characters informations about your withholding tax type. So this is we discussed detailedly just before the video. So withholding tax code, this is also discussed already. Threshold amount for exemption India. So this is also discussed already. Let me recall. This is an important field. The threshold amount for exemption is the minimum payment value up to which no TDS is deducted as per Indian income tax rules. SAP uses this field to automatically skip TDS deductions until the vendor's payment exceeds the defined limit. Why this field is needed? In India, TDS is not always deducted from the first rupee. Many TDS sections have statutory minimum limit, which is called thresholds. Example, contractor payments section 194C, professional fees section 194J, rent section 194I, etc. If payments do not exceed the threshold, no TDS is deducted. How SAP uses it? During invoice posting, SAP, the number one, SAP accumulates the vendor's payment for the financial year. Number two, if total payments less than the threshold limit, no TDS is deducted. Number three, if total payment is exceed threshold limit, the TDS applies only on the excess amount. Example, the threshold for section 194C contractor, threshold is 30,000 rupees per bill. Yearly threshold 1 lakh rupees. Case 1, invoice amount is 25,000, does not cross threshold, so no TDS will be debited. Case 2, total payments so far 90,000, new invoice 20,000, total value is 1,10,000. Threshold crossed, so TDS applies on 1,10,000 minus 1 lakh equal to 10,000. So very simple meaning, you can able to pay only TDS for the 10,000 rupees excess amount. So threshold amount for exemption is the limit below which TDS is not deducted. Currency key we already discussed in detail before videos. So this is about vendor country specific enhancement. So until this topic, under the vendor master, company code chapter is over. The next we need to start with purchasing. Thank you. In vendor master, now we can go for purchasing. Under the purchasing, the first topic, purchasing data. Under the purchasing data, the first field, purchase order currency. What is it? Purchase order currency is the currency in which the PO is issued to the vendor. PO is nothing but purchase order. This currency controls how prices are entered, how calculations are done, how the vendor is paid, where it is appears. You can see it in vendor master, purchasing data, purchase order header, and conditions in pricing. If the vendor master, this currency is usually a default value, but it can be changed at PO level. Function, the purchase order currency determines the currency used for item prices, currency for taxes, discounts, freight charges, value posted in SAP MM, foreign currency conversion if different from company code currency. Example, the company code currency is INR, the vendor currency is US dollar, PO is created in US dollar, item priced in US dollar, SAP converts US dollar to INR during posting using exchange rate. If vendor is domestic, PO currency is usually the same as company code currency, example INR. If vendor is foreign, PO might be issued in foreign currency such as US dollar, euro, Japanese yen, British pound, like that. SAP then uses exchange rates to convert values from this different currency to INR. The very simple meaning, the purchase order currency tells SAP in which currency the PO is created and the vendor will be billed. The next field is terms of payment key. What is it? The terms of payment key defines the payment conditions agreed with the business partner. Here business partner is nothing but vendor or customer. It determines when payment is due, cash discount eligibility, installment rules if applicable, where it is used. You will see it in vendor master, customer master, purchase orders and sales orders. Accounting documents like invoices, credit memos. The purpose of the terms of payment key. The terms of payment key helps SAP, number 1, calculate the due date. Number 2, determine cash discount periods and percentages. Number 3, control payment processing and scheduling. Number 4, ensure consistency with the business agreements. So these are all the examples. Key number 001, pay immediately, no cash discount. 002, 2% discount if paid within 10 days, net in 30 days. 003, net due in 45 days. Is that 001? Customer specific payment rule. Example calculations. The terms of payment, 2% discount if paid within 10 days. If you paid within 30 days, you need to pay the net amount. The invoice date is 1st January 2026. Discount valid until 10th January 2026. Net due date 31 January 2026. If you pay within 10th January, you can get 2% discount. So if you pay within 31st January, you need to pay the entire amount, net amount. SAP computes these automatically based on the key. How SAP determines it? The priority order. In document level, PO or invoice. Number 2, if blank, vendor or customer master. Number 3, if blank, company code default settings. Very simple meaning. Terms of payment key tells SAP how and when the vendor or customer must be paid, including discount and due date rules. The next, Incoterms version. What is it? Incoterms version tells SAP which edition of the international Incoterms rules is being used in purchasing or sales documents. Incoterms are global commercial delivery terms published by the International Chamber of Commerce, ICC. They define responsibility for transportations, transfer of risk, who pays freight, insurance, handling charges, etc. Why this version is needed? Incoterms are updated every few years, for example 2000, 2010, 2020. The rules may change between versions. SAP needs to know which rule set applies to the PO, sales order or contract. for legal and compliance purposes to avoid confusions during logistics and shipping. So where used, you will find Incoterms version in vendor master purchasing, customer master sales and purchase orders, sales orders, delivery documents and billing documents. So the next one is example. Let's say vendor PO uses Incoterms FOB, Incoterm version 2020. This means SAP follow the 2020 ICIC rules for FOB. Very simple meaning. Incoterm version tells SAP which year's international shipping rules apply to the transactions. Example either 2010 or 2020. So the next one is Incoterms. What is it? Incoterms in SAP represent the standard internationally recognized delivery or shipping term agreed between the buyer and the seller. So the Incoterm is nothing but standard internationally recognized delivery or shipping term. Short form used to call as Incoterms. Example include EXW, EXWorks, FOB, free on board, CIF, cost insurance and freight, DAP, delivery at place, FCA, free carrier, CPT, carrier paid to. These are all the examples. This field usually contains the 3-letter Incoterm code. Purpose: Incoterm defines who is responsible for transport, who pays freight, insurance, duties, point where risk transfers from seller to buyer. It helps avoid confusion in international trade. Where it is used, you will find the Incoterm in vendor master purchasing data, in customer master purchase orders, sales orders, deliveries and billing documents. So the relationship, Incoterms in SAP are generally split as part 1 and part 2. Part 1 is Incoterm code, example FOB, CAF, EXW. Part 2, which is nothing but location, example Chennai port, Mumbai warehouse, like this. So here part 1 is FOB. What is meant by FOB? Free on board. Part 2 is Chennai port. The Incoterms CIF meaning seller pays cost, insurance and freight up to the destination port. This is called CIF, risk transfers once goods are loaded. Very simple meaning, Incoterms is the standard 3-letter trade term that defines delivery and shipping responsibility in international or domestic businesses. The next field is identifier for Incoterm location 1. Identifier for Incoterm location 1 in SAP is a field used to store a short code or identifier referencing the first Incoterm location applicable to the transactions. Meaning, it helps the system link a standard identifier like a code to the physical locations entered as a Incoterm location 1. This identifier ensures consistent reporting, processing and interpretation of location data where used in sales order, purchase order, delivery, billing documents, etc. Works together with Incoterms part 1 and Incoterm location 1. For example, the Incoterm part 1 is FOB, free on board. Incoterm location 1 is Chennai. Identifier for location 1 is CHN. Purpose: standardize location references, supports EDI communication, useful for logistics and custom reporting. The next field is Incoterms location 1. Incoterm location 1 in SAP is a field used to enter the primary location associated with the selected Incoterm for a sales or purchasing transactions. Meaning, Incoterm location 1 specifies the main place where risk or responsibility transfers between buyer and seller based on the Incoterms. Where it appears, you will see the field is sales order, purchase orders, deliveries, billing documents, vendor and customer master data. So this example, Incoterm FOB, the location is Chennai port, meaning seller responsibility ends at Chennai port. CAF, location is Mumbai. Seller must deliver to Mumbai port and cover cost plus insurance. up to Mumbai. EXW Bangalore factory, the location. Buyer picks up goods from seller factory. So here buyer is the responsible from picking the product from the factory locations. So like this, based on the Incoterms, the responsibility will change. Purpose helps identify the exact place where logistics responsibility changes. Ensures consistent legal and shipping interpretation. Required for international trade compliance, customs and EDA. The next field is identifier for Incoterm location 2. Identifier for Incoterm location 2 is a technical or system field in SAP used to store a short code reference for the secondary Incoterm location. The meaning, this field contains a key or short code representing the second location related to the Incoterm, usually defined as final delivery location or destination city or detailed receiving point. It works together with Incoterm part 1 like FOB, CF, EXW. Incoterms part 2, description text, Incoterms location 1, first major location, Incoterms location 2, detailed or final destination, often required for ICC 2020 terms. So here the example, Incoterms DAP, location is Chennai, identifier for location is TC001, location 2 is Amazon Fulfillment Center Block 2. Why it exists? Some countries and shipping rules required two levels of location detail such as port plus warehouse, venue plus building, city plus facility code. Instead of retyping the full location again, SAP allows a short reference that maps to the detailed locations. Where it is used, you will see this field in sales order, purchase order, delivery and shipments, vendor and customer masters. The next one is Incoterm location 2. In Incoterms, a location refers to the physical point where the responsibilities of the seller and buyer change. Location 1 usually the seller premises or point of dispatch or shipment. Location 2 usually the buyer's premises or destination point where the goods are delivered. So Incoterms location 2 is the place agreed upon in the sales contract where the seller's responsibility ends and the buyer's takes delivery of the goods. Example, if the term is DAP, delivery at place, location 2 is the place of delivery at the buyer's site. How to fill Incoterm location 2 in a document SAP system? So the field is Incoterm, example FOB, CAF, DAP, XW. Incoterm locations point of shipment, seller's factory or port. Incoterm location 2, destination point, buyer's warehouse, port or city. This is how you need to fill up the data. Example, Incoterms DAP, which is nothing but delivered at a place. So the location 1 is Chennai port, location 2 is Bangalore warehouse. So in SAP SD module, you enter this in the sales order shipping tab Incoterm. The location 2 field should match the delivery address of the customer or the agreed drop-off point. So here you can see the difference between location and location 2. Aspect definition, point where goods are handed over by seller, usually shipment. So the location 2, points where goods are delivered to buyer, responsibility transfer. Responsibility, seller's responsibility starts, seller responsibility end. Risk is with seller until this point, depends on location. Risk passes to buyer, depends on location, depends on Incoterms. Example, seller's factory or port, buyer's warehouse, port or city. So this is about Incoterms location 2. The next field is minimum order value. Minimum order value refers to the lowest amount a customer must purchase from a seller in a single order for the order to be accepted or processed. It commonly used in sales, e-commerce and B2B transactions to ensure profitability and manage logistics. Key points. The number 1, definition. The minimum monetary amount required per order. Sometimes instead of amount, we can use minimum quantity. Number 2, purpose. Ensures The sellers covers processing, shipping and handling cost. Encourages large orders for economies of scale. Helps filter small and profitable orders. Number 3, how it is applied. Example 1, minimum order value is 500. Any order below 500 cannot be placed. Example 2, 10 units. Customer must order at least 10 units per product. Number 4, difference from minimum quantity. Minimum order value is equal to based on the total order price. Minimum quantity equal to based on number of items regardless of price. Number 5, use in system like SAP e-commerce can be configured in pricing or sales order checks. Alerts customer if order is below to the MOV, minimum order value. The next field is responsible salesperson at the supplier's office. Responsible salesperson at the supplier's office refers to the specific person at the supplier's side who is accountable for managing the sales process for a particular customer or order or region. This is commonly used in sales ERP systems like SAP and purchase or sales documentations. Key points. The number 1, definition. The salesperson officially assigned by the supplier to handle inquiries, orders and coordination with the buyer. Act as a point of contact for the customer at the supplier's office. Number 2, roles and responsibilities. Receiving and processing sales orders and communicating which customer regarding price, delivery dates and order status, and coordinating internally with production, logistics and finance to ensure smooth order fulfillment. Resolving issues like delays, quality concerns or returns. Maintaining customer records and reporting sales performance. Number 3, usage in system in SAP. In SAP SD sales and distributions, this is often called salesperson or sales employee linked to the customer master or sales order. Helps in tracking sales performance, commissions and responsibilities. Can be used for workflow approvals if the salesperson need to authorize orders. So these are the examples. Difference from salesperson to buyer's office. Difference from responsible salesperson at buyer's office, responsible at supplier, responsible at buyer. Manage the order from the supplier side, manage order on buyer side. Ensures delivery, billing and order fulfillment. Ensure order placement, payment and feedback. Coordinates internally at supplier, coordinates internally at buyer. So these are all the responsibility at supplier end and buyer end. So the important tips, always enter the full name and employee ID if applicable in documents and ERP system to avoid confusions, especially in multi-office suppliers or large organizations. The next one is supplier's telephone number. Supplier telephone number is simply the contact phone number of the supplier or vendor used for communication regarding orders, delivery, payment or other business inquiries. Key points. Number 1, the purpose enables the buyer to contact the supplier quickly for order confirmations, shipment, tracking or issue resolution. Often required in purchase orders, contracts, shipping documents or ERP systems. Used for emergency communication, especially if emails is delayed. Number 2, format include country code for international suppliers. Example, domestic India, so we start with 044 country code and you can enter the telephone number. Example, international USA, you can start with +1, then you can enter your telephone number. Where it is recorded, purchase order, vendor master in our SAP system under the MM module, supplier contact list or business directories, shipping and billing documents. These are all the use cases. Best practice number 4, keep the number up to date, check periodically, include a secondary number if available, example mobile or department line, specify extension numbers if needed. The important tips, in system like SAP, the supplier telephone number is stored in the vendor master address communication. This ensures automated communications for order confirmations. or alerts. The next one is our account number with the supplier. Our account number with the supplier refers to the unique identification or account code assigned by a supplier to your company. This is used for billing, payments, and tracking transactions between your company and the supplier. The key points, there are 4 key points. Number 1 is definition. When your company registers as a customer with a supplier, the supplier assigns a unique account number. This number identifies your company in the supplier's billing, invoicing, and ERP systems. Number 2, purpose. Ensures all invoices, payments, and orders are correctly linked to your company. Helps the supplier track your credit limit, payment history, and outstanding balances. Then facilitates efficient communication regarding order statements or disputes. Number 3, where it is used. Purchase orders often referenced to indicate which account the invoice should be billed to. Invoice and statements helps supplier match payments and orders correctly. ERP systems stored in vendor or customer master data, automated processing. Number 4, example. Your company ABC Private Limited, supplier XYZ Electronics. Supplier assigns account number XYZ ACC 1023. All invoices, credit notes, or payments will reference this XYZ ACC 1023. Number 5, best practices. Keep a record of all supplier account numbers to avoid confusion if your company deals with multiple suppliers. Always verify the account number or invoices before making payments. Include the account number in purchase orders when required. Tips in SAP system like in vendor master purchasing data tab, this is often stored as a customer account number or reference. Helps automate payment reconciliation and reporting. The next field is ABC indicator. The term ABC indicator is commonly used in inventory management, procurement, and ERP systems like SAP. It is part of ABC analysis, which classify items, suppliers, or accounts based on importance, value, or consumptions. So the ABC always classify based on the items, or based on the suppliers, or based on the accounts, based on the value, or based on the consumptions. There are different parameters to use this ABC analysis. The definition: ABC indicator assigns a category A, B, or C to an item or supplier or account. The purpose: helps prioritize management focus, procurement efforts, or stock control. So how items are classified? For example, category A, high value or high importance. So focus, tight control, frequent review, accurate forecasting. B, category B, medium value, medium importance, moderate control, periodic review. Category C, low value, low importance, minimal control, bulk handling, low priority. So the practical example, the material laptop annual value is 15 lakh rupees. The ABC indicator is A. Second one is printer, 3 lakh rupees, category B. And third example, mouse annual value is 30,000 rupees, category C in ABC indicator. Let's say classifications can be based on monetary value, consumption value, or criticality. Example, in inventory, total annual consumption is 1 lakh units. Item contributing 70% of the value is A category. Item contributing 20% of the value is B category. Item contributing only 10% of the value is C category. Usage in SAP. In Material Master MRP 1 or MRP 2 tab, enter the ABC indicator informations. So procurement and stock management. A items procurement stock checks tight inventory levels. B items standard control. C items minimal control, large safety check. Reporting and planning enables prioritizing purchase planning, vendor negotiations, and inventory audits. The tips: ABC analysis is a dynamic review periodically because consumption patterns change over time, which can change the ABC indicator. So the ABC indicator is a dynamic entity. It will change frequently. So you need to review the system periodically. Then based on the current status, you have to change this ABC indicator. A can change into B, B can change into A, or C can change into A sometimes. So you need to review periodically. Based on the current requirement, you need to change this indicator levels. The next field is shipping conditions. Shipping conditions refers to the specific items or requirements or rules agreed upon for transporting goods from the seller to the buyer. This includes how the goods will be shipped, who is responsible for cost and risk, and any special handling requirements. So the definition is defines the method, responsibility and conditions of shipping for an order. So generally used in sales orders, purchase orders, contracts and SAP SD or MM modules. So this is example. So the element is delivery items, indicates whether delivery is standard, express or partial, mode of transport, air, sea, road or through train, packing requirements, special packing needed for fragile, hazardous or perishable goods, responsibility risk, who bears cost and risk during shipment, often linked to Incoterms. Route or carrier, preferred carrier or shipping route if specified, insurance documentations, any requirements for shipment insurance or export-import documents. So these are all the key elements in the shipping conditions. Examples of shipping conditions: the standard delivery, delivered within 7 to 10 business days via ground transport. Express delivery, delivered within 2 to 3 business day by courier. Partial delivery allowed. The supplier can deliver in multiple shipments if stocks is insufficient. Hazardous material handling, special packing and documentation required. So the fourth one is usage in SAP. In SAP SD, shipping conditions are maintained in the sales order shipping tab. So they help determine route determinations, delivery scheduling and then transportation planning. Example, in SAP 10 is the standard delivery, 20 is the express delivery, 30 is the customer pickup. So the important tips: shipping conditions are closely linked to Incoterms, delivery priority and transportation planning. So make sure they are consistent across your sales order, contract and logistics documents. So this shipping condition is very important because it is linking multiple datas in your sales process. So the next field is indicator GR based invoice verifications. In GR is nothing but goods receipt. Is a term commonly used in SAP material management module for procurement and invoice processing. Let's break it down clearly. The definition: GR based invoice verification means that the invoice from the supplier can only be posted after the corresponding goods receipt is recorded. This ensures the payment is made only for goods actually received. Indicator: this is usually a checkbox or field in SAP that signals the system to enforce GR based invoice verifications. So the purpose: prevents overpayment or payment for goods not received, ensures accuracy in inventory and accounting, supports audit compliances and financial control. So how it works in SAP: create a purchase order, receive the goods, it is called post goods receipt, GR, supplier send invoice, post invoice verifications, IV. SAP allows invoice posting only in GR exist. Fifth one is payment is then processed to the supplier. So there are 5 steps. First one, create a PO. Second one, receive the goods against our PO. Third one, supplier will send the invoice. So you have to verify the invoice verifications. Then SAP allows invoice posting only if goods receipt is exist. The fifth one is payment is then processed to the supplier. So in SAP, in the PO items invoice tab, check GR based IV. If unchecked, invoices can be posted without goods receipt. So example scenario: PO 100 units of material X from supplier A, goods receipt 80 units received and posted in SAP. Invoice: supplier send invoices for 100 units. Result with goods receipt based invoice verifications. SAP allows invoice only for 80 units received, preventing overpayment. Okay, so the tips is GR based invoice verification is mandatory for high value or regulated items, but for low value or service items sometimes non GR based IV is used, but most of the items coming under GR based IV. So here the key concept: term, goods receipt, GR, confirmation in SAP that goods have physically arrived at the warehouse. Invoice verification, step in SAP MM where the supplier invoice are posted and matched against PO, purchase order and goods receipt. So three-way match: SAP checks purchase order, goods receipt and invoice before allowing the payment to the supplier. So this is also a very important field. So the next one is indicator whether discount is kind grant. Indicator whether discount is kind granted is a field used in sales procurement or accounting systems like SAP SD or MM module to record whether a non-cash discount, example goods or services instead of cash, has been given by the supplier or granted to the customer. So the definition is a discount in kind refers to giving goods, services or benefits instead of a monetary discount. The indicator is a checkbox or flag that marks whether such a discount applies for a particular transaction. So the purpose ensures proper billing and accounting for non-cash benefits, differentiates between the monetary discounts, example 5% offer, and goods or services provided free or extra, helps in tax calculations and complaints reporting. So the scenario: supplier sends 100 units but 5 extra units are free as a promotion, checked discount in kind granted. Customer receives 10% of invoice amount, unchecked cash discount not in kind. Supplier provides free packaging or accessories along with the main order, indicator is checked. Usage in SAP: SAP SD sales and distribution, found in sales order, conditions tab or billing document. Setting the indicator ensures the system calculates price and tax correctly. Reporting used to track promotions, freebies or incentives. The key points must be carefully set because it affects billing, total value of invoices, and number 2, inventory. If goods are given free, stock reduces. Number 3, tax reporting. Non-monetary discounts can have different tax treatment. Number 4, usually applies per item or per document depending on system configuration. The important tips: always verify with your finance or accounting policy whether a transaction qualifies as a discount in kind before checking the indicator, because it has both inventory and tax implications. So sometimes you can receive the product. For example, if you are purchasing laptop, you can get mouse as a free accessories, or sometimes you can purchase a laptop, you can get mouse with the 50% discount. So there are like this different scenarios. Based on the scenarios, you need to check with your finance and accounting policies, and you need to set up this indicator very carefully. The next one is profile for transferring material data via IDOC ProAct. The profile for transferring material data via IDOC ProAct refers to a configuration setup in SAP for transferring material master data from one system to another using an IDOC intermediate document, specifically the ProAct IDOC type. Let's break it down clearly. The number 1 definition: IDOC, which is nothing but intermediate document, standard SAP format for data exchange between SAP system or between SAP and external system. The ProAct refers to a specific IDOC message type used for material master data transfer. Profile: in SAP, a partner profile defines how data is sent, received and processed for a specific IDOC type and partner. So the profile defines which message type is used, how the IDOC is processed, which partner system receive it. So key components of the profile. Number 2, the component message type. The description is ProAct for Material Master. Partner type, example LS logical system, KU customer, LI vendor. Partner number, ID of the receiving system or partner. Process mode determines how the IDOC is processed, example create, update, Material Master. Output type and port specifies the transmission method, ALE, RFC or file. Direction, inbound or outbound. Inbound means receive, outbound means send. So the number 3, purpose, to transfer Material Master data like descriptions, units, classifications, valuations from one system to another system. Ensures data consistency across SAP system, for example development, production or testing, or from SAP to non-SAP. Automates Material Master update without manual entry. So these are all the purpose to use this IDOC ProAct. How it works: create or update material in the sending SAP system. Number 2, SAP triggers IDOC ProAct based on the partner profile configuration. Number 3, IDOC is sent via ALC, RFC or EDI to the receiving system. Number 4, receiving system process the IDOC, update its Material Master automatically. SAP transaction involved. So W20 partner profile setup, WE21 port definitions like RFC, file, etc. BD64 distribution model for ALE, WE19 test IDOC. So the number 5, example scenario. Company has two SAP systems, development system and a production system. A new material is created in development system. Outbound IDOC ProAct is triggered to send material data to production system. Production system receives and updates its Material Master automatically. The important tips: always test ProAct IDOCs in a sandbox system. First, because errors in Material Master data transfer can affect production inventory and procurement processes. So initially you need to test in the development server, then you need to transfer the data to the production server. So otherwise it is going to affect the production system, managing the inventory and procurement process, so due to the error. So the next field is indicator for service-based invoice verifications. The indicator for service-based invoice verification is a field used in SAP MM Material Management and Service Procurement to control how invoices for services are verified and posted. Let's break it down clearly. Number 1, definition. When this indicator is set, it tells SAP that the invoice verification is service-based rather than material-based. This means the system checks service entries via service entry sheet before allowing invoice posting, commonly used for purchase orders for services instead of goods. The number 2, key concept, service entry sheet, generally we used to call as SES, document created by the receiver to confirm service performed. Then invoice verifications, step where supplier invoices are posted in SAP. Then service-based IV, SAP allows invoice posting only after SES is approved. So number 3, purpose, ensure payment is made only for service actually delivered, avoid overpayment or incorrect payment for services, supports audit compliance and proper accounting. So the number 4, how it works in SAP, create a service purchase order in SAP. Number 2, service provider performs the service. Number 3, receiver creates a service entry sheet confirming the work done. Number 4, invoice from the service provider is received. Number 5, SAP allows invoicing posting only if SES exists in and is approved. So service entry sheet is very, very important in this entire process. The indicator found in PO, invoice tab, service based IV, checkbox. If unchecked, invoice can be posted without SES, not recommended for services. Generally not recommended for this service related business. Example scenario, PO, 10 hours of IT consultancy at 1000 rupees per hour. Service entry sheet 8 hours completed and approved. So invoice received for 10 hours. So the purchase order received for 10 hours, 1000 rupees per hour. In service entry sheet, which is nothing but actual work is done for only 8 hours, that 8 hours only approved in service entry sheet SES. Invoice received for 10 hours. With service based invoice verification indicator, SAP allows posting for 8 hours only, preventing overpayment. The important tips: service-based invoice verification is mandatory for service POs, especially in outsourced services, maintenance contracts or consultancy, because there are no physical goods receipt like a material-based IB. The next field is indicator supplier subject to subsequent settlement accounting is a field in SAP Material Management and Accounts Payable used for suppliers whose invoices are handled under special settlement procedures, typically related to down payments, advances or long-term contracts. Let's break it down one by one. There are 3 stages. Number 1 is definition. When this indicator is set, the system knows that the supplier's payment are not final at the time of invoicing. The supplier account is subject to subsequent settlement, meaning the invoice or payment will be adjusted or settled later. Common in scenario like construction contracts, long-term service agreements, advance payments. In these scenarios, you need to apply this indicator. The number 2 purpose: to track advance payments, progress payments and final settlements separately. Ensure correct accounting and reconciliation. Prevent double payment or posting errors in SAP. Number 3, how it works in SAP system. So the number 1, supplier is flagged with the subsequent settlement indicator in Vendor Master Purchasing Data tab. Number 2, when an invoice is posted, SAP treats it as a provisional or pending settlement. Number 3, during subsequent settlement, the system calculate final amount payable, adjust the vendor account, post the difference to the correct GL accounts. In SAP transactions, F-48 or F-54, down payments and clearing. In MRKO, settlement of GRIR differences, go to Vendor Master under the Purchasing tab, select the subsequent settlement checkbox. So the example scenario, step number 1, vendor A provides 3 months of maintenance services. Number 2, advance payment of 50,000 is made already. Number 3, invoice received for 1,50,000 rupees, partially settled against advance. Number 4, at month end, final settlement is done. Number 5, vendor account is updated, system post difference automatically. So this is example scenario. The important tips: this indicator is usually set for key vendors or contracts involving partial or staged payments. It ensures the SAP automatically handles subsequent adjustment and accounting, reducing manual errors. So the next field is comparison/agreement of business volume necessary. What is this? The term comparison/agreement of business volume necessary is generally used in procurement, sales or contract management. Often in your SAP systems, it indicates whether a formal check or agreement of the expected or actual business volumes between the buyer and the supplier is required. So we can break down a little bit. The number 1 definition, it signals that the company must compare planned, agreed or actual business volumes with the supplier before proceeding with certain actions. Helps ensure that targets, quotas or contract limits adhere to. Number 2 is control spending or procurement volumes against supplier agreements. Ensure contractual commitments are met. Example, minimum purchase or quantity or revenue. Avoid over ordering or exceeding agreed limits. Facilitate reporting and auditing of supplier performance. When it is used in framework agreements or long-term supply contracts, before posting orders or invoices, SAP may require confirmation of business volumes. For discount or rebates, tied to volume thresholds. Example, supplier gives 5% rebate if total order is greater than the 10 lakh rupees. In SAP systems, this can be checked. In SAP systems, this can be a checkbox or indicator in purchase order or contracts. So let's say in the practical example, the supplier A, there are two suppliers, supplier A and supplier B. The contract volume is 50 lakh rupees per year for vendor A. Actual volume 40 lakh. Comparison needed? Yes. Confirmation shortfall or adjust order. The action need to be taken for vendor A. Vendor B, 1000 units per quarter, but actual volume is 1050 units. The confirmation needed? Yes. Approve, excess or renegotiate. So these actions we need to take. And the fifth one is SAP usage, often linked with purchasing info records or contract management. The system can block further orders until volumes are compared or approved. Helps in automated reporting for rebates, penalties or contract fulfillment. The important tips, this indicator is particularly important for volume-based contracts where exceeding or not meeting agreed business volumes impacts pricing, discounts or penalties. The next field is revolution allowed. The term revolution allowed is commonly used in SAP accounting and inventory management. It indicates whether a material or asset or currency item can be revalued in the system to reflect current values. Let's break it down clearly. So the number one, there are 5 stages. Number one is definition. Revolution allowed, which is nothing but the system permits adjusting the value of an item in the sense it can be a material or asset or account to reflect current market price, exchange rate or valuation changes. Used in inventory management and asset accounting and finance, FI. Number 2 purpose, ensure financial records are accurate and reflect the true value or the current value. Maintain compliances with accounting standards like IFRS or GAAP. Adjust for price fluctuations, currency changes or market value changes. So usage in SAP. Number 1, material master under MM. Field indicates whether material valuation can be adjusted, useful for price fluctuations or periodic inventory revaluation. Number 2, asset accounting under the financial accounting. Field allows revaluation of assets for market value or inflation adjustments. Number 3, currency revaluation under financial accounting, FI, applied for open items or foreign currency at period end. Transactions/configurations. In MR21, price changes for materials. AR01/F.05 asset revaluation. F.05/FEGL _FC_VAL currency revaluations. So these are all the 3 methods. Number 5, key points must be carefully controlled. Incorrect revaluation can distort financial statements, often restricted by user authorizations, only applicable for item flagged as a revaluation allowed in master data. The important tips, always check whether revaluation is allowed before performing inventory price adjustment, asset revaluations or currency adjustments to avoid posting errors. So the next field is supplier RMA number required. The term supplier RMA number required is commonly used in procurement, return management and ERP system like SAP MM and SD modules. It refers to whether a return merchandise authorizations number from the supplier is mandatory for processing returns. So the definition, RMA, return merchandise authorization number, a unique reference number issued by a supplier to authorize the return of defective, damaged or excess goods. So this is called RMA, return merchandise authorization number. Indicator required means the system or process cannot process the return without this RMA number, which is received from the supplier. Number 2 purpose, ensure Returns are authorized and traceable. Helps the supplier track returned items and approve credit or replacement. Prevent unauthorized returns, avoid dispute or losses. Facilitate accurate accounting, credit notes and inventory adjustments. Number 3, how it works in practice. Buyer identify defective or excess goods. The number 1. Step number 2, buyer request RMA from supplier. Number 3, supplier issues RMA number. Number 4, buyer ships goods with RMA number referenced. Number 5, system, which is nothing but SAP MM, validate the RMA number before processing the return or credit memo. So then, SAP usage. In SAP purchase order or return delivery, there is an RMA field. If the supplier RMA number required, indicator is set. Return delivery or credit memo cannot be posted without RMA number. Ensure processes, compliance and traceability. Common in warranty returns, vendor managed inventory and quality returns. So these are all the commonly used cases in our SAP system. The important tips: always obtain and verify the RMA number before shipping returned goods, as this prevents credit delays and stock reconciliation errors. So the next field is indicator relevant to price determinations. Vendor hierarchy is a field used in SAP material management module and purchasing to control how vendor specific pricing is determined during procurement. So let's break it down detailedly. So there are 5 different stages. Number 1, definition. When this indicator is set in our SAP system, the system considers the vendor hierarchy for automatic price determination in purchase orders. What is vendor hierarchy? A ranking or sequence of vendors that SAP checks when determining the price for a material. Number 2, purpose. Ensures that the correct purchase price is selected based on predefined vendor priorities. Supports multiple vendors for the same material with different pricing conditions. Helps in automating pricing determination and reducing errors in purchase orders. Number 3, how vendor hierarchy works. So the number 1, define vendor hierarchy in SAP, a list of vendors in priority order for a material. Number 2, assign material and purchasing info record to the vendors. Number 3, when creating a purchase order, SAP checks the hierarchy. First, checks the vendor in hierarchy for valid pricing conditions. If not found, move the next vendor. So step number 4, price is determined automatically based on the first matching vendor in the hierarchy. So then stage number 4, example scenario. There are 2 material X and Y. The material X vendor hierarchy is vendor A, vendor B and then vendor C. The relevant to price determination, yes, selected price from vendor A. System will select the price from the vendor A based on the vendor hierarchy. So the material Y, vendor B and vendor C. So the relevant for price determination is no. Price determined by other conditions. Okay, there are 2 scenarios. The usage: field locations, purchasing info record, control data / vendor tab, price determination indicator. Indicator checked. SAP considers vendor hierarchy during PO creation. Supports conditions technique for pricing, discounts and surcharges. The important tips: always maintain a clear vendor hierarchy for materials with multiple suppliers to avoid incorrect price selections. This is especially useful for large organizations or centralized purchasing where the multiple vendors supply the same material at different prices. So the next field is indicator index compilation for subsequent settlement active. The indicator is a field in SAP MM and SD module and accounts payable used in the context of subsequent settlement or contract based procurement. So let's break it down clearly. So the first one, definition: when this indicator is active, the system compiles and tracks an index for items or services to be used in subsequent settlement accounting. The index is typically used to calculate price adjustments, escalations, or final settlement for contracts or long-term agreements. In short, the indicator signals that the system should collect and maintain data for later settlement calculations. The stage number 2 purpose facilitates automatic adjustments in subsequent settlement, useful in contracts where price are linked to indices, benchmarks, or consumption volumes. Payment is made after final verification or settlement. Ensures accuracy and transparency in long-term procurement or service agreements. How it works in our SAP system? The number 1, supplier or contract is flagged with the subsequent settlement. Number 2, index compilation indicator set for material or services covered. Number 3, during contract execution, SAP collects the relevant consumptions, price or volumes, maintains a running index for settlement calculation. Number 4, at settlement time, SAP uses the compiled index to calculate final payable amount, adjust vendor's account accordingly. SAP fields and transactions. And the vendor must go to purchasing data, subsequent settlement. So you can use the T code ME32K or 33K for contracts, MRKO for GRIR clearing. Custom index tables may be used depending on configurations. So the important tips, this indicator is critical for contracts with variable pricing based on indexes. Ensures automated, auditable and accurate settlement, reducing manual calculation and errors. So the next field, indicator document index compilation, active for purchase orders. The indicator document index compilation active for purchase order is used in SAP MM material management and contract management to control how data from purchase order is collected and processed for subsequent analysis or settlement. Let's break it down clearly. The step number 1 definition. When this indicator is active, SAP compiles a document index for each purchase order. This index collects key information such as quantities, values and dates, which can later be used for subsequent settlement, reporting and auditing, price adjustments or benchmarking. In short, it signals that the system should track and store PO data systematically for later use. Second stage, purpose. Facilitates subsequent settlement accounting for contracts or long-term purchase agreements. Support automatic calculation of adjustments such as price escalations, volume-based rebates, index-linked payments. Improves transparency and traceability of purchase orders. Stage number 3, how it works in SAP. Step number 1, purchase order is created for a material or a service. Step number 2, document index compilation indicator is active. So SAP records the relevant PO data in index tables. Step number 3, during subsequent settlement or reporting, the system reads the compiled index, calculates final settlement or adjustment automatically. Step number 4, reduce manual effort for long-term contract and ensure accurate accounting. And SAP transactions and tables. In ME21N or ME22N, so PO creation or PO change, set the indicator. MRKO, settlement of GRIR or contract based adjustments. Tables may include EKPO, EKBE, custom settlement index tables. The stage number 4, example scenario. Step number 1, long-term supply contract with vendor X. Step number 2, purchase order created over the year. Step number 3, document index compilations active for all POs. Step number 4, SAP collects PO quantities, price, delivery dates. Step number 5, at contract settlement, SAP calculate rebate or adjustment based on compiled data. The important tips, use this indicator for framework agreements or long-term contracts, not for one-time purchases. Ensures system can track cumulative volumes and prices for reporting and settlement purposes. So the next field is automatic evaluated receipt settlement for return items. This is used in SAP MM Material Management and Accounts Payable FI, specifically in the context of returns and vendor invoicing. Let's break it down detailedly. There are different stages. Stage number 1, definition. Evaluated receipt settlement, generally we used to call as ERS in short form, a process in SAP where the system automatically generate an invoice for the supplier based on the goods receipt without requiring a separate supplier invoice. Okay, so for return items, this extends ERS to returned goods. SAP automatically calculates the credit or debit to the supplier based on the return quantity and price. In short forms, it allows automatic billing or credit posting for returned goods without manual invoice processing. So stage number 2 purpose, reduce manual effort for processing returns, ensures timely and accurate credit posting to the supplier, and maintains consistency between inventory and accounting. Useful in high volume return scenarios, for example, defective products over deliveries. Stage number 3, how it works in SAP. Step number 1, return delivery is posted in SAP for goods returned to the supplier. Step number 2, if the automatic ERS indicator is active in SAP, reads the purchase order, delivery and pricing data, automatically generates a credit memo or invoice document for the returned items. Step number 3, supplier is credited automatically and accounting is updated. SAP field and configuration. Under the vendor master purchasing data, you can go to ERS indicator active. Purchase order and item data, ERS allowed for returns. Transaction code MRRL, release of GR based invoices. MIRO, manual invoice verifications if ERS not used. ERS process eliminates manual MIRO posting. So this is important information. Stage number 4, example scenario. Step number 1, vendor supplies 100 units of material A. Step number 2, 10 defective units are returned. Step number 3, return delivery posted in SAP. Step number 4, automatic ERS generates credit memo for 10 units at purchase price. Step number 5, vendor account is updated automatically, no manual invoices needed. So this will reduce, obviously, end of the day, manual work. The important tips: ensure price conditions and PO references are correct, as ERS relies on PO and GR data. ERS for return items is usually enabled for high volume or repetitive returns, reducing administrative overhead. Order acknowledgement requirement. The next field is, so the term order acknowledgement requirement is commonly used in sales, procurement and ERP system like SAP, MM and SD modules. It specifies whether the supplier or vendor must formally acknowledge a purchase order before processing it. So we can break down detailedly. The step number 1, definition. Order acknowledgement we used to call as short form OA, a confirmation from the supplier that they have received the purchase order and agreed to the terms, quantities and delivery dates. So the requirement indicator signals whether SAP should enforce acknowledgement from the supplier before the order is considered confirmed or processed further. Stage number 2 purpose: ensures supplier commitment to the purchase order, confirms delivery dates, quantities and terms before the execution, prevents misunderstandings, errors or disputes between buyer and supplier, often linked with workflow control in our ERP systems. Stage number 3, how it works in our SAP. Buyer create a purchase order, PO. Step number 2, order acknowledgement required indicator is active. Step number 3, supplier must acknowledge the PO, accept all terms, order is confirmed, rejects or change terms, buyer reviews and approves the adjustments. Step number 4, SAP can block further processing, example goods receipt or invoice verification, until OA is received, which is nothing nothing but order acknowledgement is received. So the SAP field and configurations, go to PO, go to item data, go to delivery and confirmation tab, go to order acknowledgement required, can be mandatory for certain vendors, certain materials or certain contracts. So the important tips, this is especially important for high value or critical materials or when supplier reliability is a concern. SAP can generate reminder messages if the acknowledgement is not received within a set time frame. So the next field is mode of transport at the border. So we used to call this intrastate. The field mode of transport at the border intrastate is used in SAP and EU trade reporting to capture the means of transport when goods cross the border, specifically for intrastate declarations. Let's break it down clearly. Step number 1, definition. Intrastate, a system used by EU countries to collect the statistics on the movement of goods between Euro member states. Mode of transport at the border refers to the transport type used to the EU border, example road or train or sea or air, when goods enter or leave the country. This information is mandatory for intrastate reporting, especially for Euro countries. Step number 2, purpose. To comply with EU trade reporting requirements, help statistical authorities track trade flows and logistics patterns, ensure accurate classifications of transport for taxation, trade and compliance reporting. So step number 4, usage in SAP. Field located in delivery document. Field located in delivery document in header shipping tab and intra-state data. Filled during goods issue or cross-border shipment. Automatically used in intra-state reporting, especially EU via SAP reports or equivalent. The important tips, always ensure the correct mode of transport code is selected as it affects intrastate statistics and can trigger audit queries. For combined transport, like example road plus sea, the mode at the EU border must be used. So the next field is purchasing group. Before going to purchasing group, you can see the examples. The common mode of transport, EU intrastate codes. Code 1, mode of transport road. Description, truck, van, lorry. So code 2, rail. Train transportation. 3, air freight. 4, sea, shipping by vessels. 5, inland waterway, river or canal transport. 6, post, mail, parcel service. 7, fixed transport installations, pipelines, conveyors, cableways. 8, any other method. So these are all the common method of transport for Europe country in intrastate codes. Example scenario, the material electronic components shipped from Germany, shipped to France. Mode of transport at border by road, intrastate report, goods classified with road transport at EU border. So this is a simple example scenario. So the next field is purchasing group. So the term purchasing group is widely used in SAP material management and procurement to designate a team or individual responsible for purchasing activities. Let's break it down clearly. So step number 1, definition. What is purchasing group? An organizational unit or a person responsible for a specific procurement task, such as issuing purchase orders, negotiating with vendors, or monitoring the deliveries. It is linked to materials, purchase orders, and vendors, often represented as a 4-character code in SAP. Stage 2, purpose. Assign responsibility for procurement processes, helps in tracking purchase activities and performance, facilitates reporting by purchasing group, example number of order processed, total purchase value, vendor performance, ensure workflow routing is approval or notifications. Stage number 3, key features can be assigned per material
or plant or purchase orders. Supports segmentation by commodity or region or supplier type, used in reporting like ME2N, ME2K and vendor evaluations. So stage number 4, SAP usage. So the field or location is purchase order, header, PO header, purchasing group field, identify responsible buyer item, material master, MRP1 tab, standard purchasing group for the material, reporting, purchase order reports and analytic by group, example ME2N, ME2K. Example scenario. So the material laptop, plant is Chennai plant, purchasing group 0010, buyer team is IT procurement team. So the material is printer, Chennai plant, purchasing group 0020, office supplies team, chemical product, Coimbatore plant 0030, production material teams. So this is how you need to classify the data. When a PO is created for laptop, SAP automatically assigns purchasing group 0010. This group is responsible for issuing the PO, track delivery and handling vendor communication. The important tips: purchasing group is not equal to purchasing organizations, which means the purchasing organizations defines company level procurement responsibilities, legal and contractual. Purchasing group defines person or team level operation responsibility. Proper maintenance ensures accurate reporting and workflow routing. So this is the difference between purchasing group and purchasing organizations. So the next field is planned delivery time in days. The term planned delivery time in days is commonly used in SAP MM Material Management and Procurement to specify the expected lead time for a supplier to deliver goods or service. So we can go detailed breakdown. Stage number 1, definition. Planned delivery time, PDT, the number of calendar or working days that a supplier requires to deliver a material after receiving a purchase order, used for material planning, scheduling and procurement management. Stage number 2, purpose, helps calculate expected delivery date in purchase orders, supports material requirement planning in determining when to place orders, enables on-time production planning and prevent stockouts, affects suppliers' performance tracking. Stage number 3, how it works. Enter the planned delivery time in the material master under the MRP1 tab or PO item. When the purchase order is created, SAP automatically calculates the delivery date. So delivery date equal to PO date plus planned delivery time. Step number 3, this delivery date is used for goods receipt scheduling, production planning, reporting and supplier performance monitoring. So the stage number 4 example scenario, there are 3 materials. One is laptop, there is vendor A, planned delivery time is 7 days. So the PO date is 20th November 2025, expected delivery date is 27th November 2025. Printer, vendor B, 14 days is the planned delivery time, PO date is 20, expected delivery time is 4th December 2025. Third one is chemical, vendor C, planned delivery time is 21 days, PO date is 20th November, expected delivery date 11th December. So this is how you need to set up the planned delivery time for each and every material. Important tips: ensures delivery time includes supplier processing plus transit time. Can be updated per supplier in the purchasing info record, allowing different suppliers to have different lead time for the same material. So the next field is unit of measure group. The term unit of measure group, UOM group, is used in SAP MM Material Management and ERP system to define how a material can be measured, converted and processed in different units. Let's break it down clearly. The definition: unit of measure group is a classification in SAP that groups all the unit of measures for a material. It defines conversion rules between units, example from base unit to sales unit to purchase unit to stock unit. Help the system handle multiple units consistently for procurement, inventory and sales. Stage number 2, the purpose.
Standardize unit conversions across materials, ensure accurate inventory and accounting, supports procurement, production and sales when different units are used. Purchase unit may differ from storage unit. Sales unit may differ from the base unit. Stage number 3, key features. Base unit of measure, main unit for stock and valuation. Example, kilogram, liter, pieces. Alternative units, units used for purchasing, sales or production. Example, boxes or pack or trolley or pallet. The conversion factors define how one unit converts to another. Example, one box equal to 12 pieces. So the UOM, unit of measurement groups compatible unit together for easy assignment to materials. So stage number 4, example scenario. Let's say material pen, the base unit of measure is pieces, purchasing unit of measure is box, BX, sales unit of measure is PC, conversion factor 1 box equal to 12 pen. So the unit of measure for group is pens. So the milk, base unit of measure is liter, purchasing unit of measure is bottle, sales unit of measure is liter, conversion factor is 1 pet equal to 1 liter. The unit of measurement group is liquid. Third one is sugar, base unit of measure is kg, kilogram, purchasing unit of measure is bag, sales unit of measure always kilogram. 1 bag equal to 50 kg. The conversion factor, the unit of measurement group is sugar. This is how the SAP uses the unit of measurement group to know which units are valid and how to convert between them. The important tips: always assign the correct unit of measure group to a material to avoid inconsistencies in inventory valuation and reporting. For example, if a supplier delivers in boxes but your stock is in pieces, the unit of measurement group ensures SAP converts the quantity correctly. So the next field is rounding profile. The term rounding profile is used in SAP MM and SD and pricing to control how quantities, prices and totals are rounded in purchase orders, sales orders, invoices or billing documents. Let's break it down clearly. The definition: rounding profile specifies rules for rounding values to certain units, decimal places or multiplies, ensures consistency in pricing, quantity and financial postings, helps comply with the legal, accounting or supplier or customer agreements. The stage 2, purpose: avoids discrepancies due to decimal rounding, ensures invoice total match negotiated terms, support unit based rounding, example ordering in multiple of 5 or 10 units, prevents accounting errors during posting of prices or quantities. So here you can see some key features. First one is quantity rounding. The description: round purchase or sales quantity to nearest allowed unit. For example, 1.25 kilogram equal to 1 kilogram or 1.5 kilogram depending on the rule. You can fix the rule. If the value is 1.25, either you can make it as 1 or you can make it to 1.5 automatically. So this is quantity rounding. Then price rounding: round unit prices to nearest cent or specified fraction. Example, 99.995 rupees equal to 100 rupees. You can round up with 100 rupees. And the final one is total rounding. The round invoice total to nearest currency unit. Example, 1234.56 equal to 1235. The final one is rounding factor, defines multiple for rounding, example multiples of 5 units. So these are all the key features in the rounding profile. So the next one is how it works in SAP. Defined in purchasing or sales configuration or material master. When a PO or sales order or invoice is created, step number 1, SAP applies the rounding profile to quantities or prices or totals.
Number 2, adjusted values are used for document posting and reporting. In Material Master, go to MRP 1 view, Sales Organization 2 tab. Here you can assign the rounding profile. In Purchase Order, go to Order Item Details and then assign the rounding profile. So the stage number 5 example scenario, the material sugar ordered for 12.3 kilogram, the rounding profile round to 0.5 kilogram, which means the quantity rounded into 12.5 kilogram. Instead of 12.3, it is rounded with 12.5 kilogram. The unit price is 40 pi rupees 67 paise. So it is rounded with 40 pi point 68. So instead of 3 digit, we rounded it to 2 digits, 45.678 to 45.68. The second one is pen 13 PC rounded to nearest 5 PC, which means the quantity rounded to 15 pieces. For example, if the pen is 11 pieces, then it is nearest one is 10, so it should be rounded to 10 pieces. So 13 is nearest to 15, so it is go to 15. The unit price is 12.345, so it is rounded with 12.35 rupees. The final one is milk 7.8 liter is the order quantity, rounded to nearest liter, which is equal to 8 liter. If suppose it is 7.2 liter, it should be rounded quantity should be 7 liter. In the same way, unit price per liter is 38.567. It is rounded with 38.57 rupees. So this is the example, detailed examples, 3 different type of examples. You can understand very well about the rounding profile and the purpose of rounding profile. SAP automatically adjusts quantities and prices based on the rounding profile. The important tips: use rounding profiles to standardize procurement and sales processes, especially when dealing with supplier with fixed packaging units, prices with many decimal places, legal or contractual requirements for rounding. The next field is indicator relevant for settlement management. The indicator relevant for settlement management is used in SAP MM and SD or financial accounting. CA is nothing but contract accounts. So under the FI, contract accounts, to identify whether a transaction or material or contract item is subjected to settlement processing. Let's break it down clearly. Stage number 1, definition. When this indicator is active, SAP treats the item or transaction as relevant for settlement. Settlement management refers to the automatic calculation, posting and clearing of amounts based on agreements, contracts or periodic process. So commonly used in service contracts, long-term supply agreements, leasing or rental agreements. Stage 2, purpose: ensures accurate and automated settlement of charges, rebates or contract values, supports periodic billing or crediting in structured manner, improves auditability and compliance by marking item that must be tracked in settlement. So how it works in SAP? Stage number 3, the transaction or material is flagged as relevant for settlement management. Step number 2, during the settlement run, SAP collects all relevant items, calculates settlement amounts, for example, final payment or rebate or adjustment, post settlement automatically to vendor or customer accounts. Step number 3, reduces manual reconciliation effort and ensures contract compliance. So here the SAP field and transaction. Under the Material Master, go to Service Items, Settlement Management checkbox. In contract, go to item or condition level. So settlement transactions, the T code is MRKO for GRIR clearing, FAGL underscore FC underscore VAL or custom settlement program for contract based options. So the example scenario, vendor provide monthly IT support services. The description: each month services delivered or flagged as relevant for settlement. Contract specifies quarterly payment. SAP collects service entries and calculates settlement automatically at quarter end. Settlement run post final payment. Vendor account is updated with accurate amounts. So these are all the example scenario. Then
the important tips: always flag on the item or material that require structured settlement to avoid unnecessary postings. Works best for framework contracts, recurring services, and long-term agreements where multiple transactions accumulate before final settlement. So the next field is deletion indicator for supplier at purchasing level. The deletion indicator for supplier at purchasing level is a field in SAP MM Material Management used to mark a supplier or vendor as deleted at the purchasing level without completely removing the vendor from the system. So let's break it down clearly. The stage number 1, definitions. In definitions, when this indicator is set, the vendor is blocked from future further procurement activities at the purchasing level. Existing historical documents remain in the system, but no new purchase orders or contracts can be created for the vendor. This is different from deleting the vendor master data entirely, which is generally restricted for audit and legal reasons. Stage number 2 purpose: prevents accidental or unauthorized purchase orders to inactive or obsolete vendors, maintain historical data for accounting, reporting, and audit purposes, helps in vendor lifecycle management, especially when vendor are terminated, replaced, or no longer approved. Stage number 3, how it works in SAP. First step, access vendor master purchasing data. Step number 2, set deletion indicator for purchasing in purchasing level. Step number 3, SAP will block new purchase orders, schedule increments, and contract for this vendor. Allow access to historical POs, invoices, or GR for reporting the audit. Step number 4, indicator can be reactivated if the vendor is reinstated. So SAP field and transaction. Under the transactions /NBP, go to vendor master purchasing data. Here you can set the indicator. So reports like ME2L, ME2N respect deletion indicator and typically exclude vendor marked for deletion. The important tip: always use purchasing level deletion rather than full vendor deletion to maintain audit trail and historical reporting. Consider communication to procurement teams to avoid attempting POs for deleted vendors. So the next field is group for calculation schema supplier. This is a field used in SAP MM and purchasing to define which pricing schema or calculation rules apply when dealing with a particular supplier. Let's break it down clearly. Stage number 1, calculation schema group for supplier. Link a supplier to a specific set of pricing and calculation rules in our SAP system. Controls how purchase prices, discounts, surcharges, and taxes are calculated automatically when creating purchase order or invoices. Work together with condition technique in SAP for automatic pricing determination. The stage 2 purpose: ensures consistent pricing and calculations for each supplier, simplifies automation of purchase order pricing, supports rebates, discounts, or special agreements per supplier, reduces manual effort and errors in pricing. Stage number 3, how it works in SAP. Step number 1, define calculation schema in SAP. Example: base price plus freight plus tax minus discount. So this is how you can set up the calculation schema. Stage number 2, assign calculation schema group to supplier in vendor master purchasing data. Step number 3, when a purchase order is created for that supplier, SAP automatically applies the assigned calculation schema, ensures correct net price, tax, and other conditions are applied automatically. So the configuration, go to SPRO, material management, purchasing, conditions, define calculation schema. You can create different type of calculation schema by using this menu path. So the example scenario, there are 3 vendor A, B, C. Vendor A schema group is for A01. So the applied calculation schema: base price plus freight minus 5% discount, effect purchase order price auto calculated. Vendor B, B02, base price plus tax plus surcharge. Net price includes tax and surcharge, defect. Vendor C, C01, base price only, no discount or surcharges applied. This is the effect. This is how the schema group for supplier is working in our SAP system. The next field is automatic generation of purchase order allowed. This is used in SAP material management and procurement to indicate whether the purchase order can be automatically created by the system rather than manually by a user. So let's break it down clearly. Step number 1, definition. When this indicator is active, SAP allows automatic creation of purchase orders for a material or vendor. Typically used in MRP, material requirement planning, or consumption-based planning scenarios, supports efficient procurement automation and reduces manual effort. Especially used for MRP process. So once you run the MRP for any given finished product, system will generate planned order for semi-finished and finished product, and the system will generate purchase requisitions for raw materials. Then this purchase requisitions PR document automatically converted into PO by using this automatic generation of purchase order allowed option. So the stage number 2 purpose automates PO creation based on requirements or planning runs. As I said, ensures timely procurement and prevent stockouts, improve efficiency in high volume or repetitive procurement processes, helps maintain consistent ordering practices for recurring materials. How it works in SAP? The first step, material master and vendor master has the indicator set for automatic PO creation. Step number 2, MRP run in MD01, MD02 or MD04 identifies requirements or shortages. SAP automatically generate purchase requisitions and the purchase orders depending on the configuration. Step number 4, purchase order are either automatically created and released or created for review by the purchasing group before release. So the SAP field and transactions in material master, go to MRP1 tab. So click on automatic PO allowed. In vendor master under the purchasing data, you can select relevant indicator. So the transaction ME21N or ME59N automatic PO generation from existing purchase requisition document. So example scenario, printer vendor A, auto PO is allowed. So MRP run MD01, PO automatically created for required quantity. Second material is laptop vendor B, auto PO is not allowed, no. After completing MRP run MD01, purchase requisitions generated, manual PO is needed. You need to convert from the purchase requisition to purchase order manually for the laptop. Third one is chemicals vendor C, auto PO is allowed. So you can go to MRP run MD02, PO created automatically and sent to the vendor. So this is an example scenario. So based on your requirement, your client requirement, you can set up the configurations. So the important tips: use automatic PO generation for materials with stable demand and reliable vendors. Always review settings for lead times, vendor agreements and approval workflows to avoid unwanted automatic purchase orders. Can be combined with release strategies to ensure control over automatically generated purchase orders. So the next field is price determination, date control. This is a field used in SAP MM and SD to control which data the system uses to determine the pricing conditions for a purchase order or contract or sales order. Let's break down clearly the definition. This field specifies the reference date for condition. Condition is nothing but price in SAP. Pricing in SAP depends on condition records. For example, discount, surcharges, taxes. The pricing date decides which condition record is valid at the time of purchase or sales process. The common scenario: PO created today, delivery next month. Which date is price should be applied? Stage number 2 is purpose. Ensures accurate pricing based on agreements or valid conditions. Avoid overcharging or undercharging due to change in price conditions. Support contract compliance and auditing. Important for materials with fluctuating prices like raw materials, commodities or seasonal products. Stage number 3. So how it work in SAP? The price date control, PO date, description, pricing conditions valid on the date of purchase order creation. So then goods receipt or delivery date, pricing based on expected delivery date, invoice date, pricing based on the invoice posting date, custom date, material or vendor validity date, allows flexible determination using custom rules. These are all the 4 methods used to control the price determinations. So the process, the step number 1, PO or sales order is created. Step number 2, SAP checks the pricing date control field. Step number 3, system select appropriate condition records based on the date. Step number 4, net price, discount and taxes are calculated accordingly. So the scenario example, material is steel, PO date is 20th November 2025, delivery date is 5 December 2025. So the price determination date is PO date. So the condition applied, price valid on 20th November 2025. Let's say net price is 50 kg per kg. The other material paper, PO date is 20th November, delivery date also same 5th December, but price determination date is delivery date. So based on the conditions applied, price valid on 5th December 2025, 52 rupees per kilogram. Okay, so based on the price determination date, system will select the condition records. So based on the condition records, price will change. The SAP usage, material master MRP 1 tab, under the purchasing tab, price determination date control, you can select the field, or go to purchase order condition tab, system automatically calculates price based on the control. So using an MRP contracts and pricing reports. The important tip, always set the pricing date control according to business practice. PO date for stable prices, delivery date for fluctuating prices, avoids dispute with vendors over pricing differences due to date mismatches. The next field is supplier sort criterion for material. This is the field used in SAP material management and purchasing to determine the order in which vendors are considered for procurement of a material. Let's break it down clearly. The stage number 1, definition. The supplier sort criterion defines a priority or ranking for vendors supplying the particular material. Helps SAP automatically select the preferred vendor when multiple suppliers are available. Works with vendor evaluations, source determinations and pricing procedures. The purpose, ensures efficient procurement by selecting the best vendor first, supports vendor ranking based on price, lead time, delivery, reliability and quantity, facilitates automatic source determination in MRP runs or purchase requisitions processing. How it works in SAP, stage number 3. First step, assign supplier sort criterion to a material vendor combination. Step number 2, during purchase requisitions, conversions or MRP run in SAP, checks all vendors for the material, sorts vendor according to the criterion, example price and reliability, selects the first vendor in the shorted list for automatic PO creation, can be combined with vendor evaluation scores to make procurement decisions more effective. The SAP field and transactions, under the material master purchasing tab, you can apply the sort criterion. In purchasing info record, link vendor to a material. In transaction ME51N, ME21N, PO creation and PR creation, MD04, MD01 for MRP run. So stage number 4 example scenario, a material, laptop. There are 3 different vendor. The first vendor A, sort criterion 1, prepared, lowest price, good quality, good reliability. Laptop vendor B, sort criterion is 2, slightly higher price. Laptop vendor C, sort criterion is 3, backup supplier. In result, automatic PO created for vendor A, selected first, vendor B and C considered only if a vendor A is unavailable. If A is unavailable, then system go to select vendor B. If B also unavailable, then system go to the last one is third vendor is C. So this is how system calculate sort criterion for materials. The key points: criterion values can be numeric, so or based on predefined sorting rules. 1 is equal to highest priority, so 2 is the medium priority, 3 is the lowest priority. Like this you can use the values. Supports automatic source determinations, improving procurement efficiently. Can be updated periodically based on vendor performance or market conditions. The important tips: use supplier sort criterion along with vendor evaluation scores for optimal procurement decision making. Helps reduce procurement cycle time and ensures POs are sent to the most reliable or cost effective vendor first. The next field is centrally imposed purchasing block. This is a field in SAP material management used to prevent procurement of a material across all plants or purchasing organizations for statistic, operational or compliance reasons. Let's break it down clearly. So the stage 1 definitions. A purchasing block is a restriction set in SAP to stop the creation of purchase orders or requisitions for a specific material or specific vendor. Centrally imposed means it applies globally across all plants, purchasing organizations or company codes rather than being limited to a single plant or single PO. The purpose: prevents procurement of restricted, absolute or non-compliant materials, ensures corporate control over purchasing for safety issues, legal compliance, contractual or vendor restrictions, cost control, helps avoid accidental purchases that could lead to operational or financial risk. Stage number 3: how it was work in SAP. For step number 1, central purchasing department sets a centrally imposed block on a material or on a vendor. Step number 2, SAP checks the block indicator during purchase requisition creation, purchase order creation, scheduling agreement release. Step number 3, if a block exists, SAP prevents further procurement transactions for the material or vendor. Users receive a warning or error message depending on configurations. So the SAP field in transactions, go to material master purchasing data. Here you can select centrally imposed purchasing block, or vendor master purchasing data, you can select purchasing block. So the transaction is MM02 or /NBP to set the block. The example scenario: the material chemical centrally imposed, cannot create POR or PR in any given plant. Laptop model A, plant specific block, only restrict at plant Chennai, other plants can purchase the laptop model A. Vendor Y, centrally imposed, cannot create any PO with vendor Y globally. These are all the 3 different scenarios. Based on the client requirement, you can choose the scenarios. So the key points: centrally imposed blocks override plant specific blocks, can be temporary or permanent depending on business need, useful for quantity issues, discounted products or legal restrictions. The important tips: always communicate centrally imposed blocks to all relevant procurement teams to avoid confusion and manual workarounds. SAP allows blocking both material and vendor, offering flexibility in procurement control. So the next field is purchasing block at purchasing organization level. This is a field in SAP MM material management that allows a material or vendor to be blocked for procurement within a specific purchasing organization without affecting other organizations. Let us break down it clearly. The stage 1 definition: a purchasing block restricts procurement of a material or vendor. When applied at the purchasing organization level, the block only affect purchase orders, requisitions or contracts created under that specific purchasing organizations. Other purchasing organizations with a company can still procure the same material or vendor. Stage 2 purpose: provides localized control over procurement without disrupting operations in other regions or departments. Useful for scenarios such as quality issues in the one plant or region, vendor specific restrictions for certain organizational units, temporary procurement suspension during audits or negotiations. How it works in SAP. Step number 1, access vendor master or material master in purchasing data tab, purchasing organizations. Step number 2, set purchasing block for the relevant organization. Step number 3, SAP checks the block during purchase requisition creation, purchase order creation, scheduling agreement release. Step number 4, if the block is active, SAP prevents procurement transactions for that organization. Other organizations remain unaffected. The SAP transaction is in MM02 material master purchasing organization data. In /NBP vendor master, go to purchasing organization data to see the field. Example scenario, laptop model A, purchasing organizations PO01, purchasing block is active, effect PO or PR cannot be created in PO01 organization. Laptop model A for purchasing organization PO02 not active, PO or PR creation allowed in PO02 organization. Vendor Y PO01 active, cannot create POs in PO01 other organizations, unaffected. So these are all the 3 different scenarios. This allows targeted restrictions without affecting the global availability of the material or vendor. Stage number 5, key points. Plant specific versus organization specific. Plant level blocks restrict only a plant. Purchasing organization level blocks restrict all procurement under the purchasing organization. Central block versus organization level block. Central blocks affect all organizations globally. Organization level blocks are more flexible and localized. The important tips: use purchasing organization level blocks for targeted operation control. Example, suspending procurement in a particular region without affecting other regions. Communicate blocks clearly to the procurement team to avoid errors or confusion. The next field is confirmation control key. So this is a critical field in SAP material management and procurement that defines what confirmations a supplier must provide for a purchase order. Let's break it down clearly. The stage 1 definition. The confirmation control key specifies the types of order confirmations that are required from the vendor and how the system should process them. It is assigned at the PO item level and controls order acknowledgement, shipping notifications, goods receipt confirmations. The stage 2 purpose ensures supplier commitment to the order, quantities, delivery dates and terms, improves tracking of procurement executions, supports integration with advanced shipping notifications, ASN and logistics confirmation process, helps in automatic workflow checks for order status and delivery. Stage number 3, how it works in SAP. So step number 1, define confirmation control key. SAP allows multiple keys depending on the type of confirmation required. Each key can control order acknowledgement required, deliveries, schedule line item confirmations, goods receipt confirmations. Step number 2, assign key to PO item or material. During PO creation in ME21N, the key is entered in the PO item confirmation tab. Step number 3, system behavior checks for confirmation from the vendor, can block GR posting or trigger alerts if confirmation are missing. Stage number 4, example scenario for confirmation control key. Confirmation key A, B, C, D. So control, the first one is A, order acknowledgement required, vendor must acknowledge the receipt of PO. Confirmation key B, delivery schedule line item confirmations, vendor confirms delivery dates and quantities. Confirmation key C, goods receipt confirmation, confirms goods shipped match PO quantity. Confirmation key D, all confirmations optional, no mandatory confirmations. So now the example scenario, step number 5, material is laptop, PO quantity is 100, confirmation key for example A, the vendor action, vendor acknowledges the PO, SAP behavior, GR blocked until acknowledged the PO in vendor side. Second material is printer with quantity of PO 50 number, confirmation key is B, vendor confirms delivery schedule, GR date monitored, alerts if delayed. Third one is chemicals with PO quantity of 200 number, confirmation key C, optional confirmations. GR can be posted freely without any verifications. So stage number 6, SAP usage. Under the Material Master Purchasing Data, you can use the confirmation key. In Purchase Order Item Confirmation tab, go to Item, Line Item. Under the Line Item Confirmation tab, so you can click on the key assignment. Integration with SAP Logistics and MRP to track delivery commitments. The important tips, always align the confirmation control key with vendor reliability and material criticality. Critical or high values items often require mandatory acknowledgement, while routine items may not. The indicator whether supplier is return suppliers. This field is used in SAP MM and procurement to identify whether a vendor is authorized to handle return goods. Let's break it down clearly. So the first one is definition. Return supplier is a vendor who can receive returned materials for reasons such as defect, excess stock or warranty replacement. This indicator flags the supplier as eligible to process return deliveries and credit memos, helps SAP determine which vendors can be selected for returns processing. Stage number 2 purpose, streamlines return to vendor RTV processes, ensures returns are only sent to authorized vendors, avoiding errors and financial disputes, facilitate automatic posting of credit memos if integrated with ERS. ERS nothing but evaluated receipt settlement. Supports warranty and quantity management processes. Stage number 3, how it works in SAP. Step number 1, set the return supplier indicator in the vendor master purchasing data tab. Step number 2, during return delivery creation, SAP checks if the supplier is flagged as a return supplier. Only flagged suppliers appears in return vendor selection list. Step number 3, return process flows. Return delivery, so we go return delivery, correct memo posting or invoice verifications, updates inventory and vendor account. So the SAP transactions and field. In vendor master /BP, go to purchasing data tab, then you can select return supplier checkbox. Used in Miro or RMAS processes. The example scenario, there are 3 different vendor A, B, C. The first vendor A, return supplier is S. Effect is can receive defect goods, credit memo can be posted automatically. Vendor B, the return supplier is no authorized for returns, system prevent return delivery. Vendor C, yes, handles warranty replacement, ERP tracks return processes. If a defective material is identified, SAP only allows return to vendor A or C, not B. The key points: ensures returns compliance with vendor agreements, reduces manual interventions and errors in return processing, often used with quantity management to track defective items. The important tips: always maintain accurate return supplier data to avoid sending goods to wrong vendors. Can be combined with automatic ERS for return items to fully automate return and credit processes. Next field is automatic debit creation on goods issues. This is a field in SAP MM and SD that controls whether the system should automatically create a debit when goods are issued. Let's break it down clearly. The stage number 1 definition. When this indicator is active, SAP automatically posts a debit to the vendor or customer account when a goods issue is recorded. Typically, typically used in consignment, subcontracting or special procurement scenarios where goods issuance triggers a financial liability. Eliminates the need for manual invoice or debit note entry. Stage number 2 purpose: automates financial postings for goods movements, ensures accurate accounting and vendor customer liability tracking, reduces manual work and improves process efficiency. Often used in consignment stock issues. When a material is withdrawn from consignment stock, the vendor is automatically debited. Stage number 3, how it works in SAP. Step number 1, configure the automatic debit indicator in Material Master Accounting and Valuation tab, in Vendor Master Purchasing Data tab if vendor specific. Step number 2, when goods are issued in goods issue, SAP creates a debit posting automatically based on the valuation classes and account determination. Step number 3, financial effect: debit vendor or expense account, credit stock or inventory account, or consignment stock account. The SAP transaction and fields. In Material Master, under the MRP and Accounting, automatic debit indicator. In Purchase Order / Goods Issue, go to MIGO, debit generated automatically. FI postings viewable in MB51, MIGO and FB03. Example scenario: the first material steel sheet, stock type consignment, goods issue quantity 100 kg, automatic debit yes. Posting effect: debit vendor accounts 50,000 rupees, credit consignment stock. Second material, printer cartridge, stock type regular, goods issue quantity 50 pieces, automatic debit no automatic debit, manual invoice required. Third one is chemicals, stock type subcontracting, goods issue quantity is 200 liter, automate debit yes, debits subcontracting vendor, credit stock in production. In the steel sheet example, issuing goods from consignment automatically debits and the vendor account reflecting the payment liability. The key points: stage number 5, must ensure proper account determination is set for automatic postings, works best for high volume transactions where manual invoice creation is inefficient, can be combined with automatic ERS or for end-to-end automations. ERS is nothing but evaluated receipt settlement we discussed initially. The important tips: use this for consignment, subcontracting or vendor managed inventory scenarios. Verify that FI and MM integration is correctly configured, otherwise postings may fail. So the next field is settlement profile for automatic evaluated receipt settlement. So this is a configuration in SAP MM and FI financial accounting that controls how the automatic payments or postings are generated for goods receipt. Let's break it down clearly. Stage number 1, definition. Automatic ERS is a process where SAP automatically creates an invoice and post payments to the vendor when a goods receipt is recorded. The settlement profile defines rules and behavior for this automatic settlement, which accounts to posted to, which documents types to use, whether the process is automatic or requires approval, eliminates the need for a manual invoice mirror for specific goods or vendors. Stage number 2, purpose: automates invoice creation and vendor payments, reduces manual effort and errors in invoice processing, ensures timely payment to vendors and accurate financial postings, commonly used in consignment stock, subcontracting or high volume goods procurement. Stage number 3, how it works in SAP. Step number 1, settlement profile configurations, defines rules in SPRO, material management and logistics invoice verifications, then evaluated receipt settlement ERS. Settings include document type for ERS invoices, postings to GR, IR or direct expense accounts, tolerance limits for pricing differences. Step number 2, vendor or material master assignment. Assign the settlement profile to the vendor or purchasing info record. Indicates which materials and vendors are eligible for automatic ERS. Step number 3, goods receipt. When GR is posted, SAP checks the settlement profile, automatically generates invoice document, post to vendor account and GR IR clearing account. SAP transaction and fields. Under the Metal Master MRP purchasing data, you can select ERS settlement profile. In Vendor Master purchasing data, ERS indicator is available. In Migo goods receipt, triggers automatic invoice posting. Check postings in MB03, FB03, MI or 7. These three codes. Example scenario: the first material steel sheets, vendor A, settlement profile is ERS underscore STD, which is nothing but standard. Automatic ERS yes. Effect: goods received for 1000 kg, invoice posted automatically, vendor account debited. Second material printing cartridge, vendor B, settlement profile is none, not available. Automatic ERS also no. Manual invoice mirror required after goods receipt. Third material chemicals, vendor C, ERS is standard, automatic ERS is yes. GR posted SAP automatically generates and post the invoice. So stage number 5, key points. Settlement profile ensures consistent automatic ERS behavior across vendors and the materials. Supports integration with FI for vendor account postings. Can include tolerances for price or quantity differences to avoid posting errors. The important tips: use ERS for high volume repeatable procurement items to streamline AP process, accounts payable process. Always test automatic postings in a sandbox to ensure correct account determinations and document types. The next field is absolute handling surcharge. The absolute handling surcharge is a field used in SAP MM and purchasing logistics pricing to define a fixed additional charge applied to a material or purchase order. Let's break it down clearly. The stage number 1 definition: an absolute handling surcharge is a fixed monetary amount added to the base price of a material or order, typically used to cover handling, packaging or special service cost. Unlike a percentage-based surcharges, it is absolute, meaning it does not vary with order quantity. Stage number 2 purpose: ensures accurate costing and pricing for materials or service. Covers fixed costs that are independent of quantity. Example: special packaging, freight handling, loading and unloading charges. Support correct total cost calculation in purchase orders and inventory valuation. Stage number 3, how it works in SAP. Step number 1, condition record, then pricing setup. Define a condition type for the handling surcharges. Set the amount as an absolute value. Example: 500 rupees per PO or per delivery. Stage number 2, assignment. Assigned at the vendor or material level or directly in the PO or contract. During PO creations, SAP adds the surcharge automatically to the total price. Step number 3, accounting posting. Surcharge is posted to a designated expense account integrated with FI to ensure correct valuation of stock or cost of goods. So the SAP transaction fields: purchasing info record, conditions, purchase order, go to condition tab, handling charges, ensure the handling charges, automatic postings visible in ME23 and MB03, FB03. You can use these T codes for automatic postings visible. Stage number 4, example scenario. The same 3 material: steel sheets, printing, cartridge and chemicals. Steel sheet base price is 50,000. Absolute handling charges is 500. Total price is 50,500. Fixed handling cost added. Second material base price is 12,000. Absolute handling surcharge 200 rupees. So total value 12,200 per order surcharge. Third material 75,000. Absolute handling surcharge 0. So total price is 75,000. No surcharge applied. Regardless of the quantity ordered, the absolute handling surcharges remains fixed. The key points: absolute surcharge is a fixed per order or items, does not depend on quantity, helps cover operational handling cost in procurement, can be combined with percentage based surcharges if needed for complex pricing. The important tips: use absolute surcharges for fixed cost services and percentage surcharges for cost that vary with the order size. Ensure correct account assignment to avoid posting errors in financial documents. So then the next one is percentage handling surcharge. The percentage handling surcharge is a field used in material management and purchasing logistics pricing to define a variable additional charge based on the value of a material or purchase order. Let's break it down clearly. The stage number 1 definition. A percentage handling surcharge is a surcharge calculated as a percentage of the base price or total order value. Typically used to cover handling, logistics or service cost that scale with order value. Unlike absolute surcharge, it varies proportionally with the order value or material price. Stage number 2 purpose. Ensures accurate costing and pricing when handling costs are proportional to order size or value. Covers cost like freight handling as a percentage of material cost, packaging charges based on total order value, service charges tied to the transaction value. Supports correct total cost calculations in purchase orders and inventory valuation. Stage number 3 how it works in SAP. Step number 1 condition record and pricing setup. Define a condition type for the percentage handling surcharge. Set the percentage value, example 2% of base price. Step number 2 assignment. Assigned at the vendor or material level or directly in the PO or contract. During PO creations, SAP calculates the surcharge automatically based on the total base price. Step number 3 accounting posting. Surcharge is posted to a designated expense account integrated with FI to ensure correct valuation of stock or cost of goods. SAP transactions/fields. Purchasing info record, you can see the conditions. In purchase order, go to condition tab and then go to percentage handling surcharges. Accounting posting visible in P code 23N, ME23N, MB03 and FB03. The key points. Percentage surcharge is variable depending on the base price. Best for cost that scale with material or order value. Can be combined with absolute handling charges if both fixed and variable costs are exist. Important tips. Use percentage surcharges for value-based operational cost like logistics or special handling. Ensure correct accounting assignment for automatic postings in FI financial accounting. The next one is minimum handling charges. This is a field used in SAP MM and purchasing and logistics pricing to define the minimum amount of handling charges applied to a purchase order or material. Regardless of absolute or percentage based surcharges, let us break down clearly. The definition. The minimum handling charges set a floor value for handling or service charges. Ensures that even if the calculated handling surcharges is low, a minimum charges is applied. Prevent undercharging for handling services in small order or low value materials. The purpose. Guarantee minimum cost recovery for handling, packaging or logistics efforts. Ensures financial accuracy and avoids loss on small transactions. Works alongside absolute and percentage handling surcharges to maintain total surcharge compliance. How it works in SAP. Step number 1 surcharge calculations. SAP calculates handling surcharges, absolute surcharge plus percentage surcharge. Step number 2 minimum surcharge check. If the calculated surcharge is greater than the minimum handling surcharge, SAP applies the minimum value instead. Step number 3 accounting posting. Minimum handling surcharge is posted to a designated expense account integrated with financial accounting. SAP transaction and fields. In purchasing info records, you can see the conditions. In purchase order, go to the condition tab, minimum handling charges. Visible in ME23N, MB03 and FB03 tables. T codes. Example scenario. The same three materials. The first material base price is 10,000 rupees. Percentage 2%. Calculated surcharge 200 rupees. Minimum surcharge 500. So applied surcharge 500. Total price is 10,500. Which means system will take the minimum surcharge. System won't take calculated surcharge because the calculated surcharge is less than the minimum surcharge. Second material cost is 50,000. The percentage surcharge is 1%. Calculated value is 500, but the minimum value is 400. In this term, system will apply the calculated value, the 500 rupees. The total value is 50,500. For third material, the cost is 20,000. Percentage 0.5, the calculated value 100, minimum value 300. So system will apply minimum value 300. The total value of the price is 20,300. So in this scenario, we can understand either calculated value or minimum value. Which one is higher? System will select the higher value. So the key points: ensures minimum cost recovery for small orders, works in combination with absolute and percentage surcharges, helps maintain consistent financial and procurement control. The important tips: always define minimum handling charges for materials where handling costs are significant, even for low value orders. Review account assignment to ensure the surcharges posted correctly in financial accounting. The next field is maximum handling surcharge. So this is slightly differ from minimum handling surcharge. This is also used in SAP MM purchasing, logistics pricing, used to define upper limit or handling or service charges applied to a material or purchase order. Okay, so no need to explain everything. You know very well about surcharge. We discussed detailedly in minimum handling surcharge. In maximum handling surcharge, I am just going to explain the scenario, example scenario. The first material base price value is 5 lakh rupees. The percentage value is 2%, which means calculated value is 10,000. So here maximum value fixed as 8,000. So applied only 8,000. Total value is 5 lakh 8,000. Second material cost is 50,000, 1%. The calculated value 500. Maximum value is 1,000. In this scenario, system will apply only calculated value. System won't select the maximum value. Okay. The third material value is 2 lakh rupees. The percentage is 3%. So calculated value 6,000 rupees. Here maximum value is 7,000. System will apply only calculated value, not maximum value. The total value of the material is 2 lakh 6,000 rupees. You can understand about minimum handling surcharge and maximum handling surcharge. In minimum charges, system will select which one is higher, either calculated value or minimum value. System will select higher value always. In maximum values, system always select the lowest one. Let's say our maximum value is 8,000, but calculated value is 10,000. Then system will select 8,000 only. But the maximum value is 1,000, but calculated value is 500. Then system will select only the lower value. Anyway, in any combination, system will always select the lower value. Okay. So either it is a calculator or maximum limit. System will select always the lower value. Okay. In previous topics, either calculated or minimum, system will always select the highest value. Just opposite. I think you understand the minimum and the maximum handling surcharges well. So the next one is evaluated receipt settlement. We used to call as ERS. We discussed already the ERS detailedly. So no need to go for once again. Let's go to next one. Planning calendar. The planning calendar specifies which days are working days and which are non-working days, like a holidays, weekends, for a plant or production resources. Used in MRP, material requirement planning, production scheduling, and delivery planning. Ensures SAP correctly calculated planned or dates, purchase requisition dates, and delivery schedules. The purpose: provide realistic scheduling for procurement and production. Ensures material availability when required. Avoid planning errors caused by weekends, holidays, or planned specific off days. Supports lead time calculations for production and procurement. Stage number 3, how it works in SAP. Step number 1, define planning calendar. Specify work days, non-working days, and special holiday expense can be assigned to plant, storage location, or specific resources. Step number 2, integration in MRP and scheduling. SAP use this calendar to calculate planned order dates and delivery dates. For example, if a material has a lead time of 5 days but includes a weekend, SAP adjusts the schedule based on the planning calendar.
Stage number 3, impact accurate MRP runs in MD01, MD02, correct planning delivery dates in PO or production orders, proper capacity planning in production. So the SAP transaction and field, go to SPRO, logistics, then material management / production planning, then go to define factory calendar, then go to planning calendar. Here you can set up the planning calendar. So then after creating the planning calendar, you assign in material master MRP 1 and 2 tab planning calendar assignment. In production resource under the work center, you can assign the calendar. The example scenarios, the same material we can discuss. The first material lead time is 5 days. So calendar is Monday to Friday working. If ordered on Friday, delivery on the next Friday. So because the weekend, Saturday and Sunday skipped. So the notes calendar ensures weekends are excluded. Second material lead time is 3 days, Monday to Saturday working. If the order on Friday, delivery on Monday. Saturday counted as working day. So third material 7 days lead time, Monday to Friday plus public holidays. Calendar adjust delivery dates, skips holidays, correctly accounts for holiday in planning. So these are all the 3 different methods. The calendar ensures the realistic and achievable delivery schedules. The key points: planning calendar affects MRP scheduling, production orders and purchase order delivery dates. Can be plant specific or shared across multiple plants. Avoid planning errors due to non-working days, holidays or shifts. Important tip is always assign to correct planning calendar to material, plant and production resources. Update calendars regularly to account for new public holidays or special off days. Next field is planning cycle. So what is meant by planning cycle? The planning cycle in SAP is a concept used in material requirement planning MRP to define the frequency and timing of planning runs for a material. It determines how often SAP checks material requirements and generates procurement proposals like a purchase requisitions, planned orders and production orders. So the definition: a planning cycle specifies the interval at which MRP runs for a material, helps in periodic planning especially for materials that are ordered or produced on a schedule, typically defined in days, weeks or months depending on business requirements. The purpose: automatic material planning for repetitive or periodic requirements, reduces manual intervention in procurement and production planning, ensures timely creation of planned orders or purchase requisitions, optimizes inventory levels by scheduling procurement at regular intervals. Stage number 3, how it works in SAP. Assign planning cycle to material. Step number 1, in Material Master, go to MRP1 and MRP2 tab. Planning cycle field is there, can be specific to MRP type, PD, RVB, etc. Step number 2, define planning cycle in customizing. Go to SPRO material management under the MRP, define planning cycle. So define planning cycle name, period, days, weeks, months and time points based on your client requirement. Step number 3, MRP run. SAP checks the material on assigned dates, generates procurement proposals based on the stock levels, safety stock, forecasted or actual demand. So here the transaction and field, SAP transaction and field, MD01, MD02, MD03 for MRP run. Material master planning cycle assignment. Example scenario, the same 3 material. The first material planning cycle is weekly. Interval is every Monday. MRP run action: generate purchase requisitions for projected demand. Note: ensures stock replenishment weekly. Second material daily. Interval is every day. MRP checks stock and generates PRs if below safety stock, suitable for fast moving items. Third one is monthly. First day of the month, planned orders for next month, suitable for slow moving materials. Planning cycles automate when MRP evaluates the material, avoiding manual checks. The key points: helps schedule periodic planning efficiency, works together with planning calendar to respect non-working days, can
can be material specific or group specific, reduces stockouts or excess inventory by maintaining timely replenishment. The important tips: use shorter cycles for high volume, fast moving items. Use longer cycles for slow moving or expensive items to reduce planning effort. Ensure planning cycles align with the lead time and delivery schedules. So the next field is restriction profile for PO based load building. So this is in SAP is a field used in SAP logistics executions and transportation management to define constraints and rules for grouping purchase orders into transport loads. It ensures efficient and compliant shipment planning. So the definition: restriction profile determines how POs can be combined into a single transport load. Control restrictions such as weight, volume, route or delivery dates. Used in PO based load building in SAP MM transport management and LE logistics executions. So stage number 2, purpose: optimize transport planning and load consolidation, prevents overloading or inefficient shipment combinations, ensures compliance with the delivery windows, routes and material handling requirements. This supports automatic or manual load printing in SAP transport management. How it works in SAP. Stage number 3. Step number 1, assign restriction profile in Material Master under the Shipping and Transportation tab. In Vendor Master under the Purchase Order, Transport Requirements. During load building, SAP checks all assigned POs for maximum weight, volume, route restrictions, delivery date constraints, material specific handling requirements. Only compatible POs are grouped into a single transport load. The result is SAP generate transport proposals or shipments based on restrictions compliance, prevents manual errors and overloads. So the SAP transaction and field: VL10, VL10B, VL10C, purchase order selection for delivery, Material Master shipping data restriction profile, so transportation cockpit or transportation management for advanced load building. Example business scenario: the first PO 1001, material steel sheets, weight 500 kg, volume is 2 meter cube, delivery date 22 November, restriction profile RP1, load assignment is 1. Second PO, the same material 600 kg, delivery date is 22, the same restriction profile, load is 1. Third PO, second material, printer cartridge 200 kg, the same date 22 November, this restriction profile is RP2, then it is coming under load 2. Fourth PO, chemicals 1000 kg, 23rd number, delivery date, restriction profile is RP1, it is coming under load 3. POs with RP1 are grouped together only if they comply with the profile's restrictions. POs with incompatible restrictions RP2 are assigned to a separate load. Okay. So key points: restriction profiles define rules for load consolidations, ensures safe, efficient and compliant transportations. Can include constraints like maximum weight or maximum volume, route compatibility, delivery date windows, material specific handling rules. Supports both manual and automatic load building in SAP. The important tips: assign restriction profile very carefully to avoid shipment delays or overloading. Review profiles when new materials, routes or delivery requirements are introduced. So the next field is Custom Office of Exit and Entry for Foreign Trade. In SAP is a field used in ST module and MM module and Logistics Execution module to define the official customs office through which goods enter or leave a country for foreign trade purpose. So the definition: A custom office represents the government authorized point of entry or exit for goods in international trade, required for export and import processes, including customs declarations, export and import licenses, shipment documentation. Stage 2 purpose: ensures compliance with customs regulations, helps generate accurate export or import documentations like shipping bills, invoices and export declarations, facilitates integration with SAP Global Trade Service (GTS) for customs processing, required for intra-state reporting in EU countries. EU is nothing but Euro countries, and foreign trade reporting elsewhere. How it works in SAP? Stage number 3. Step number 1. Assign custom office. In the sales order or delivery document, specify the office of exit or office of entry, office of exit for export, office of entry for imports. Can also be defaulted in customer master or vendor master or plant or shipping point. Stage number 2. Document generations. SAP uses the customs office information to populate export declarations, intra-set reports, export invoices, shipment documents. Stage number 3. Integration with SAP GTS for automated custom filing with LE logistics executions, TRA for shipment tracking and compliance. So these are the 2 integrations. Then SAP transaction and field. Under the customer master, sales area data, shipping data, go to select custom office. In delivery document header, go to shipping foreign trade tab. In vendor master, under the purchasing data, go to import custom office. So the example scenario: shipment type export, plant Chennai, custom office Chennai, seaport, purpose goods leaving India for export. Shipment type is import, plant Mumbai, custom office Mumbai airport, goods entering India from foreign supplier. Third one is export, plant Kolkata, custom office Kolkata ICD, land export to neighboring country. The custom office ensures proper legal clearance at the point of exit or entry. So the key points required for foreign trade compliance can be assigned at plant, shipping point, customer or vendor level, enable secured custom and statistical reporting, supports integration with automated custom systems like SAP GTS. The important tips: always verify the correct customs office is assigned to avoid shipment delays, penalties or compliance issues. Maintain a master list of valid customs office in SAP for consistency. The next field: old entry by supplier. The old entry by supplier is SAP refers to a process or indicator in SAP material management and SD sales and distribution that defines whether a supplier is allowed to responsible for entering purchase orders or order confirmations directly into the system. So the definition: this field or indicator specifies if the supplier can create or maintain orders in SAP, typically used in scenarios like vendor managed inventory, consignment stock, electronic data interchange or supplier portal. Stage number 2, purpose: enables supplier driven order management, reduces manual entry by the purchasing organization, helps maintain real time inventory levels in vendor managed inventory scenarios, support integration with SAP supplier network, EDI or Ariba for automated order processing. Stage number 3, how it works in SAP. Step number 1, indicator assignment. Under the vendor master purchasing data, order entry by supplier flag may also be configured in purchaser info record or supplier portal settings. Step number 2, supplier access. or order entry. Supplier can submit purchase order, PO creation in certain cases, order confirmations, delivery schedules. Step number 3, system behavior. If enabled, SAP allows PO or order updates from supplier. SAP can automatically update inventory, delivery schedules and GRIR postings. If not enabled, orders must be entered manually by the purchasing organizations. So the SAP transaction and the field in vendor master /NBP, go to purchasing data, order entry by supplier. In purchasing info record, supplier specific settings and supplier portal or EDA, direct order submissions. So here the example scenario, there are 3 vendor ABC. The first vendor VMI, vendor managed inventory, is S. Order entry by supplier is active. Action, supplier can create orders based on stock levels in SAP. Vendor B, VMI is no. Order entry by supplier is inactive. Purchasing team create orders manually. Vendor C, VMI is yes. Order entry by supplier is active. Supplier update delivery schedules automatically via EDA, electronic data interchange. In the VMI scenario, the supplier monitors inventory and creates orders in SAP, eliminating manual purchase orders entry. The key points: reduce manual workload for purchasing teams, enables supplier driven supply chain process, require proper authorizations and system access for the supplier, works best with VMI, EDA or supplier portal setups. The important tips: ensure supplier training and system access are in place before enabling this feature. Use audit logs to track supplier entered orders for compliance and reporting. So the next field is price marking supplier. The price marking supplier in SAP refers to an indicator used in materials management and purchasing that signals whether the supplier applies a price mark or label on goods for identification, regulatory or internal purposes. So the definition: price marking is a note or instruction related to the price labeling of materials supplied by the vendor. It indicates whether the supplier is responsible for printing, labeling or marking the price on goods before delivery. Relevant for materials sold in retail, regulated industries or where price transparency is required. Number 2 purpose: ensure compliance with the pricing regulations or customer requirements. Helps streamline receiving and sales process when price are pre-marked. Reduces manual labeling effort at receiving or sales points. Supports audit and traceability requirements for pricing. Stage number 3, how it works in SAP. Step number 1, indicator assignment. Under the vendor master purchasing data, price marking indicator you have to set. Can also be maintained in purchase info record or PO, purchase order conditions. System behavior: when creating a PO, SAP can flag the item for price marking. Supplier is expected to apply price labels accordingly. Receiving team can verify price marking compliance upon goods receipt. Stage number 3, integrations, often combined with goods receipt inspection. Can trigger quality notifications if price marking is missing or incorrect. So example scenario, there are 3 material packaged snacks. Vendor A, price marking is S. Supplier labels items with retail price before delivery. Office paper, vendor B, price marking no. Receiving team handle pricing internally. Bottled water, vendor C, price marking yes. Labels printed with the supplier specific price and batch informations. So the key points: in the packaged snacks example, supplier applied labels help retail ready distribution. The key points: indicator ensures supplier responsibility for price labeling, supports retail, regulatory or internal pricing processes, can reduce manual processing and errors at the goods receipt, often verify during inspection or GR posting. The important tips: used for retail or consumer ready goods to ensure pricing compliance, combined with supplier notes or PO instructions to ensure clarity. So the next one is rack jobbing supplier. Jobbing supplier in SAP refers to a process in material management and retail logistics where a supplier is responsible for managing inventory and replenishment directly on the retail shelves or racks. So the definition, rack jobbing is a retail practice where the supplier stocks, maintains and manages product on retail shelves. In SAP, the rack jobbing indicator for a supplier identifies vendor who are responsible for this activity. Common in fast-moving consumer products, FMCG, convenience stores or supermarkets. Stage number 2, purpose, ensures self availability without the retailer manually handling inventory, reduces stockouts and overstock situations, assigns supplier responsibility for inventory management, pricing and display, supports retail agreements and vendor managed inventory setups. Stage number 3, how it works in SAP. Step number 1, indicator assignment. Under the vendor master purchasing data, you can assign the indicator. Can also be configured in material master and purchasing info record. Stage 2, step number 2, supplier responsibilities. Replenish shelves based on agreed planograms. Maintain product quality expiration checks and pricing. Report inventory and sales data back to the retailer. Step number 3, system behavior. SAP may track inventory at the rack level. PO or delivery planning may be automated for rack jobbing suppliers. Integrated with VMI or consignment stock processes. Example scenario, there are 3 vendor ABC. The vendor A packaged snacks, rack jobbing yes. Supplier stocks and manages the self inventory directly. Vendor B, office suppliers, no. Retailer manages inventory manually. Vendor C, bottled water, rack jobbing is yes. Supplier monitors sales, replenishment stock and maintains display. For vendor A, the supplier handle stock replenishment and pricing, reducing retailer workload. Stage number 5, key points. Rack jobbing suppliers are responsible for self-level inventory, often linked with vendor managed inventory or consignment stock, helps improve product availability and reduce out of stock situations, requires clear agreements on responsibility, replenishment, frequency and reporting. The important tips, use rack jobbing indicator for high turnover or retail specific products. Combined with the planning calendars and PO based scheduling for timely replenishment. So the final topic under the purchasing data, supplier service level. So what is supplier service level in SAP? Supplier service level is a performance score that indicates how consistently a supplier meets purchase order requirements. It answers, did the supplier deliver on the promised delivery date? Did they deliver the correct quantity? Did the goods pass quality checks? The score is usually expressed as a percentage. The typical formula, supplier service level is percentage equal to number of POs delivered on time and in full divided by total POs multiplied with 100. So for example, if 95 out of 100 orders were delivered on time, the SSL is 95%. Supplier service level is 95%. So where it is used in SAP? Step number 1, vendor evaluation, main use case. Supplier service level is a part of ME61, maintain vendor evaluation, ME6A, ME6B, vendor evaluation reports. Sub criteria can include one-time delivery, delivery reliability, delivery quantity accuracy, lead time adherence. SAP automatically scores suppliers based on PO and GR and delivery date history. Stage number 3, influence in MRP planning. High service level, low safety stock, preferential sourcing, reduced supply chain risk, low service level, extra safety stock, increase procurement lead time, consider alternate supplier. SAP calculated. SAP checks PO delivery date, goods receipt date, quantity delivered, quantity inspection result if applicable. So based on this, the system automatically generates a score between 0 to 100. So example in SAP context, there are three vendor ABC. The first vendor total delivery is 120, delivery on time is 118, the SSL score is 98%, excellent. Vendor B total delivery 90, delivered on time 75, the SSL is 83%, good. Vendor C total delivery 85, delivery on time 55, the SSL score is 65, it is poor. So like this you can categorize why supplier service level matters. Helps procurement identify reliability with risky vendors, make sourcing decisions, improve contract compliance, reduce inventory carrying out, improve customer service level. So the SAP transaction related to supplier level. The purpose: maintain vendor evaluations under the T code ME61, vendor evaluation listing ME6A, ME6B and ME6C, purchase order performance reports ME2N, ME80FN, vendor master display. So in ECC XK03, MK03, in S4 HANA system it is only one T code /NBP. Okay, so under the purchasing data tab, the first topic, purchasing data, is successfully completed. Thank you. Under the vendor master purchasing data, topic number 2, partner functions. Partner functions in SAP refers to the role played by a business partner in a business transactions like a purchase order, sales order or contract. The definition: partner function identifies what roles a business partner fulfills in a document. Example: who placed the order, who receives the goods, who gets the invoices, who is responsible for payment. In SAP, a single business partner can perform multiple roles in the same transactions. Common partner functions under the purchasing SAP MM. Partner function VN, which is nothing but vendor. Supplier providing the goods or services. PI, invoice party, the one who sent the invoice. QA, ordering address, address from which the vendor accepts orders. GS, goods supplier or goods vendor, physical location from where goods are delivered. GP, goods recipient, who receives the goods internally. And common partner functions in sales side, SAP SD, sales and distribution module. SP, sold to party, customer placing the order. Ship to party, customer location receiving the goods. Bill to party, who receive the invoice. Payer, who makes the payment. So where partner functions are used: vendor master, customer master, purchase orders, sales orders, contract, delivery documents, invoices. The purpose: defines responsibilities in a transaction, ensures documents flow correctly, automatically determines shipping address, billing address, payment responsibility, ordering responsibility. So the next field is partner functions. Partner number for vendors. Partner number for vendors in SAP is the unique vendor account number assignment to a business partner who performs a partner function in purchasing documents. The meaning: when a vendor performs a role like a vendor or invoicing party or goods supplier, etc., SAP needs to know which vendor master record represents that role. The partner function is the vendor master number, example 100015, where it is used. So you assign under the partner function VN, ordering vendor 100015, partner number, invoicing party is 100022, the other vendor. Ordering address, the same, ordering vendor and ordering address are same. Goods supplier is the another partner number 100030. Each partner number is a vendor account already exists in the SAP system. Example: a company buys material from vendor KG suppliers 100015 is the KG supplier. Goods are shipped from their warehouse, which is called vendor 100030. Invoices come from a different office, vendor 1002. 022. This is a simple example. We are buying a material from one supplier. So goods are shipped from different locations. Generally we used to call as warehouses. Invoices come from different office. It may be the parent company. Then the purpose helps SAP know which vendor handles each process step, who sends goods, who sends invoices, who receives purchase orders, ensure correct communication, posting and document flow used in vendor master, purchase orders, contracts, invoicing, GR and IR postings. The next field is business partner number. A business partner number is a system generated or manually assigned unique ID used to identify vendor, customer, employee, bank, contact persons, any external business entity. Example for the business partner number 100451 10023 PP 2025. Where it is used, business partner number appears in purchase orders, sales orders, goods receipt and invoices, vendor and customer master records, financial postings, credit management, supplier evaluation. The key purpose provides one single master record for financial and logistics roles, avoids duplications, makes data maintenance easier, supports integration across MM, procurement, SD, sales, FI, finance, PP for planning. So it integrates all the four modules MM, PP, SD and FI. So the business partner roles, common business partner roles include FLV N00, supplier, vendor role for procurement, FLV N01, vendor for accounting, FLC U00, customer for sales role, FLC U01, customer for accounting role. These are all the common BP roles which we used in our SAP standard system. By copying this common PP role, you can create different business partner role based on your real-time project requirement. So the next one is default partner. Default partner in SAP, simple explanation. In SAP, especially in vendor master or business partner setup and purchasing, a default partner is a partner that the system automatically proposes when you create documents. So it can be a person or it can be a vendor or it can be a customer or contract, etc. Where it is used, the default partner is commonly set in business partner master data, vendor master under the purchasing, customer master under the sales, purchase orders and sales orders. Example in procurement, when creating a purchase order, SAP needs partner roles like ordering address, invoice recipient, goods supplier, payment recipient. If the vendor has one specific partner that is always the same for a role, SAP can mark it as a default so. It automatically appears in new purchase orders. User does not need to enter it manually. Document creation becomes faster and error-free. How SAP decides? SAP decides default partner based on the step number 1, vendor or business partner master data setup. Step number 2, partner determination procedure. Step number 3, partner role assignment. Why default partner is useful? Faster data entry, avoid mistakes, ensures consistency, automatic purchasing and sales document. This is the purpose of default partner in our vendor master partner functions data. So now we discussed detailedly about the partner function field, each and every field in very detailedly. So see the example, the quick example. Vendor BP 1000 has 2 invoice recipients. The business partner BP 2000 invoicing party default S. BP 300 invoicing party no. When create a PO, SAP automatically proposes PP 2000 as a default invoice partner. So this is a simple example for your understanding. The partner function field is completed. We can move for the third topic. Thank you. In vendor master data under the purchasing, third one vendor subranges. The first field under the vendor subrange, supplier subrange and descriptions. In SAP Material Management MM module, a supplier subrange is used when a single vendor supplies different product lines or services and each needs to be treated separately for purchasing, pricing and evaluation. What is supplier subrange? A supplier subrange represents a specific segment of products or services delivered by a vendor. It allows you to maintain different purchasing data, pricing conditions, delivery schedules, lead times, performance evaluations for different product groups within the same vendor where it is used. Supplier subranges are commonly applied when a vendor supplies multiple categories, example electronics, hardware, office supplies. Each category has different buyer responsibilities. Different plants purchase different product ranges from the same vendor. Different lead time or price applies for different product lines. Where to maintain in SAP? Under the vendor master purchasing data, go to vendor subranges. Here you can maintain the details. You can assign purchasing organization, plant specific purchasing data and subrange usage. Example, vendor ABC supplies product A office furnitures, product B workstation electronics. So instead of creating two vendor, you define ABC subrange FURN, which is nothing but furniture, and the same vendor ABC subrange ELEC electronics. So now SAP can store different prices, delivery schedules, terms and conditions, vendor evaluations for each subrange. Benefits: more accurate pricing, better performance tracking, reduces need to create multiple vendor accounts, helps handling complex vendor relationships. So the next field is plant and description. In SAP, a plant is an organizational unit used in MM, SD, PP and other modules. It represents a physical or logical location where materials are stored, goods are received or issued, production is carried out, services are delivered. Each plant has a descriptions, which is the readable name displayed in a SAP system where is plant and a description is maintained. You define the maintained plants in SPRO, enterprise structure, definition, logistics, general, define, copy, delete, check plant. Or you can use the transaction code OX10 to create a new plant. Example, the plant code is 1000, the description is Chennai plant. How used in SAP? Plant is used in purchase orders, material master, vendor master, purchasing data, MRP, production, stock management, sales order as a delivering plant. So let's say example, plant 1100 Bangalore production plant, plant 1200 Chennai finished goods warehouse, plant 1300 Kolkata sales department. So you can create your plant as a manufacturing unit, or it is a warehouse, or it is a sales point. So the next field is purchasing data. In SAP, especially in vendor master and material master, purchasing data refers to all information required for procurement transactions. It helps system determine how to buy from whom, at what conditions and under which control settings. So the purchasing data in vendor master, under the transaction code /NBP, go to purchasing data. So here you can update the purchasing data informations under the vendor subranges. So vendor specific purchasing informations: order currency, terms of payment, Incoterms, purchasing group, purchasing organizations, order acknowledgement requirement, GRIR settings, automatic ERS, evaluated receipt settlement, and the controls: purchasing block, partner roles like ordering address, invoicing party, etc., automatic PO allowed, and taxes and conditions, GST or VAT indicators, schema group, pricing data control. So step number 2, purchasing data in material master. Under MM02 or MM01, when you are creating the material master, under the purchasing view, you can update the informations like Purchasing group 001 electronics buyer. The plant 1000 Chennai plant. Ordering unit EA or kg kilogram. Standard price 250 INR. Minimum order quantity 10 units. Plant delivery time 7 days. Goods receipt processing time 1 or 2 days. So these are all the common field which is used under Material Master. Third one is importance of purchasing data. Purchasing data helps SAP determine which vendor to buy from, calculate purchase order conditions, apply pricing, tax, freight and discount rules, control delivery schedules and logistics, trigger MRP procurement proposals. So these are all the importance of purchasing data. Fourth one is where used. Purchasing data is used in contracts, purchase orders, source list, info records, MRP calculations, GRIR posting, pricing and settlement. So the next field is partner functions. We discussed already about this partner functions. Anyway, give you a short note. In SAP, partner functions define the different role that a business partner plays in a purchasing or sales process. A vendor or customer can have multiple partner roles depending on how the business operates. Why partner functions are needed? They help SAP understand who receives the goods, who sends the invoice, who is the ordering party, who is the payment recipient. In some companies, these may be the same party, but in other they are different. So the common partner functions in MM purchasing under vendor master. VN vendor, the meaning is main supplier for purchasing, example ABC supplier. Second partner function is PA invoicing party, who sends the invoice, so the example finance headquarters. QA ordering address where orders should be sent, so the example procurement contact office. GS goods supplier, location that physically ship goods, warehouse in Tamil Nadu. AG agent, commission and representative agent, logistics broker, example. So these are all the common partner functions which is used under material management in vendor master purchasing. So this is about vendor sub-ranges. Under the vendor master purchasing, fourth one is interchangeability. What is interchangeability? So under the interchangeability, the first field is pricing on sub-items MPN and SUS. So pricing on sub-items MPN, SUS in SAP, simple explanations. In SAP MM purchasing, sub-items are used when the main items has additional breakdown lines such as MPN manufacturer part number procurement, SUS supplier self-service. So these sub-items may have separate price conditions, different vendors or different delivery details even though they belong to the same main PO items. So the step number 1, why pricing is needed on sub-items. Pricing is used on sub-items to handle cases like different manufacturers supplying the same material, split deliveries with the different prices, supplier providing item plus service together, multiple change components needed separate values. Example, main item is a printer, sub-item 1 printer goods 10,000, sub-item 2 installation service 1,000. Both need separate pricing. Step number 2, how SAP handles pricing for sub-items. Sub-item has their own condition type and values. Same pricing schema applies. Condition records can be created at info record level, contract level, PO level. Sub-items get their own net price shown in the PO item detail. So settings required for pricing to work on sub-items. So item category must allow sub-items. Example, the item category MPN, SUS and L. Condition schema must support multiple items. No special schema is needed, but conditions must be item relevant. So the next one is quantity and pricing must be entered separately. Each sub-item line must have quantity, price and pricing conditions. So document flow, purchasing order creation, main items and then sub-items, price calculated individually. So then goods receipt or service entry received based on sub-item quantities, then invoice verification, each sub-item matched separately, then finally accounting, separate FI posting if needed. Step number 5, common real-time scenarios. Scenario 1, manufacturer part with supplier, main item standard material, sub-item MPN sourced from special manufacturer, different pricing applies. Scenario 2, material plus service. Main item is hardware device, sub-item installation and service charge, each price independently. Scenario 3, price split. Main item is material, sub-item is container return charges, separate valuation required. These are all the three different business scenario. The next field is description of supplier sub-range. So in SAP MM Vendor Master, a supplier sub-range is used when a single vendor supplies different types of materials. Each type has different conditions such as pricing, delivery time, minimum quantities, supply locations, and terms and conditions. So the descriptions of supply sub-range is simply the name or label given to identify that sub-range. So the vendor ABC supplies supplier sub-range, electronic materials ELEC, mechanical spares MECH, packaging items PACK. So by using this sub-range, you can create different sub-ranges by using this sub-range code. This helps SAP store different purchasing data for different material categories under the same vendor. So where it appears under the vendor master purchasing and info records and purchase orders. So why it is used? To differentiate price, delivery lead time, taxes, discount, contact persons, logistics, locations per material category for the same vendor. So the next field is supplier sub-range. So this one we discussed already, and plant also we discussed already before topic. So no need to go and discuss once again. So the next topic under the vendor master purchasing, vendor text. So we already discussed about the text more than 2 times under the vendor general data, under the vendor company code data. So no need to go again discuss the same thing. So the field language, proposed language, you can select the language based on your client requirement, and the text ID, short text and long text, more text exist. All the field which we discussed in the previous videos, you can go through that. The topic number 6, supplier region. So under the supply region, the first field is country/region key. The country/region key in SAP is a code used to uniquely identify a country. So and sometimes it is a region or state. It is a master data field used in many areas of SAP, vendor master, customer master, material master. So for logistics data, company code, plant, tax setup, interstate, foreign trade. So what it represents? The country/region key usually stores the country code. For example, IN, which is nothing but India, for America, US, so for Germany, DE, for Japan, JP. So these are all the country code. So you can write the country code with the country name like India, USA, Germany, Japan. Each country code have 2-digit ID, legal and tax formats, currency defaults, address formatting rules. So the example values, as I discussed, India, IN, US, United States, DE, Germany, SG, Singapore. So in SAP, these are stored in table T005. So where you see it, under the vendor master address, you can see the country used to determine tax procedures, address format on purchase orders, intrastate or foreign trade declarations. So under the customer master, used for terms of trade, pricing and tax determinations. So under the financials, used to define withholding tax, legal reporting rules, fiscal year variance in some countries. Then the configuration locations. Under the SPRO menu path, go to SAP NetViewer, general settings, set countries. Here the consultant defines country code, currency, time zone and tax formatting rules. So the next field is supplier region and description. So in SAP MM Vendor Master Purchasing Data, supplier region is used to specify from which region the vendor supplies goods. This is especially useful when the vendor has multiple factories or dispatch locations, delivery conditions, taxes, logistics or freight differ by region. The same vendor supplies different plans from different locations. The step number 1, what is supply region? It is a predefined key that defines the physical area from which materials are supplied. For example, supply region code is TN, meaning is Tamil Nadu, KA Karnataka, MH Maharashtra, GJ Gujarat, KL Kerala. So these are all some examples of supply region code. So then what is description? The description is the full name of the supply chain. For example, code is TN, description is Tamil Nadu. This makes the region readable in reports and purchase documents. Where it is used? Under the supply region is used in vendor master, info records, source list, purchase orders, MRP and source determinations, and delivery and freight calculations. Why it is important? It helps SAP determine taxes, for example, IGST, CGST, SGST in India, expected lead times, freight charges, region logistic rules, material planning per supplier zone. Step number 5, configurations under the SPRO path, material management, purchasing, vendor master data, define supply regions. So you define the code, for example TN, description is the Tamil Nadu. Real-time examples, the supply plant, Chennai plant, supplied from TN, Tamil Nadu. Second one is Bangalore plant, KA, Karnataka, supplied from. This helps procurement and MRP apply correct delivery timelines and tax based on the specific region. So the next topic is under the vendor master, relationships. What is meant by relationships? Under the relationships, the first field is business partner relationship category. In SAP, especially in S4HANA and MDG, a business partner relationship category defines the type of relationship between two business partners. It explains how one BP is connected to another, such as a parent company and its subsidiary, a manufacturer and a distributor, a customer and its invoicing agent, a vendor and a transport service provider. So why the relationship categories exist? They help SAP understand what kind of link exists between two business partners, what roles each partner plays, which business process it affects, like a purchasing, sales, finance, etc. So example of relationship categories: BUR001 contact person relationship, BUR002 has the bank, BP001 company subsidiary, BP003 vendor manufacturer, BP004 customer payer, BP005 employee relationship. Relationship categories control which role can be assigned to each side. So example scenario, vendor ABC manufacturing, the bank State Bank of India. So the relationship category BUR002 as the bank. So this includes ABC manufacturing as SBI as its banking partner. SBI details can be used in payments where used in SAP. Relationship categories are used in BP master data, business partner master data, procurement and sales processes, MDG master data governance, FI payment transactions, FI payment configurations, CRM relationship mapping. Fifth one is configuration path. Under the SPRO, go to cross application components, SAP business partner, then business partner, basic settings, relationships, define relationship categories. Here you define technical name, example BUR001, relationship direction, one way or both directions, allowed BP roles, buying and selling, and contact persons, etc. So the next field is presentation of relationship overview. In SAP S4HANA Business Partner, presentation of relationship overview is the screen or view where the system displays all active relationship that a business partner has with other business partners. It is summary display allowing the user to quickly understand who is BP is connected to, what type of relationship exists, which BP is on the other end, role, example contact person, payer, parent company. So validity date, sheets where you see it. In the business partner transactions, business partner tab overview screen. This overview shows a list of rows, each represents one relationship. So the typical fields you will see the field relationship category, type of relationship, for example, contact person has bank, business partner number, the BP linked in this relationship, partner name of the other party, description, details of the relationship, validity from and to, relationship validity period, direction, whether the relationship work one way or both ways. So example business partner ABC Manufacturing Private Limited, relationship overview might show the relationship category is contact person BUR001, other BP 10002, meaning Mr. Kumar, has bank second relationship BP 20010, State Bank of India, subsidiary BB003, and other BP 1000775 ABC Global LLC. This arrives a complete picture of how this BP interacts with the others in the business system. The purpose of the overview, this screen helps users understand business partner network quickly, manage master data more easily, modify or add relationships, troubleshoot documents, for example, missing payer, maintain accurate customer or vendor hierarchies. So behind the scenes, the technical data stored in table BUT050, relationship categories defined in table TB is at 9A, BP roles affect what relationship are allowed. So these are all the field which we discussed under the relationship in our vendor master. So now the entire vendor master data, each and every field we discussed in detail. So what is the definitions, the purpose, where you see it, what it represents. So we discussed elaborately one by one in vendor master data, like a general data, company code sections, purchasing sections. So we discussed all the three sections. So you can see from the day one video, start with general data address until relationship. Every day I published one video under the general data, company code and purchasing. So I covered end to end in the vendor master. Each and every corner of the field I discussed and I explained elaborately. So thank you for your support and patience to listen the entire video from day 1 to today. So probably you can understand detailedly about end to end in vendor master. So if you have any questions, any support required further, definitely you can contact me through my email ID at any time. So thank you, all the best. We will see you once again. Bye.